over
year,
10 years.
10-year rolling average returns over 10 years is about 13 or S&P 500. I mean, rather than call it international security, let's call it S&P 500.
Okay.
So my point is that each of this has a part in your portfolio. Gold, not only we are not averse, we actually ensure that our clients have about 8 to 10% gold.
Okay.
Okay. About 10 to 20% international securities, and depending on the risk profile, the domestic equity and debt proportion will change. Right? So that is one way we look at it. The other way, as I was explaining, protection, low growth, near benchmark. In near benchmark, gold will come in near benchmark.
Yeah, because it's like you said, 10-year data, 10% gold, 12% Nifty.
Absolutely. Index kind of, international securities, S&P will come in near benchmark.
Right.
Nifty index will come in near benchmark.
Correct.
Balanced funds also comes in near benchmark, is slightly below benchmark.
Yeah.
And then you can move to the right on the risk profile, you have outperform.
Okay.
That you keep for that portion of your investments that are required for long-term goals and for which you have the capacity.
The risk appetite.
The risk appetite to absorb losses even in the long term. Okay. And how much losses, you really have to, think about it. I think the key to remember is that only a portion of your investments will chase outperformance. As long as you mentally imbibe that and are okay with it, okay, and you don't want 100% of your portfolio to outperform the benchmark. 100% of portfolio outperforming the benchmark equals to impossible.
Okay, that's loud and clear. So we're coming down to the last thoughts, last few seconds on the show. Since you spoke about that small part of the portfolio that can chase the high risk, high return sort of a strategy, now for that part of the portfolio, I think people today are thinking all kinds of things. There are these specialized investment funds that are coming in, at least they're within the regulatory, SIB regulatory framework. Sometimes people think of REITs, InvITs, people can think of, I don't know, crypto. People will think of all kinds of overseas equity options that India ki market nahi chal rahi hai, China chal raha hai, can I put some money in, Chinese equities, etc. So out of all of these plus or XX options, which are the ones that pass muster in terms of, at least regulatory, there is the kind of risk you're willing to take and the kind of risk you'll just say no to?
So I'm giving our personal preferences. It will depend on the client. Crypto, for example, you cannot compare crypto's returns with Nifty's returns or S&P 500's returns. There is no enforceability. Okay, you keep that crypto in an exchange, FTX happens, WazirX happens, your cryptos are gone. You keep it in your, private wallet, and you have these plenty of examples where $1 billion of crypto, the drive has been discarded and is lying in a landfill, or you have forgotten the passwords and running out of, the number of times you can try that before the drive will be formatted. Even suppose all that does not happen. Again, when you want to encash that crypto, there is no regulated delivery versus payment mechanism that says that ye lo mera crypto, mujhe paise do.
Not certified by a regulator.
By a regulator. So if something goes wrong, and plenty of things go wrong, just do a little bit of checking on internet. There is nobody you can turn to. So crypto, I would keep out.
Okay. Anything else in this higher risk, higher return market?
As long as people understand the risks. Even if people understand the risk, crypto is also.
Okay, all right. That's, plenty of food for thought. And a lot of going back to the basics, which I think is important at this point in time. Thank you very much, sir, for reiterating some of the cardinal rules, the golden rules of wealth management and investing. I think this is a kind of time where we would benefit from remembering them all over again. So thank you for joining us on the show this week. Well, viewers, hopefully you found this conversation fruitful and worthwhile. Keep sending us your comments, your queries. And remember, you can keep reaching out to us on social media. Keep putting your questions there as well. And we'll take up the topics that you want us to discuss in the coming weeks.
Let's talk money.
Welcome back. Our conversations continue here at Davos 2026. Joining me now is somebody who gave us a headline here in Davos, promised to get a deal done and followed through on it. Parth Jindal, many thanks for joining us here. You did say that you will give it all that you have to get AkzoNobel, and that deal has finally been done in 2025. So congratulations once again on that. What's the headline that you're going to leave me with this time around?
No, I think last year, it was a very important deal. And actually from Davos, I had gone to Amsterdam to meet with Greg, who's the global CEO of AkzoNobel, and introduced myself. And I'm very happy that we could conclude that deal. It actually just closed in December.
Yeah.
And now we are the fourth largest player in the paint space in India, with a very clear mandate to come into the top 3 and then the top 2. So it's very exciting. Yeah, but a lot going on at the group. So
yes, there is plenty going on at the group. But since we started by talking about paints, let's double down on the paints business. And you said that the aspiration is to break into top 3 and then eventually top 2. And perhaps I don't know. You didn't even talk about number 1. But but what could be the next milestone as part of this plan? A merger, maybe 2 or 3 years on?
yeah, absolutely. I think today JSW Paints is a private entity, and that is the acquiring entity that acquired a majority stake in AkzoNobel. So the first step will be to unlock all the synergies between the two companies. Obviously, both companies have a decorative business where AkzoNobel, we own the Dulux brand in India, which is extremely powerful and strong. And then there's the JSW Paints brand, which we have developed over the last 5 years. Dulux is very strong in the premium and luxury segment of the market, and JSW is very strong in the mass segment of the market. So we want to unlock those synergies, go-to-market strategy, synergies on the procurement side, on the logistics side. And then on the industrial coatings business, together the JSW and Akzo franchise, we become number 2 in the country, with a very strong presence across coil coating, vehicle refinish, marine protective coatings. And there we have a very clear plan to become number 1, because 70% of industrial coatings is applied on steel. And given that we are the largest steel producers in India, we have a right to win in that space. So I think the first step is really to unlock the synergies. And I think in 2 to 3 years' time, we would like to merge JSW Paints into the listed entity. And then, yeah, hopefully by then we will be in the top 3, and then we can aim for bigger things.
Well, what are going to be some of the levers that you intend to exercise to be able to break into the top 3? And also from an integration point of view, what will be the next sort of steps on that front?
Yeah, so if you look at the business today, by the end of fiscal 26, JSW Paints and AkzoNobel combined, we would be a 7,000 crore business, with the decorative business being about 3,800 crores and the industrial business being about 3,200 crores. Now, the next step for us is obviously to double down on the industrial business as well as on the decorative business. So on the decorative business, if you look at it, AkzoNobel has about 20,000 retailers across India that sell Dulux, and JSW Paints has about 9,000. And there's very little overlap between the two. So the first step would be to offer JSW products to the AkzoNobel dealers and to offer Dulux products to the JSW dealers. With that, we think we can increase our counter share across each of these 29,000 counters, while also adding new counters. With this, we think we can significantly increase our market share, which combined is about 7%. Next year, we would be targeting to at least get to 10% in the decorative side of it. The back-end synergies are very powerful, because today AkzoNobel services some of their southern Indian markets from their plants in the west. JSW services the entire country from one plant in the south. But now with the combined footprint of 6 manufacturing locations, the logistics cost can come down significantly. The go-down cost, the last mile cost will be shared between the two companies, giving us a lot of synergies. So with that, we expect margins to improve, and that money that we can unlock is what we could actually pump back into advertising and sales promotion, because Dulux has been underinvested for a very long time. On top of that, the 2.9% royalty that AkzoNobel India was paying to the AkzoNobel Global for the decorative business goes away.
Right.
That again gives us more ammunition to spend more on branding and advertising.
Well, on the cement side of the business as well, and you did see that listing go through also in 2025, demand, has it started to pick up at this point in time?
Yeah, so demand was extremely slow till November. The industry was seeing very, very low single digit growth, about 3 to 4% till November end. But December has seen a real uptick in demand. We saw first time demand coming back to around 8-9% year-on-year growth. And January continues to be extremely strong. So I think it was more weather related because of the prolonged monsoon, because of some parts of the country having significant heat waves and now significant cold waves. I think demand took a hit, but now it looks like demand has come back. And with that, I hope that the industry gets back some pricing power, because prices have seriously eroded since the GST reduction. When the Prime Minister announced a reduction from 28% to 18%, the prices have actually corrected much more than 10%. It's actually gone down nearly 17%. So we hope that the prices recover. And normally the construction season is from December to June, which is normally when the demand is very strong, and hopefully that shows up in the numbers as well.
Well, there's been a fair amount of consolidation in the cement space as well. There are many players that are still up for grabs or in the market on the block. Is that an area that you're going to be looking at?
Cement is I think we are a relatively small player in cement. We have a very ambitious organic roadmap to go from 20 million tons to 40 million tons and then to 60 million tons. Our first greenfield expansion in the north of India in Rajasthan will be commissioning in this quarter. With that, we would become a pan-India cement player. And then we want to continue on the organic journey, because the competition is fierce. They have very, very strong balance sheets there. And I don't think they're going to let any of the good assets go to a player like JSW. And they would be, fighting amongst each other for those kind of assets. Amongst the assets that are available, there are very few that have, scale or are in a good market. The assets which are available are not of interest really to us. And even if they were, I think we would not be able to compete with the larger players.
So given the fact that you're dealing with large players, also with large players who have large balance sheets, what's then the plan for growth as far as the cement business is concerned? Your shareholders would also be interested to know, because, the stock is down 20% from its listing price.
Yeah, I think for us, the synergies with the rest of the group give us a very significant cost advantage. So the waste product that comes out of the steel making process, slag, is our basic raw material. The fly ash that comes out of all the power plants is also our basic raw material. We leverage the JSW infrastructure, port and transport facilities to lower our logistics costs. And with that, we're in the top quartile on the cost side. And obviously the JSW brand is very well known. It's even getting more well known every day. And with the JSW car, I think the brand will absolutely go to the next level. And I think that results in a superior price as well in the market. And we would be able to compete very closely with Ultratech or Ambuja or some of the larger brands in cement. And that's how we've been able to grow this business. So I think for us, the focus is very clear, build capacity at lower than replacement cost, go to good geographies. If you look at our footprint, we've primarily been in the south and in the west. South has always been oversupplied. Now we're going to the more lucrative markets of the north and then to central. With that, hopefully our EBITDA per ton would be one of the best, if not the best in the industry. That's the aim.
So what's the next milestone as far as cement business is concerned?
So commissioning Rajasthan, with that we would get to 25 million tons. We are also expanding our footprint in the UAE. We're adding a third clinker line as well as a grinding unit there. We have also starting the work for the central India operations in Madhya Pradesh. So the plan is by FY29 to get to 40 million tons. So that would be the big milestone for the company, and then grow from there.
Well, let's talk about the car, which you just brought up. So 2026, is that going to be the year that we see the JSW car roll out?
Yeah, absolutely. I can confirm that the JSW car will be launching this calendar year. We are aiming to launch it just before Diwali to catch the festive season. The factory construction in Shambhaji Nagar is well underway. It's a large investment, 14,000 crore investment. Actually, the MOU for which was signed last year by my father, our chairman, with the Honorable Chief Minister of Maharashtra. And yeah, the project is completely on track. And the first car is already identified, designed for India. Localization works are underway. And by hopefully by August, the production will begin, and by September we should be available in the country.
Okay, so let's talk a little bit more about this and give me a glimpse of what this car is going to look like. You know, localization you spoke about. So how much of this car is actually going to be assembled here in India as opposed to made in India?
Yeah, actually, so the like I said, the factory is under construction. The main part of the factory, which is the paint shop and the general assembly line. The general assembly line will be ready by the month of June, and the paint shop will be ready by the month of October. So in the initial period, we will be bringing the parts from the home rooms and be assembling it in
home rooms being where?
In China. And you know, it's a global Chinese company, and we will be bringing the parts from there. And assembling the car in Shambhaji Nagar and delivering it. From the month of October onwards, the car will be 80% localized, other than the cell, for which none of the Indian auto companies today have the technology. Everything else, from the battery pack to the steel for the BIW parts, the motor, the seats, the glass, the tires, everything else will be localized. So from October onwards, we'll have an 80% local car. And we are in advanced discussions even now to get the cell technology so that we could localize the cell as well. Our idea is that we would like to be 100% local producer in India with global technology partnerships with companies.
And what's the price point that you're going to play in? And you know, you talked about competition. This is an increasingly competitive space.
I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
US President Donald Trump praises Prime Minister Narendra Modi in a mega money control exclusive, calls PM Modi a close friend and expressed confidence that India and United States will have a good deal soon. Trump walks back on Greenland tariffs threat, says he has arrived at a framework for a future deal with NATO on Greenland and the entire Arctic region, while the European Parliament formally suspended ratification processes on its US trade deal. US stock futures are beat after Trump tempers Greenland fears. Asian markets start on a positive note. GIFT Nifty is indicating a gap-up start for the Indian markets. And artificial intelligence is a changing industry, and India, says Infosys CEO Salil Parekh, adds growth will compensate for shrinkage caused by AI. Wipro chairman Rishad Premji says India has a unique opportunity to leverage AI adoption that's an exclusive. Zomato parent company Eternal reports a blockbuster performance in Q3, strong EBITDA growth led by quick commerce. Our company also announces Dipinder Goyal will step down as the CEO but will remain on the board as the vice chairman. Albinder will be taking over as the group CEO. Hello, good morning. You're tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, the updates or the commentary that we have coming in overnight from Donald Trump as well has kept the Asian markets on the positive footing this morning. Look at all the Asian markets, right? Whether you look at the Hang Seng, Taiwan Index, ASX 200, Kospi, all of them are managing to hold on to very strong gains. When you look at the South Korean index, Kospi, which I'm talking about, that is also at around those record high levels for them. So positive commentary coming in from Donald Trump, or step back maybe on that Greenland front, saying not as much of a threat that what one was watching out for in terms of use of military. That may not be happening. So that is a bit of a positive sign there. And that is why a positive opening that's coming for the Asian markets. Nifty implied open as of now is indicating a gap up start for the Indian markets. 181 points, 180 points up as of now is what the Nifty implied open is indicating. Do not forget that, yes, we have seen a fall coming in the last 7 trading sessions. Only one trading session that the Nifty managed to close in the green. Today is a positive start is what we are keeping an eye out on for the Indian markets. But let's move on and look at how all this global market action is going to be impacting our Indian markets. We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, we have Horvaz, who's joining us to tell us the important cues to watch out for in today's trading session. Good morning, Horvaz.
Morning, Vinny. And I tell you what, Sudarshan's beaming in the frame today because he was telling us yesterday that all depends on what Donald Trump says at Davos. And what Donald Trump says at Davos has led to what the GIFT Nifty is doing today. Almost 180 points higher now as we speak as to what he said yesterday about striking a good deal with India. And some relief would surely be welcome from the bulls, especially considering the session that we had yesterday. Opened at 25,140, fell to 24,900 in the first couple of hours, then recovered to 25,300, then fell back to 25,150, all in a single day. And yesterday wasn't even expiry. That's today. That's the Sensex expiry that we are talking about. So that is one factor you need to watch out for. Of course, the reaction to Trump's remarks will be paramount today on sectors like textiles, on sectors like the shrimp feed names, the export-oriented names. All of them will be on the radar today. What also you should be keeping an eye out for is what the index heavyweights do. The index heavyweights have been big underperformers, be it Reliance, be it ICICI Bank, all of them. They will be key to ensuring that the Nifty sustains above key levels. What are those key levels? 25,300 is the first one. By the looks of it, we're most probably opening above those levels, mostly above the 25,350 mark as well. So that's the first level you need to watch out for. On the downside, in case, if any, the 200 DMA, of course, 25,123, then the 25,000 mark. That's the line in sand. That is one thing you need to watch out for. A slip below that and a sustained slip below that could even open doors for that September 30 low of 24,587 from where the Nifty had eventually reversed from. Now, the defense stocks is one such theme that you need to keep an eye out for today as well. Why is that so? Because the European Union has agreed to a new defense framework or a defense partnership with India. It's been spoken about before. More details will emerge next week when the deal is signed. But keep an eye out on the defense names. For the Bank Nifty, that's the index you need to watch out for, because from levels of 60,000 plus, it's now even slipped below the 59,000 mark. mark. That's the first level to watch on the Nifty Bank. Then go to 59,500 and we take it forward from there. It's an earnings heavy day, possibly the busiest day in terms of earnings this week. Indigo, Indian Bank, CAMS, Premier Energies, Coforge, DLF, all of them, big broader market names reporting results today. Also watch out for Anthem Bio because shareholder lock-in ends today. 23,000 crore worth of shares that will free up for trade. That's an important thing to watch out for. But for now, the GIFT Nifty is indicating a gap up start. The big question is, can that sustain? We leave that to Sudarshan to answer that question.
Yes, we will go to Sudarshan to answer that question in a short while. Before that, let's look at the stocks that we're keeping on our radar this morning. We have Upasna to give us those details. Good morning, Upasna.
Good morning, Vinny. First up, let me start with Dr. Reddy's. Must say that it's a good set of numbers. The revenue grows at 4.4% versus flat expectation is what was expected by the street. Now, revenue has seen a 4% uptick. Net profit is down 14.5%, but margins stood at 23.5% versus the poll of 21.8 that we were working with. Next up is HPCL. It's a top-down miss. Margin is below our poll. Revenue has seen an uptick of 14.2%. Margin stood at 6.1 versus our poll of 7.2. Next up is Eternal, a strong set of numbers here. Dipender Goyal steps down as the CEO is what the recent update is what the company has indicated. Revenue has seen an uptick of 20% and margin has also expanded by 50 basis points at 2.3%. KEI Industries revenue growth stood at 20%. It misses the street estimates of nearly about 25 to 30% growth that the street was working with. Revenue has stood at 2,954 crore. Margin stood at 10.8% versus 9.9%, and net profit has seen an uptick of 42%. Jindal Stainless Steel is an inline set of numbers. Revenue has seen an uptick of 6%. Net profit up 27% on year-on-year basis. Next up is Bank of India. NII up 6%. Loan growth stood at 13.6% versus the guidance of 13 to 14% given by the company. So it's well within the guidance. And NIMs have also improved for the company by 16 basis points sequentially to 2.5%. Next up is PNB Housing. NII up 13%. NIMs have declined 4 basis points versus expectations of a 5 basis point increase here. Eclairix board meeting is scheduled on 28th of Jan to consider bonus issue. Next up is Indocount. The company begins its commercial production at its greenfield pillow manufacturing facility in USA. And lastly, we'll be looking at Senco Gold as well, as the company plans to acquire 68% stake of August Jewelry under the brand name Melora for nearly about 68 crore. So all in all, we'll be watching out for all these stocks in today's trading session.
Okay, Upasna, thank you so much for that. Finally, Sudarshan, Hormaz tossed it to you to tell us, are these going to levels going to sustain? We have commentary that came in even on India front. Today is a good day at least.
Good morning, Vinny. So less than 24 hours and we've got the answer why exactly yesterday we were saying that Trump comments matter the most. And now he has commented about both Greenland and he's going to sign the India deal very soon, and also has talked about India's Prime Minister Narendra Modi, that he has basically praised that he's a good man and good friend of US President Donald Trump. So two important levels for Nifty. On the downside, 25,114. And on the upside, 25,585. These two are very important levels. Now, if Nifty fails to hold 25,100, as Hormaz told you, in all probability, it might slip to as low as 24,500. But if it holds on to levels above that and crosses 25,585, it can go as high as 25,900. Two sectors that will be in the focus today: financials and IT. IT has been the biggest underperformer over the last few days, considering all the uncertainties of AI and the commentary that we have been getting from US. And financials were on a very strong footing until yesterday, but yesterday that also saw a huge downtick intraday. So these two sectors will be in the focus. As far as the FI flows are concerned, in the index futures, we did see selling yesterday, and that selling was almost 600 crore. But in the stock futures, they were buying, and that was more than 1,500 crore. And also, we have seen minor increase in the FI's long exposure. That increased to 11%. On the short side, it has come down to 89%. But they continue to add short positions. Yesterday also, they have added short positions of more than 10,400 contracts. Now coming to the options data. So on the call side, 25,200, 25,100 had seen maximum call writing. And on the put side, maximum put writing was seen at 25,100 and 25,000. So it's telling you that on the downside for now, 25,100 seems to be protected. So support 25,114, resistance 25,580 for Nifty. Nifty Bank support 58,280. That is the intraday low of yesterday, and resistance would be around 59,546. That's the 20-day moving average. Two stocks that were already in the band and they remain in the band, SAIL and Sammaan Capital. Bandhan Bank, just ahead of the earnings, has come in the band. And some of the stocks that I'll keep an eye on, Bank of India has come out with a very strong set of earnings. So this stock will be in the focus. Second, PNB Housing has missed estimates both on NII and also on loan growth. And lastly, Eternal has reported very strong set of earnings, but Deepinder Goyal has resigned as CEO. Now he has become vice chairman, will remain on the board. So keep an eye on this stock too.
Okay, so Darshan, thank you so much for that. We'll be keeping an eye out on those important levels, 25,114 as well as 25,585. That's what Darshan has mentioned. Thanks so much for that FNO update there. But on that note, let's move on. And US President Donald Trump praises Prime Minister Narendra Modi in a mega money control exclusive, calls PM Modi a close friend and expressed confidence that India and United States will have a good deal soon. Listen in.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
US President Donald Trump also addressed world leaders and CEOs at Davos, and amid his threat to annex Greenland, in the speech, Trump insisted that the United States needs to take the Arctic islands, even as he took swipes at European leaders sitting in the audience. CNBC TV 18 Shireen Bhan gets us all the important developments from the president's speech. Listen in.
You know, this was quintessential Trump, and as I've been reporting, I mean, this was expected, that Trump would go after Greenland. Trump would say that he wants Greenland, that Trump was going to go after Europe while he's in Europe, and he did exactly that. But I think the most important statement of that speech, the statement of importance and value, is the fact that Trump said that I could use excessive force, but I will not. And that is why you're seeing the US markets rebound, coming off their intraday lows in response to that one statement. The rest of it was performative. The rest of it was Europe is doing a bad job, America's doing a great job, every other American administration has done a bad job but mine. You know, we are going to make America great again, going after individual leaders. And it's very, very clear that President Trump has been following what's been happening here at Davos 2026, because he went after Mark Carney, who spoke yesterday and got a standing ovation here at the World Economic Forum. He went after Macron, who also spoke out against what the Trump administration is doing. So he made it a point to call out people, in his words, have been ungrateful to the US, but also once again attacking the Fed chief, saying that Jerome Powell continues to not do what he ought to do, but also said there, and that's important for the markets, that he's going to announce the name of the next Fed chair shortly. So in a few days from now, perhaps you could see the next Fed chief, but also making it a point to say that when they go to office, they somehow change. So that once again brings into question what we will see in terms of central bank independence with the new appointment that President Trump is expected to announce. Look, as we went into this, it was very clear the European leaders are unhappy. But given the fact that President Trump seems to have said, or at least not ruled out, but put off the force option as of now in his public address, does it leave the room open for some sort of dialogue and negotiation? We will have to wait to see. But the mood in Europe is one of anger. They are upset. And I think what we're starting to now see, and we saw that yesterday with Macron, with Carney, etc., is that there is a pushback now, and people feel like you cannot bully us, you know, on a daily basis, as President Trump seems to have been doing with the threat of tariffs and so on and so forth. But this was quintessential Trump, played on script and played to the galleries back home as well. And of course, we will wait to see what the reaction.
Thanks so much for that, Shireen. But on that note, we're going to slip into a very short break. Up next, we get you more excerpts of United President Donald Trump's interview with CNBC. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. And US President Donald Trump said that he and NATO Secretary General Mark Rutte have formed the framework of a future deal with respect to Greenland. In an interview with CNBC's Joe Kernan, minutes after posting the statement, Trump described Greenland framework as the concept of a deal. Listen in.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland. And it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark Rutte. And he, I assume he's been speaking to them. He's been speaking to all of them.
Also, the US president signaled that he has a favorite for the Fed chair's replacement. Listen in.
The replacement for Jay Powell.
It's true.
I just saw the Mr. Hassett, who I have a pretty good relationship with. And you're right.
He's fantastic.
He comes on.
I like actually keeping him where he is, to want to know the truth. I don't want to listen. He's so good on television.
On CNBC would be a great time to give us
he's
more.
so good on
Are we down to 2 now? Are we down to... I heard Rick Reeder had a strong...
I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1. You know, all 3 are good. All 3 would be, I think, good. We have a problem with the man that's there now. He's too late. He's always too late, except when it comes to politics for the other side. Yeah.
Let's move on. And meanwhile, the European Parliament has frozen its work on a key EU-US trade deal, pushing back against President Donald Trump's demand over Greenland. European lawmakers had been considering proposals to cut import duties on US goods and extend zero tariffs on American lobsters, but those plans are now on hold. The pause is the strongest material response the EU has shown so far to what several leaders last week called blackmail. Let's move on. An eminent economist and former first deputy MD IMF, Geeta Gopinath, warns of a fragile global economy with US-Europe tensions and tariff risk as a key headwind. Speaking to CNBC TV 18, Shireen Bhan on the sidelines of the World Economic Forum's 2026, she said that US and Europe are turning against each other, and that is the biggest global economic story for 2026. Listen in.
We still have very easy financial conditions. And we're in this world of geopolitics, as you and I are seeing right here in Davos, and you know, all kinds of explosive messages coming out of all heads of state.
Yes.
And you know, if there were truly an EU-US tariff war, because so far, you know, there's been a tariff war, but it's been one-sided, which is the US has imposed it and the EU has not retaliated. But now they are threatening to retaliate. If they do, then I do expect markets will react much more strongly.
Okay, on that note, we're going to slip into a very short break. After the break, we'll get you cues from Wall Street. Stay tuned in. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. And in the US market, what happened? Wall Street closed Wednesday's trading session higher after US President signals a framework for Greenland has been reached. All major indices close above 1%. The Dow gains nearly 90 points, while the S&P 500 adds nearly 80 points. The tech-heavy Nasdaq also added 270 points at close. Let's go across to CNBC's Steve Kovac, who is getting us a wrap on what happened on Wall Street.
U.S. markets were up significantly across the major indexes in Wednesday trading, with all three gaining more than 1% after President Trump said he's reached a Greenland deal framework and pulled back on the terror threat to NATO member states. The Dow gained 589 points, the S&P 500 was up 79 points, and the tech-heavy Nasdaq added 271 points. Fed Governor Lisa Cook's job seemed safe for now after Supreme Court oral arguments on Wednesday. The justices appeared skeptical of the administration's argument that the president could fire Cook or another Fed governor for cause without judicial review. Conservative Justice Brett Kavanaugh said that would weaken, if not shatter, the independence of the central bank. Cook sued the president in September over his claimed power to remove her for allegations that she committed mortgage fraud. And pending home sales dropped sharply in November, down more than 9% month over month. That's according to the National Association of Realtors on Wednesday. Analysts had expected a slight gain. The sales decline across all regions except the South, where sales were annually higher. Homes also stayed on the market longer in December at an average of 39 days, up from 34 days in 2024. That's what's happening here in the U.S. Back to you, Mumbai.
Thank you so much for that, Steve. But on that note, Nifty implied open continues to indicate a gap up start for the Indian markets as of now up 176 points. But that's all the time we have on Power Breakfast this morning. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Every day is new. Every day brings headlines. And, well, there's a big Trump interview, which we're going to play excerpts out of. And there's a bit about India as well from Davos, which we will play out. That small sound bite, but a punchy one at that. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Morning.
Hi, good morning. Today actually looks like a good morning, right? Going by the green on the global markets, the GIFT Nifty gap up. Finally, it's going to look a lot better than yesterday.
Well, that's right. The person who leads Greenland slept well last night because he was unlikely to be picked up. Trump is sounding more rational. Hopefully, he sticks to that. So,
and Modi's back to being a great friend.
That's true. Hopefully, it translates into something. So, as of now, those cues are good. I'll tell you, put all these cues together, we should have a good day. Otherwise, it counts for nothing. So, let's see if that happens.
Reema symbolically wearing the color of peace.
Peace. The white dove.
Okay, well, let's just quickly run you through what you need to know as we begin this new session. And I want to start, of course, with India, right? And President Trump was asked by our very own Chandra, who's, of course, with money control, and she managed to get a response from President Trump. And we'll play that soundbite out. So this is what President Trump said: confident of a good trade deal with India, and Prime Minister Modi is a fantastic leader and a great friend. I mean, it's not new. He said this many times before in terms of his posts and other comments he's made elsewhere. But I mean, I think the comments come especially at a low point as far as the sentiment here in India goes. So that line has not changed. I mean, I think that is essentially, does this mean that, I mean, something is imminent and something is being worked upon as we speak? We're not any wiser in that sense after these comments than we were before it. But as I said, it's to do with sentiment, and perhaps this is a bit of a booster. Now, U.S. markets also bounced back a little bit. So S&P 1.25% higher. NASDAQ was up about 1.25%. The WIX sold off about 16%. That's the CBOE WIX. So we're back at just under 17 levels on the WIX. Now, Trump said that he had reached a framework of a future deal on Greenland, framework of a future deal. So not even framework of a deal, but of a future deal. So agreeing to agree upon something. I mean, right? But the point is, and there was Mark Rutte, who's the NATO chief, who's on record to AP, Associated Press, who said, well, we are far off and things have to work out, etc. But this is what I was saying last week as well. I mean, eventually this issue of Greenland will have to be resolved with something of a compromise. And it may get worse before it gets better, but eventually there's got to be some sort of a compromise. And President Trump, in that speech he made yesterday, we'll play out snippets. He's kind of backed off from saying, well, he said, well, the only way I'm going to get it is if I'm forceful and there's military action, but I'm not going to do it. So I think all those things made a difference, at least in terms of sentiment and markets who were worrying that this is going to escalate. And of course, President Trump also said that he would not impose tariffs on goods from EU. This is the other thing, which is, of course, being watched closely in that sense. So you don't want another trade war between two large trading blocs. The 10-year yield ending about 4.5 basis points lower. I mean, the prior session, we had a very sharp 7 basis point jump. So we're at about 4.24%. The dollar index higher. I mean, actually, this has been incredible, right? Flight to safety and all that talk over the last 2 days, basically. Till Friday, everything was okay. And then this week, global markets, largely led by the Japanese bond yields rising, looked a little wobbly. But the dollar did not move. I mean, at least not for the last 5 days. Yesterday, it moved higher for the first time. So about 15 basis points up on the dollar index. Tech stocks did well. The U.S. Supreme Court was hearing the case about Trump trying to fire Fed Governor Lisa Cook. And there were some headlines saying that they were not really convinced this way or that way. They were generally wary about the attempts to fire her. I'll just come to the market here. Now, Nifty yesterday recovered 400 points intraday at the day's high. But of course, we did not manage to end at the day's high. And I think that is because the other leg of the market, which is the currency, the rupee, also recovered, but it went straight back to the lows, right? So the recovery on the Nifty was not accompanied by any recovery on the currency, which, by the way, is looking extremely weak. I mean, it's basically just a complete risk-off tone, almost anchorless. 91.7 or so is where we made a fresh low as far as the rupee is concerned. So, and that needs to stabilize, and we'll talk more about this as we go forward. What can be done, and are there any tools available? 91.80 is a strong resistance for the dollar against the rupee. And I think we got to almost there, and then perhaps there was some intervention because you moved right back about 20 odd paisa before you sold off again. But this needs to have some stability. I'll just leave you with one interesting data point. So ICICI Pru Asset Management Company has resumed subscriptions into its small cap fund with effect from tomorrow. And I think it is I remember our S. Narain's on the channel here about, 3 weeks back, talking about how, I mean, he was the first to kind of advocate for multi-asset funds and a big one for gold and silver. And now he's starting to say that maybe the risk reward is not all that great with regards to precious metals vis-a-vis vis-a-vis equities. So I think there is that element as well. And generally speaking, I mean, ICICI Pru is a bit of a contrarian on this one in terms of timing it. And he's said for a while that at this point, everything looks too overvalued and there is no clear contrarian bet to take, small versus mid or vice versa. And he's advocated for large caps as a preference. So, I mean, I think this is interesting at this point in time, and we'll try and get more details. So this is small cap fund right now, nothing on the mid cap fund. I'll just tie in the levels here. The Nifty 200-day moving average is at 25,123. And we broke below it intraday yesterday, but we closed above it. So this becomes the pivot kind of to watch, 25,123. And you've got the 20-day moving average, which of course has gone for the Nifty Bank, and we ended below it. But I think that is the other one which should be in focus. 59,547 is where the 20-day moving average stands at this point. Well, let's talk about the F&O Qs and where we are at. The GIFT Nifty is indicating a 160-odd point higher start. Nigel, take it away.
As you said, the GIFT Nifty is indicating a 150-point gap up, and by the end of today, we want to see that sort of a return. You know, going by the kind of underperformance that we have seen and going by the cues that we have, because we have a more rational sounding Trump at least, just in the near term. So that's good news from a global standpoint. And the sentiment driver is the fact that ICICI Prudential Small Cap Fund has reopened for subscription after many, many months. So that's good news as well. And that's going to be a sentiment driver, particularly for the broader markets. There's also the Sensex weekly expiry, so we'll keep an eye out on that. Moving to the flows yesterday, the FIs, well, not too bad. They sold 1,800 crores because Nimesh had told us towards the end of trade. There was an MOC basket buying as well, so maybe that played a role. So they sold only around 1,800 crores. I say only because the last few trading sessions, they have been selling anything between 3,000 to around 4,000 crores. So net between the two, you had the institutions that were net buyers in yesterday's trading session. What did the FIs do on index futures? No prices for guessing. They added short positions yet again, but they added some longs as well. And now the short positioning is holding at around 89%. And in absolute terms, it's more than 2 lakh contracts on the short side, while the DIs, they are holding at around 1.5 lakh contracts on the long side. So both of them at the opposite ends of the spectrum. The FIs aggressively net short. That's one data point that you're clinging on to. In case you get some good news, those shorts will have to scamper for cover. And the other technical levels or the technical indicators that we look at, the PCR, that's close to the lower end of the range. We saw it bounce off 0.6 the other trading session. So around 0.78, that's closer to the lower end rather than the upper end, not even near the medium end. So that's one data point. The other factor is the RSI has come down to around 28. Normally in the vicinity of around 25 to around 30, that's the indication the market's got into a bit of an oversold zone. So these indicators are in there, but will we see a big trading session? And going by the cues, we should see one. Going to the options data then, 25,200 call, fair bit of open interest build up, 25,100 put as well, a good amount of open interest built up out there. So going by these data points, I'll bring you to the levels. Yesterday's high should get taken out. All probability that happens in the initial part of trade itself, going by what the GIFT Nifty suggests. So you'll want to get past yesterday's high, which is around 25,300, and build on from there. Remember, 25,500 is going to be an extremely important resistance mark. On the downside, yesterday's lows should get protected. That 24,900 is important to defend out there. And hopefully today we don't go anywhere close to that mark. The Nifty Bank will have to do the heavy lifting. Well, as we know, the 20 and the 50 DMA in that vicinity of around 59,200 to around 59,500. Today, you'll want the GIFT Nifty, actually, the Nifty Bank actually to get closer to that mark, going by what the GIFT Nifty is suggesting. A few stocks that I'm looking at, a stock that's coming out of the ban, which is going to be important, is going to be SAIL, and the one that's coming into the ban is Bandhan Bank. So both these two stocks will be on the radar. Finally, hopefully we have a good trading session, but the Indian rupee, this slide needs to stop. You know, whatever the economics is, but you don't want the rupee to depreciate further from here. That's another sentiment indicator. So hopefully that plays out. Net, GIFT Nifty suggests a gap up. Hopefully we end with this sort of a gap up.
And global markets, too, are painting green this morning. If you pull up Asia right now, it's nearly a 2% rally coming through on Kospi, Nikkei. The Taiwanese markets, 1.8 to 2% higher on the key Asian market indices. But additionally, separately for India, US President Donald Trump has praised Prime Minister Narendra Modi in a mega money control exclusive. He called Prime Minister Modi a close friend and expressed confidence that India and United States will have a good deal soon, isn't it?
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Well, it's one line, but I think the markets will like the comment, especially in seen light with the fact that even on Greenland, the fear of tariffs, the fear of force has been averted, and global markets have reacted very, very positively. In fact, just talking a little bit more about Greenland, US President Donald Trump also said that he and NATO Secretary General Mark Rutte have formed a framework of a future deal with respect to Greenland. In an interview with CNBC's Joe Kernan minutes after posting this statement on Truth Social, Trump described Greenland framework as the concept of a deal. Listen in.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland. And it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark, Rutte. And he... I assume he's been speaking to them. He's been speaking to all of them.
Markets have been swinging between fear and relief. So our U.S. markets, after posting the biggest fall in Tuesday's session in the last 3 months, rebounded very sharply on the back of Trump backing off. Dow was up nearly 600 points. Drew Pettit, Director of U.S. Equity Strategy, ETF Analysis and Strategy Research at Citi, is now joining in. Drew, thank you very much for joining in. Well, I believe Citi's base case for the U.S. markets is that it's going to be a volatile year, but a good year. I think for the S&P 500, your target is 7,700 by year end?
Yes, it is. So we're above, I would say, street average there. But the key driving all of this is we're a street high on EPS for 2026. So look, noise is going to come from headlines. Noise is going to come from rate volatility. It's going to come from dollar volatility. Everything basically we've experienced to start 2026, kind of like a little bit of a mini 2025 for what it's worth. But at the end of the day, it's fundamental resilience. It's earnings moving up and to the right, the secular growth stories remaining intact, and the cyclical stories in the United States actually supporting further earnings growth that has us really comfortable with U.S. markets this year.
The start of the year has seen heightened, geopolitical noise with respect to so many issues, whether it's Venezuela, Greenland. As of now, Europe still hasn't responded to whether the EU-US trade deal, which they said was suspended about 24 hours back, they haven't responded on that to say whether work is back on track with respect to that. You don't see any shift to the US fundamentals based on what we've seen so far?
Not yet. And I think the lesson we learned in 2025 was not to be overly reactionary to headlines, let's wait and see what happens. I know this really isn't the most attractive or fun approach when we think about trading markets this year. But again, taking the lessons from last year, we need to see when this will actually come through and affect fundamentals. Because at the end of the day, there's a lot of really important secular stories that are at work that policy shifts might not completely upend. So again, earnings revisions, that is, have been really good in the United States. That trend, as long as it continues, we can live through this noise.
Hi, Dhruv. Good morning and good to see you, Ben. You've been more or less neutral on India. Now, we have underperformed over the last 12 months and more recently as well. 2026, we have started off on the back foot. What will make you get positive on India? Do you think this time and price correction is enough? Because we're expecting earnings to pick up from here on.
So again, we're watching earnings revisions globally. It's actually a big theme that our team talks about, not just in the United States, but in Europe and Asia as well. Earnings revisions changing really could drive, I would say, allocation shifts. That's a big determinant for us. When we think about EM as a whole, it is really attractive. And that's been a pretty clear overweight for us. The other area, again, India doesn't play to this. Why it's neutral in our framework is you get a lot of attractive AI names at a reasonable price when you think about markets like Korea and Taiwan, for example, China to a lesser extent.
Got that. Drew, there's all this talk of a bit of a sell-off in global equities led by the long end of the Japanese bond market misbehaving. You think it'll come to, it'll happen? Yeah, I mean, bond yields, perhaps many believe that's the one to watch eventually, and that can spoil this party. But otherwise, I mean, look at growth expectations in the US. The IMF recently put out some numbers. The high-frequency data out of the US. I mean, other countries, etc. as well. I mean, generally, it's a reflationary kind of an environment, if I can put it that way.
Yeah, that's a positive for risk assets. Look, it is funny. Like, to your point, you're right. If we get bond market volatility, rate volatility, whether it's in JGBs and how it feeds through to US Treasuries, that's going to affect how much you pay for risk assets. But the balancing act on the other side is, even in that more volatile environment, if you actually get growth that's higher, it becomes a bit of an offset. So a bit of a push and pull. But for valuations being at really high starting points, to get comfortable with the 7,700 target in the US and low double-digit upside globally, you really need bond volatility to compress and stay low and rates to stay low. That's how you get sustainable higher valuations and really get that growth tailwind all at the same time. You need both.
Yeah, but I'm just saying that growth-wise, it's looking all pretty steady, right? I mean, we're kicking off 26 on a very steady note.
Yeah, we're really fundamentally bullish. There's still a lot of stories where we see margin improvement even in the United States. Yeah, earnings keep going to new highs. That tends to drive stocks higher. Again, growth is a pretty good cure-all for other worries. Let's push out a little bit of the noise that we're dealing with to kind of kick off this year. At the end of the day, EPS higher, price is higher.
Yeah, absolutely. Drew, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate you coming on here early morning on CNBC TV 18. We'll take a quick commercial break here, just leaving you with what's coming up here in the program in the next 2 hours or so. So 8:35, EPAC Prefab will join us in the December quarter numbers. 9 o'clock, we'll have the management. We'll have actually Jignanshu of Bernstein to take a close look at Eternal's results, and of course the management rejig on top. 9:20, we have Harold van der Linde. He's a market master. We'll talk, of course, where we head from here. 9:30, the management of KEI on numbers. At 9:40, Tata Communications, numbers. 9:50, we have Jindal Stainless talking to us about the outlook for 27, and of course how the quarter went by. And towards the end of the program, Bank of India management in conversation on the quarter gone by and the outlook. Stay tuned.
Welcome back. It looks like a decisively better Thursday morning compared to what we had yesterday mid-session. But let's talk about stocks. Lots of earnings reactions this morning. Our entire research team is standing by with CNBC TV 18's list of top stocks for the day. Good morning, everyone. Manglam, but let me begin with you. Eternal could be the stock of the day.
Eternal could very well be the stock of the day. There was results and then there was the management change. So let's get the management change out of the way first. Dipinder Goyal has decided to step down as CEO, will stay on as vice chairman of the board, will guide the company through its long-term strategy, culture, etc., something that he's been doing for the last 12 to 18 months. And Albinder Dhinsa will now lead the company as group CEO. What changes? Well, he moves on from day-to-day operations to look at some of the other businesses, high-risk businesses, which are outside of Eternal, but continues to drive Eternal in terms of continuity as well. So the street, while there would be some uncertainty around it, the street will be prepared to go with it in, and trust Albinder Dhinsa's leadership, as we've seen for Blinkit. Now, what's good in the numbers? Food delivery NOV grew 16.6%. The street was working with a number of 12 to 15%. Quick commerce grew 121% versus the street range of 120 to 130%. But if you adjust for the GST-led price cuts, the growth is actually over 130%. So that's a positive too. The big headline for the numbers is quick commerce is adjusted EBITDA profitable in the third quarter. And food delivery margins as well at 5.4% are among the highest ever. District, the losses continue out there, but the management believes that, over 4 to 6 quarters, it will become profitable. Reported numbers, 16,300 crores on the revenue, above our poll. EBITDA, 368 crores, above our poll. And the net profit, bang in line with the street expectations. The chart of Blinkit EBITDA comes up for you right now. After multiple quarters of losses, it's finally broken even on an adjusted basis, and the street should like that. Management commentary as well, positive. They are confident to see this expand to around 5 to 6%. They're also confident of reaching 3,000 dark stores by FY27. Good confidence coming in on the food delivery as well as district and hyperpure businesses too.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Ekta. She's here to tell us about Dr. Reddy's. Ekta?
Well, Dr. Reddy's might just give Eternal some competition today in terms of being a stock in focus. That is because the numbers, in fact, came in better than expectations. The revenue grew 4.4% versus an expectation of a decline. The margins came in at around 23% versus expectations of 21%. And the profit decline was lesser than what the street anticipated. What did well, and I'm not going to start with the US business as we generally do for these companies, it is the other markets. For example, India was up 19% this quarter on a year-on-year basis. We had the NRT business, which is the nicotine replacement therapy business, which was up 25% on a year-on-year basis for the company. In terms of guidance, what they've said is that the US should grow in single digits, other markets in double digits. India is a sustainable long-term growth rate, should be around 15 to 16%, at least in the medium term. 25% is a very solid average that the company is aiming for in terms of margins for FY27. That's the margin guidance that they had provided earlier. And they expect to launch semaglutide in Canada anywhere between January to May of 2026. And semaglutide will be launched in 80 markets, including India, on the 21st of March and Brazil in July 2026.
Thank you very much for that. CLSA has upgraded Dr. Reddy's, but to a hold. So target price is close to the current market price, 12.10. Stock closed at 1157. HSBC, though, is bullish with a target price more than 1400. But let's go across now to Sonal for more on HPCL. How did the numbers look?
Well, the numbers have increased on a quarter-on-quarter basis, but it was lower than street expectations, especially on the refining front. The revenue is up 7.5%. EBITDA was up just 2% to come in at 7,019 crore rupees. This compares with a poll of 7,600 crore rupees. Margins lower than the poll, coming in at 6.1%. Profits were up at 4,072 crore rupees, but again, shy by 300 crore rupees versus the poll. GRMs at $8.9 per barrel compared with a poll of $10 per barrel. And they are higher, of course, on a quarter-on-quarter, and they are flat on a YOY basis. The refining throughput also declined this time, down 3% sequentially. This is despite the fact that the Visakhapatnam refinery commissioned in the quarter gone by, so there was an expectation there could be an increase there. Jefferies has an underperformed rating with a target price of 385. They say they are cutting FY26 profit estimates by 3% on the Q3 miss that came by. CLSA also has a hold with a target price of 420. They say third quarter PAT came in below estimates, so going with red on HPCL today.
Okay, all right. Thanks a lot for that, Sonal. Let's go across to Gaurav. Gaurav, we're tracking a couple of these banking and financial names, Bank of India and PNB Housing. Tell us more.
Well, let's talk about Bank of India. If you look at the numbers, the positive was net interest margins, and that is the reason going with green. First, let's talk about numbers. Net interest income that grew almost by 6.4%, while there was support from the non-interest income. That was a non-core income, and that is the reason that if you look at PPOP, that increased almost by 30% on a year-on-year basis. Now, if you look at the profit, that has increased almost by 7.5%. But let me take you through the key positive. First is that if you look at the loan book and deposits growth, now loan book growth came in at around 13.6%. Remember, the guidance was 13 to 14%, and for deposit growth, that came in at around 11.5%, which was guided to be between 11 to 12%. Second is that net interest margins, we are seeing 15 basis point of improvement in net interest margins, and this was because of the stable cost of funds, stable yield on advances and lower cost of funds. Other than that, on the flip side, slippages that increased by 200 crores on a sequential basis. So that is something which can be taken in a negative way, and this was because of the road asset. Other than that, let's also talk about PNB Housing. If you look at the numbers, there was a bit of a weakness. Net interest income that increased just by 10%, a bit lower than the street's expectation. And if you look at profit, that increased by 7.7%, again lower than the street's expectation. If you go to ratios, net interest margins, they have declined by 4 basis points versus the street's expectation to be stable or at least see a bit of a jump in this quarter. And at the same time, if you look at the credit cost, although it is negative, it has the quantum of credit cost that has come down. If you look at the AUM growth, now that is at around 14%, but remember, management was guiding this to be in the range of 17 to 18%. In fact, there is this con call which is going on, and we'll get the comments on the management soon. But at the same time, there was a bit of a weakness in PNB Housing in terms of net interest margins as well as growth, and also in terms of disbursements. And that is the reason why going with red on this stock today.
Okay, all right. Thanks very much for that. Well, Kia Industries is the next one we're going to focus on, and we have the management joining us a little later. Upasana is here. Upasana, take it away.
Well, the revenue growth for the company stood at just 20% versus the street estimates of nearly about 25 to 30% growth. And the company's key segment, that is the cables and wires segment, which contributes nearly 93% of the total sales, dragged the top line down due to a lower growth. Now, cables and wires revenue growth stood at just 20% as compared to its direct peers such as Polycab, which reported a growth of 56% on year-on-year basis, and Havells reported a growth of 33%. So overall, if we see in the cables and wires space, certainly there's a lower growth reported by the company in its cables and wire segment. Now, coming to the margins in this segment, they saw an up move of nearly about 180 basis points that stood at 11.9% on year-on-year basis. Now, coming to the segment performance of the other segments of the company, stainless steel wire saw a revenue decline of 2%, and EPC saw a revenue uptick of 81% on year-on-year basis. Now, coming to the margins overall, the EBITDA margins are up nearly 80 basis points at 10.8% versus the estimates of 10%. This is mainly due to improved product mix. Now, margins of the company are seeing a mixed trend across the segment, with cables and wires uptick of 190 basis points, stainless steel wire uptick of 90 basis points, but EPC projects has seen a margin decline of as high as 120 basis points. And lastly, coming to the PAT of the company, it stood at 235 crores with an uptick of 42% on a year-on-year basis. So expecting a red on the back of the lower growth in cables and wires segment, but the stock might recover later in the day as the stock has seen quite a bit of a correction. So this might be factored in.
All right, thanks a lot for that, Upasana. We'll hear from the management a short while from now. Let's focus on two names that I'm tracking, JSL Stainless as well as Gravita. Start off with JSL Stainless. The numbers look good, actually. Revenue growth was only around 6% or thereabouts, but the EBITDA number was up by close to 17%. What helped them? The sales volume growth. That's up by close to around 10% on a year-on-year basis. Now, that's heartening, while on a quarter-on-quarter basis, it's more or less flattish. I calculate the EBITDA per ton on a consolidated basis, and that's popped up by close to around 5.5%. And on a sequential basis, there's a mild improvement. Remember, the volume growth, I say it's heartening in double digits because the export contribution is down to close to around 5%. That's the lowest I've seen in multiple quarters, in fact, multiple years as well. So clearly, there's some pressure with regard to the export market, which is being made up by the domestic market. The net debt on a sequential basis was down by close to around 200 crores, which is good. And in the last few quarters, it's come down substantially. Net profit pops up 27%, finance costs down, despite having an exceptional item because of the regulatory-driven cost, the labor code notification, basically. So going with green on that one, we'll have the management, later on in the show. Gravita, going with green out there as well. Remember, the revenue as well as the EBITDA includes the other income because of the analyst calculations as well as the management calculation. The EBITDA number, that was up by 20%, the margins improved by 210 basis points, and the profitability jumped up by 25%. So besides a good operational performance, the finance cost as well is down by close to around 49%. Lead, that's bulk of their revenues, that grew by close to around 9%. There's just the core lead business revenues are up by 9%, volumes are up by close to around 5%, and the EBITDA per ton, well, that in fact was up by close to around 10%. So put everything together, these numbers as well look good. Remember, this is a stock that's corrected 30% from the recent peak. Going across to Yash, though. Yash, you're tracking Canara HSBC Life. Tell us more.
Well, that's correct. So the numbers for the third quarter for Canara HSBC Life Insurance look very strong, no matter how you see those numbers. As far as, the three important factors are concerned, total annualized premium equivalent, that saw a growth of about 37%. VNB, value of new business, that saw a growth of about 66%. And VNB margins also, they grew by about almost 300 basis points, coming in at about 19.84% as compared to 17%. So, of course, on a year-on-year basis, the numbers look very strong, but look at what the street was also anticipating. Investec on total AP anticipated a total AP number of 900 crore. That's come at about 1,003 crore. At VNB, they expected a number of 160 crore. That's come at about 200 crore. And on margins, they anticipated 17.7%. That's come in at nearly about 20%. So numbers as compared to street expectation as well as on a year-on-year basis look very strong, and hence going with green on the stock.
Thank you very much for that. And just wrapping it off with Oracle Financial Services, stable quarter. The company's top line went up 10% on a quarter-on-quarter basis, year-on-year basis nearly 15% at closer to 2,000 crore rupees. Revenue growth on a year-on-year basis has come back in double digits after 4 quarters of either a month, one quarter was negative, but the other 3 were single digits. So that is a positive. Company's margins and profits too are looking stable. Margins have come in at 41.7%, bottom line at 600 crore rupees, and this is after taking into account the labor code impact of nearly 49 crore rupees. So all in all, it's a stable quarter. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Eternal, Dr. Reddy's, Bank of India, Jindal Stainless, Gravita, Canara HSBC Life Insurance, and Oracle Financial. Stocks with negative news flow are HPCL, PNB Housing, and KEI Industries.
Okay, all right. We'll take a quick commercial break here. Up next, we have the management of EPAC Prefab join us to discuss their third quarter earnings. That's coming up. Stay tuned.
Well, as promised, let's get straight to EPAC Prefab Technologies. That's the first management on the show. The company reported actually a mixed set. To help us out with what went well and what didn't go so well in the past quarter, we have Sanjay Singhania, the MD and CEO at EPAC Prefab Technologies. Hi, Mr. Singhania. Good morning, and thanks a lot for joining in. Well, just coming to you in a bit, but we're just highlighting the top 3 points we're going to be talking about. There's a sequential dip in performance. Why is that? We want some clarity on that. The heavy lifting is needed in quarter 4. Are they equipped enough? And also, what are the order book trends? Well, Sanjay, let's get straight to the point then. The revenues of around 325 crores in quarter 3, that's actually down close to around 20-25% sequentially. Now, typically, you have told us the second half of the year is much stronger. So firstly, in quarter 3, was there any kind of project that got deferred, got pushed to quarter 4? And now, what does this mean in terms of what you end for FY26 on the top line? And how does it alter your margin guidance? Please go ahead.
Good morning. So while if you compare the quarter on quarter, yes, you may see a dip. But if you look at the quarter on a year-to-year basis, then definitely there's an uptake of around 31% in the prefab business. And overall, the revenue of the company has grown by 22-23%. So yes, like during our last conversation, I said that the second half is always better than the first one. And I continue to maintain the same story. This quarter, there were certain challenges, especially related to site unavailability. So some of our big customers, they could not give us the site readiness because of the ongoing monsoons and prolonged monsoons. So that delayed the revenue for us. We had an extra inventory of finished goods of around 35-40 crores. That could not be billed in this quarter. So that further added to the overall inventory and the cash cycle also. And as far as the commitment to the market is concerned, we maintain that this half is going to be better than the last half. And our revenue guidance of annual revenue guidance of 1,500 to 1,550 is still maintained. We have the order book in hand. Our pending order book right now is 1,215 crores. So it gives a clear visibility for the next 7 to 8 months. And the way we are building on our revenue, the way we are building on our order book, that is also very encouraging. We have become a preferred player in some of the new age businesses.
Sanjay, just to confirm that, you'll end the year at around 1,550 crores, right?
Yeah, between 1,500 to 1,550 crores.
So that means you'll do around 450 to 500 crores in quarter 4. That's correct?
Yes.
Got that. What about your margins? I think earlier you were flirting with that in that band of around 10.5 to 11%. You're maintaining that band?
Yes, definitely. Yes. See, overall, in the 9-month basis, our margin is 10.8%. Yes, there's a small dip in this quarter. It is 10.1%. But on an overall, annualized basis, the margins will be 10.5 to 11.5%.
Yeah. What was the impact of the issue that you said in Q3 about one site not being ready and therefore that order got pushed forward? And has that kick-started in Q4?
Yeah, it got kick-started. It is not only one site. Like in the south, the monsoons got prolonged and, the sites were not ready from the civil side in the month of October and November. So the revenue got, postponed there. But now, all the drawings are very important for us. Design approvals are important for us. So most of the bigger projects which we have in hand, all the design drawings and everything is ready. And, manufacturing has started. So we expect this quarter to be much, much better than the last quarter.
Okay, well, that's prefab, right? Technology of the future, or technology of the present. And I hope it's something which is going to be watched. I mean, I think you've got a couple of listed companies now along with you out there in this space now. Thank you very much for joining us, sir. I really appreciate it, and we wish you all the best of luck. 1,500 to 1,550 crores in FY26 in terms of revenues and some indication on margins, etc. as well. I just want to quickly look at the GIFT Nifty for a quick bit, and then look at just the global scene, which I think is looking much better. 150 points on the GIFT Nifty. I think the Asian screen, as Rima was pointing out, is looking much better as well. Taiwan is up there 2%. Hang Seng is kind of flattish, slightly higher. So the screen's not bad. Now, many have been asking, and many of our viewers have been writing in asking if this is a big global, if this is the start of a global correction. So I just want to put out, just to jog our memories more than anything else. I mean, I don't really have the answer if this is the start of a, despite the overnight bounce, etc. Are we at the beginning of a bit of a drawdown in global markets? Many, serious long-term participants in markets believe that. But the recent corrections we've had, right? This is 4 of them. There's a DeepSeek when China came out with a DeepSeek model, and US tech stocks all sold off hard. There was, of course, the April Liberation Day last year when, again, I mean, global markets sold off. There were the unwind of the carry trades, which happened again in 25, and of course in 24 you had a 20% drop in the Nikkei. So, I mean, if you just go by what's happened in the last 1.5, 2 years or so, all of these have been bought back and bought in very, very quickly. And that is, I think, an important thing to remember at the back of your mind. At each of these moments, you kind of believe that, well, this is it. Because, I mean, US markets and global markets have not seen a serious correction for a while. And each of those moments felt like, I mean, this is it. And you add to the fact that you just look at global growth expectations for 2026 from, and US growth expectations. I mean, they're all rock solid. I mean, actually, this is a very, it looks like a very reflationary environment. And can suddenly something change? We don't know. But, and that's the point I was making with Drew Pettit earlier as well. So if you're worried about a big global correction for some reason or the other, and you can always worry about a big global correction at any point in time, I mean, things are stretched and everybody's long, especially in US, etc. But is that reason sufficient enough? I guess is the question you'd want to ask. Deepan Mehta is with us, Director, Elixir Equities. Deepan, good morning. Good to have you here. In India, we've got a bit of a problem with the rupee, and the rupee guys blame the equity outflows. The FPI sellers of $3 billion in equities blame the rupee. So, something's got to give, and you need some stability in one to spark off stability in the other. But the point is both are linked. Deepan, what's your sense? Is there a turn around the corner, and generally your view?
Yeah, Prashant, good morning and thank you for having me on your show. I'm perplexed, but this is clearly a geopolitical event which has dragged the market down. And President Trump keeps on firing missile after missile, something new happening all the time, threats over here, threats over there, and that is certainly dampening the sentiment globally and in India as well. And in India, we have this peculiar problem about FI selling, which is relentless, and that's draining the rupee also, and all the liquidity situation in the market. And last but not the least, optically the earnings season doesn't appear to be as great so far because of this labor code provision. I think we never expected these kind of one-time exceptional hits to drag down profit as much as they have just now. And certain large cap stocks like maybe Reliance Industries, Wipro certainly have disappointed. But I'm still remaining quite hopeful on the earnings season so far and going ahead. And I do hope that this earnings season may act as a trigger for a reversal in the stock prices.
Deepan, hi, morning. Yesterday there were stocks like Kalyan Jewelers where we saw a huge drawdown. Stock was down 12-13%, very large volumes, etc. Is there any buying opportunity which has emerged? Because so many mid-caps from the start of the year are down nearly 20%.
Good morning, Reema. From the down 20% for the year, but they are down 40-50% from their highs in 24-25. And that clearly provides a great opportunity for long-term investors because, we've all been waiting for valuations to correct, some margin of safety, improving risk-return profile, and we have a lot of it over there. Coming specifically to Kalyan Jewelers, I think the kind of pledges which the management has to create has spooked the market, but very positive on the jewelry industry per se. And the Kalyan Jewelers, Titans, Senco Gold, Kangamil, I think all reported very good pre-quarter sales figures. And now the numbers also coming through are pretty decent. But we have this company called Sky Gold, which is a play on the entire jewelry sector because although they are not a B2C player, they're a B2B supplier for a lot of the jewelry chains. And that is one company which is on our radar, which is a great play on the jewelry industry and reasonable valuations and fantastic growth dynamics.
Okay, all right. Hi, Deepan. Good morning. Good to see you in. Dr. Reddy's, that was the other good set of numbers. Ekta told us that the numbers are quite upbeat. Your view on the stock?
Yeah, I think that pharma may certainly surprise us. First, rupee depreciation clearly benefits the sector as a whole, and they've been quietly going about trying to diversify their revenues. I think you've seen Dr. Reddy's case. The non-US revenues have come through excellently, be it in Europe, rest of the world, and India. Of course, they have done well, and the strategic investment which they made in this new business, NRT business, that also is paying off pretty well. And then we have this positive news on supply of semaglutide. I hope I got the name right. And that could be a good growth avenue for the company. So, I mean, very positive on pharma. Dr. Reddy also earnings, P multiple also very reasonable at a discount to its long-term average. So, and great balance sheet shape also. So, very positive and could lead to sustained returns over the next few quarters also.
Dipan, request you to stay on. Need to slip into a mandatory break. We'll come back, continue our conversation, and we'll also connect with Mithil Kotecha of Barclays to talk about the fall seen in the Indian rupees and a few technical trading ideas coming up with our experts. Welcome back. This morning we may, rebound from yesterday's losses. The Nifty yesterday closed with a cut of about 75 odd points. We already saw a 250-point recovery intraday yesterday, but today the GIFT Nifty is suggesting a start of 150 points. But the other burning issue for the markets has been the fall in rupee, and yesterday we went down to levels of 91.7. Persistent selling seen by the FIs. Mithil Kotecha, head of Forex and Emerging Macro Strategy Asia Barclays, is now joining in on the phone line. Mithil, first just explain what happened yesterday, because the fall was a little idiosyncratic when you compare it to what happened with the rest of the emerging market currencies. So what did we see yesterday that transpired?
Yep. Hi. Thanks for having me on the call. Look, I think yesterday was broadly just a number of factors. I mean, as you said, it's very idiosyncratic, but it seemed as if the dollar demand, the pent-up dollar demand had intensified to a point where it really just forced dollar INR much sharply higher. We didn't see so much resistance to this move, obviously, and hence the sharp move higher. But I think it's a number of factors. The equity outflows that have been continuing, and this year so far, even in Jan, we've seen sort of over $3 billion, around $3.4 billion of FPI outflows on the equity front. And while bond inflows have been more constructive. It's certainly not enough to compensate for this. At the same time, there does seem to be ongoing importer dollar demand, which also is driving dollar rupee higher. And of course, as well, maturities of NDFs adding to some of that pressure as well. So it seems a combination of factors, and markets still sentiment towards the rupee still seems relatively downbeat due to these factors, and
there was
the lack of a trade deal not helping either.
Yeah, Mitul, yesterday there was a RBI fix as well, which was you referred to pent up dollar demand, but that was well known, right? And I think there is one today as well.
Yes, I mean, that's right. So I think that it was well known, but clearly, for whatever reason, it still ended up seeing, and we've been seeing this demand for dollars at the fix that's been fairly strong, and it's been happening regularly. So it shouldn't have been. Yes, they should not have been any different, but clearly, as we've seen since around middle of a week or so, last week or so, demand has intensified for dollars, and there's no obvious reason apart from the factors that we know about. So nothing particularly changed on that front yesterday to suddenly warrant this big spike higher. But again, I think, as I said, it is just a combination of factors that seem to be weighing. The other thing that perhaps is the case that the momentum drivers and momentum investors in the market, so-called CTAs, are the speculation that they have also been intensifying their long dollar INR positions, switching from short positions, which perhaps has added some more impetus to the move higher.
Well, 91.80 is the next dollar resistance, right, Mitul? Around there. And I think maybe...
I think obviously 91.80 will be a figure that investors will look at as key, but the reality is psychologically 92 is a big level. And I think what we tend to see is these sort of big levels being important breaks. And once we see these breaks, obviously either they're capped from domestic selling or RBI dollar selling, or they seem to see big breaks as we saw through the break of 91 all the way to current levels around 91.7.
Mitul, the other thing is, and I don't know if you can, that forward premiums are very high. So, for example, for foreigners, for them to, their cost is 6.5%. So, the RBI has been doing buy-sell swaps, etc. But is there something else they can do? If the cost is 6.5, and the currency is depreciating, because there is some depreciation which is built into those forwards. What is there a fix in the near term, Mitul?
It's hard to say. There is obviously various things the RBI can do to clamp down on these moves, whether it's moral suasion, whether it's more regulatory measures, increase ECB borrowing. There's definitely a series of steps that can be implemented. And also, let's not forget the RBI has still a very, very large amount of ammunition in its FX reserves to be able to withstand these moves, and can also intervene via the forward or the NDF market as needed. So, there is definitely an ability to stem this move. And one thing also to bear in mind, this isn't the type of rupee pressures that we've seen historically. This is not because of a balance of payments crisis or anything like that. These are much more controllable. India's balance of payments still look in reasonable shape despite the outflow from equity markets.
100%. Yeah. And just 30 seconds, Mitul, any chatter for today? What should we expect? What's the buzz?
No, look, I think obviously the broader global chatter has been the fact that we're not now seeing tariffs on Europe, and the fact that there is not going to be any force use, as we heard from President Trump yesterday, and that probably calms some of the market nervousness, and that could also help Asia to some extent, although the dollar has rebounded a little bit. So I think we have to watch a broader dollar tone to give some direction today.
Okay, and the dollar is up for the first time in 5 days. Actually, incredibly, the dollar index has been lower, even as it's been going up against the rupee. So that's the other thing, right? Mitul, thank you very much for joining us. Good speaking with you. Deepan is with us. There's 5 minutes to go for the pre-open session. Maybe slip in a quick question to Deepan. Deepan, thanks for waiting. You heard Mitul there. we'll see what happens on the currency. And we've got a discussion coming up on Eternal as well. Just, Deepan, your thoughts on, yesterday, for example, names like ICICI Bank, Tata Consumer, some of these you own, right? Bharat Electronics. So I was also thinking of the budget, absolute zero noise. We had Sunil Singhania yesterday. He said, well, it's a good thing the zero noise because then maybe there can be some surprise, hopefully on the positive side. But one thing everyone agrees, the few discussions around the budget we've had, defense spending will see a big boost, right? So in that circle of defense companies, any thoughts there, Deepan, for viewers?
Prashant, in my 35 years in the market, I've never seen such low level of enthusiasm or excitement around a budget, which is fine because it signals stability. But more than defense, I think that the government may look at giving some benefits to exporters. They certainly need those kind of incentives. And then there's this PLI scheme where a lot of the schemes are having a kind of a sunset clause. So I think that rather than defense, which is a known sector and the investments are known over there, allocation is known over there. Something out of the box which the government can do is focus on export-oriented businesses or import substitution. And the last time a major boost was given was in 2020 when the PLI scheme was announced. So I think that would be something which could surprise the street.
Okay. So import substitution as a theme, right? Electronics and... Yeah. And by the way, defense is a big import substitution theme as well. Deepan, thank you very much. Good speaking with you. Appreciate it very much. 3 minutes to go for the pre-open session. We're back in just a bit. So our technical trading ideas on the other side. We also have the discussion with Jignanshu of Bernstein on Eternal. Stay tuned.
Well, pre-opens almost started out there. We'll get the rates in just a bit. For the time being, just to recap, the GIFT 50 is suggesting a bazooka opening of around 150 to around 200 points. And the hope is we end somewhere in that vicinity with some gains. That said, let's get into Sudarshan Sukhani, proprietor, Technical Trends, and Mitesh Thakkar, President, Retail Research at Bonanza Portfolio. Good morning, gentlemen. Hopefully the start is in the green and well in the green. But what do you do from there if you get a gap up of 150, 200 points? Do you chase the opening? Do you just stay away? Or is it a shorting opportunity? Mitesh, you go first.
Morning. So 150 point opening will mean it opened around 25,300, which is yesterday's high. And for me, I think what is also important level which I've highlighted many times is 25,400. So I think if we don't see good follow through and if we see supply pressure around 25,400, I think we'll add on to our short exposure. So we have some index put spreads, and I think those can be added. Only if we see signals of Nifty getting past 25,400, I think then we would want to at least reverse the short side of exposure in the indices.
Got it. All right. Sudarshan, what about you?
Yeah, good morning. Well, it's a very different view. Yesterday, the market did some very good things. What happened was that we went and made a new low, and then the low was tested. The Tuesday low was tested, made a new low, and bounced back. And then that's not just alone. We also have a much more conducive worldwide environment. So I would say that the gap up is an opportunity to go long. Now you can divide your trade into two parts. One is just after a few minutes after the gap and expect a decline or some kind of a minor dip, when you can add it to your position and make it complete. Your stops are somewhere around 25,150, and the trade is not just intraday, but hold on till either we see a rally or we unfortunately see the stop. But today is a day to buy.
Gentlemen, morning 91.53 against yesterday's close of 91.70. So this is good, we are. Let's hope 91.70 and the lows that we saw yesterday perhaps is the low for now, because otherwise it's kind of yesterday looked like completely unanchored move without too much, without any stability for that matter. So yeah, 91.55. I mean, things will develop through the course of the day, but it's a good start at least. Sudarshan, what are your individual trades? You're saying it's a different kind of a day. Today is the day to buy. So what would you buy?
Well, I have two large caps. Hindalco is a buy with a stop under 920, and Reliance is a buy with a stop under 1350. I do have two intraday shorts. BSC sell with a stop above 2680, and Emphasis sell with a stop above 2820. But I would prefer to focus on the buys.
Yeah. Okay. Mitesh, what about you?
Yeah. On the stock side, I have a few buy calls as well. Angel One, I think, was a buy yesterday, is very ended flat if you take out the dividend effect. So remains a buy. I think it's showing positive structure as well as near support. So keep a stop at 24.84. Look for targets of 26.20. Buy on Britannia with a stop at 57.75. And here I would look for targets of 58.70. Canara Bank is trading on its 34-day exponential average, so buy with a stop at 147.5 for targets of 157. And on a mild pullback, HPCL is something which I would take on the negative side, so around 428, 429. Around 434, sell with a stop at 445 and look for a target of 410.
Got that. Big move seen in Eternal and pre-open, pushing towards the 300 rupee mark, 5% up. Blockbuster performance seen in Q3. Manglam is now joining in to just quickly revise the numbers for us. Manglam?
Well, it is a blockbuster performance that has come by. Ahead of the numbers, the stock was up 5%, and now it's up another 5%. And this, notwithstanding the CEO change that happened as well. Deepinder Goyal has decided to step down as CEO, making way for Albinder Dinsa to run the company on a day-to-day operations as Deepinder stays on as vice chairman. The internals, they're strong. We have food delivery, growing at around 16.6% versus street expectations of 12 to 15%. Quick commerce grew 121%. The expectations were 120 to 130%. Adjusted for the GST cuts, the growth has been over 130%. Quick commerce has turned adjusted EBITDA profitable, and food delivery margins at 5.4%, near all-time high. Good performance coming in.
Thank you very much for that. We also have Jignanshu Gore, Director and Senior Research Analyst at Bernstein, to talk more about Eternal and where it's headed from here. Let's talk about the core growth engine, quick commerce. Jignanshu, to begin with. As Manglam said, it's turned adjusted EBITDA positive in Q3. And this is at a time when competitive intensity, the kind of cash balance that we have at peers, is only going up. Can you tell us from here on what is the kind of profitability and growth metrics you're penciling in for Blinkit?
Sure. Thank you for having me. Always a pleasure. So quick commerce growth was sort of expected, but as you said, EBITDA surprised. We feel this EBITDA surprise is not necessarily a one-way trajectory from here. It may remain a little volatile over the next few quarters, which the company also alluded to. So on a growth perspective for FY27, we pencil in roughly 80% growth in the net order value or NOV and a positive EBITDA at the full F27 level. We do expect some volatility in Q4 and Q1 going ahead, however.
And what is the EBITDA margin for Blinkit in FY27? You said positive.
Yeah, positive. So roughly 0.5 to 0.7% positive on a full year basis.
Got it. What about food delivery? What will their contribution be to the, in terms of the top line, in terms of margins, I mean, the overall profitability, and even to the target price?
Yeah, so food, we have always said that food delivery, I think, is at the peak of its powers, both from performance as well as narrative. It is a steady growth engine. We expect 15 to 17% growth over the next 3 years, with adjusted EBITDA staying close to the same number, which is between 5.2 to 5.5% of NOV. So it remains, in our view, a roughly $10 billion valuation component of the total company. So roughly 30% value, 25 to 27% valuation coming from food delivery. It's a steady business, two-player market, less interesting from story and news perspective.
Jignanshu, hi, morning. Have you been following whether the other players in this industry are trying to outcompete each other with discounts, etc.? Has that started? That was supposed to be kind of a theme. We discussed this last time as well, because everyone is now has raised money and they would be at it. Is that happening?
Very much so. It's happening across from all the four major, let's say, competitors. So we've seen that Swiggy has reduced its pricing or increased its discount, reduced the minimum order value for free delivery. Zepto has done the same. Even Flipkart, Amazon, Reliance are all back into the fray and news. So we see that happening at two places. One, it's happening on consumers, giving more discounts and lower minimum order value for, and second, it's happening with brands, where a lot faster onboarding of a lot more brand is happening to set up the portfolio of and increase the choices for the customers. So we expect this to be high over the course of 2026.
So this kind of keeps everyone in check, right, in terms of how much money everyone is able to make. So this, in that sense, this is at least the next two quarters. I mean, that impulse is going to show up in numbers across the board, all four players?
I would expect so, Prashant, right? We expect that the growth will be a little challenging or will have to be bought a little, either with discounts or with more advertising. And consumers don't really display a very high amount of loyalty for these instant purchases. So this knife fight, if you will lead to some bleeding across multiple players.
The rejig at the top with Dipinder and Albinder now stepping up. How do you read that, and how are investors and markets going to take it?
See, any leadership transition is always a hotly debated topic. We expect this to be divisive. In our view, it is a net negative in the short to medium term because the industry and the company and the business model is still evolving. It's not necessarily set. Second, in the stock price, there was a lot of what I would call a halo effect with the success that Dipinder had in growing both food delivery as well as quick commerce onto other businesses, right? Where that we will be able to grow District the same way, or maybe Hyperpure the same way. So there is some narrative pullback which might happen, but I think given the operational performance, numbers become more important anyways. And given this performance, the stock should do well in our view, and we remain bullish on the stock.
Okay, just one final word. At 300 rupees, what is the valuation of Eternal now, EV to sales, as per FY27, FY28?
At 300 rupees, we don't look at EV to sales.
Okay.
We think it should be reserved for companies which are far ahead in their life cycle than where Eternal is. So we do look at EV to adjusted EBITDA basis. And as per that, our target price is 370 on a roughly 35% EBITDA on FD and a 30% EBITDA on, 30x EBITDA multiple on quick commerce.
Thank you, Jignanshu, for joining in. Great chatting with you as always. Go across now to Sudarshan for his 9:10 call. Sudarshan?
Yeah, well, it's Hindalco. Buy Hindalco with a stop under 910.
Hindalco. Mitesh, yours?
Yeah, I'll go with the buy on Angel One.
Okay, Hindalco, Angel One, both buy calls. Now let's find out what the brokerage call of this morning is. Sudarshan is now joining in.
So first one, Nomura has come out with a note on auto segment, especially focusing on the CV players. It says that dealers suggest cement, steel, e-commerce and autos are now driving strong on demand. As far as the CV is concerned, it has a buy call on Ashok Leyland and it increases target price to 216 rupees per share. It says it's a pure play beneficial upcycle in domestic M&CV industry, and it's going to be supported by improving freight rates, and second, better fleet operating profitability, and third, lower GST rates, and fourth, aging truck fleet. Also, it maintains buy call on Tata Motors commercial vehicle and increases target price to 552 rupees per share. It says company continues to benefit from its dominant position in domestic CV segment, and M&CV volumes are sustaining momentum. Also, LCV remains resilient. HSBC has come out with a note on Rallis India, has upgraded the stock to buy, and target is rupees 300 per share. It says all the segments have performed well despite challenging conditions, and transformation starting to reflect beyond domestic crop prices to seeds and exports. And upgrade is after a sharp 35% correction that stock has seen in the last few months or last 6 months, and also because of the higher earnings, it has upgraded the stocks.
Okay, all right. Thanks a lot for that, Sudarshan. Well, here's a quick recap of all the stocks we covered earlier this morning. Stocks in focus, Eternal, Dr. Reddy's. Well, both of them will be reacting to their numbers as well as the management change out there. Bank of India. The other stocks in focus include from the metal and the metal-linked names. So you have Jindal Stainless, numbers look quite good out there. Gravita as well, the numbers looked quite good out there. The other stocks in focus include the likes of Canada, HSBC Life Insurance, and Oracle as well. The starting is in the green. And the other stocks in focus are HPCL, PNB, and as well as PNB Housing Finance and KEI Industries. Not too hot today. The markets on the whole are indicating a big gap up. So, guys, nearly a 200-point gap up is what we're working with. Hopefully, we end somewhere in this vicinity.
Yeah, holding on gains, Nigel, right? That becomes important because you can start and then lose steam along the way. I guess I suspect that will happen, but I mean, how you close finally is essentially going to be important, because that will bring some more confidence rather than starting strong and then ending way off those kind of levels. So 25,344 is the start as far as the pre-open session is concerned. Mitesh is still with us, and I think we've got about 2 minutes to go from market open. Mitesh, if there's a rebound which happens, and you've got to consider the alternate view, where will it be? I mean, for example, the strongest sectors are what? Metals. Even the metals index ended high yesterday. PSU banks is the other one. I mean, where would you look for those?
One, I think 25,400 still is the trend deciding on level on the index. And as you rightly said, in case we start getting past that, then you can add metals, public sector banks, which is already what you have mentioned, and some IT names.
Okay, and some IT names. The IT index ended about almost just a little over 1%, little less than 1% lower. So there was that pressure. So it's basically exactly reversing that. Anything coming up on your screen, Mitesh, in the pre-open warrants to look?
Yeah, I think I've not checked the pre-open rates, but I'll just do that once they open, because pre-opens are slightly, not the final rates. So let us wait it out.
Yeah. Okay, well, I think we'll get a decent start and then we'll pick it up from there. Mitesh, thank you for now. Let's just look at a few names, right? I think Eternal, of course, on the Nifty, it's a Nifty stock. It's up almost 5-6%. So that, of course, will be right on the top of Nifty gainers. And then we'll look at a few other names as well. But indices first as always, right? What do we have? 25,350. That's 0.75% higher. The Nifty Bank is up 0.6, 59,140. The small cap index is up about 1.25%, and the mid cap index is up about 1.25% as well. So this is, pretty good stuff across the board as things stand. 1,200 stocks are higher, 450, 480 stocks are lower. So it's about 3:1 in favor of advances at this point in time. Oh boy, look at that. it's a sight for the eyes, right? Eternal, Dr. Reddy's, Tata Motors passenger vehicle business, BEL, but it's all green. Only NTPC in the red. When's the last time we had a screen open like that? I think it's been more than a few days. But yeah, 0.75% higher, and the Nifty starting strong. Rima.
Well, advanced decline ratio, right? 5:1 to begin trade with, so very, very strong. And I think all the sectoral indices are now firmly in the green right now. So that's a positive start. It's a broad-based up move. Top gainers include Eternal, 6.5%, counting up. 300 rupees crossed today. Dr. Reddy's up 3.5%. Both these two are reacting to a very, very strong set of numbers. Other gainers include that in the auto pack. So you've got Tata Motors, passenger vehicles, M&M, Eicher Motors, Maruti Suzuki, all starting off in the green. Adani Enterprises is a big mover. BEL is seeing some buying today. Adani Ports too on the gainers list, 1.3% higher on that. SBI is up. Now you've got one more stock in the red, Nestle, that's down close to about 0.5%. But this is a broad-based, very strong start that we have at our hands. And the mid-cap index is up 1 1/3 of a percentage point. The small-cap index also up nearly 1%. So it's good to see the broader markets outpace the frontliners in terms of gains.
Well, it's been so long, right, that we've seen a screen like this, big gains on select stocks. And there are actually a couple of very, very good earnings reactions. So I think we should pull up Bajaj Consumer. There was a management change at the top, and that's clearly reflected. Revenue growth of 30%. It's been a while since we saw something like that. Yeah, the profitability as well, there is surge. So Bajaj Consumer is spiked up big time. Bari Energy as well, that stock has seen a big correction from the recent peak. I think the high was around 3,500, came down to around 2,500 odd. But today, a big move out there as well. The numbers look quite good. Stock up close to around 8% as we speak. What else? MRPL. Yesterday, it saw a good run. Remember, those refining margins continue to hold strong. After the big run that we saw yesterday, stocks are seeing some follow-through buying today. Bank of India as well. We'll have the management later on the show who will be joining in. And Eternal has done well. Swiggy, there is some read-through, it seems, for that counter as well. So that's another big gainer in today's trading session. Net, most stocks doing well. However, EPAC Prefab, the management just joined us, on the show. They said that Q3 had various disruptions, and because of that, the revenue had fallen all the way to around 325 crores. However, for Q4, they're seeing a bounce back, and that's why they'll end at around 1,500 crores of revenues for the year. But the street is disappointed, so that's one of the stocks on the losing end. But otherwise, guys, it's been a long time. We saw so much of green on the screen.
Absolutely, and good to see, right? Just a few other names before we bring in our guest. Eternal, of course, we had a discussion on that, 4% higher. There's Vari, which is up about 8.5%, 9%. Vari, by the way, has got huge volumes. It's the number 2 volume-led gainer on the NSE. So 9% there now. Dr. Reddy's, I think we highlighted. Oracle Financial Services. When overall things look a little better, for many stocks, you get a bit of breathing space, right? And you get, where there are shorts, there is a little bit of covering, and people get a little more encouraged to buy what they wanted to buy, but they didn't want to because maybe, they thought overall things are going to go the other way. So you don't want to stand in front of that trend. And that's why, for the market to sustain, this turn higher must be there by close, and you need a few days of decent price action. MRPL is up about 3.5% as well. Premier Energy is 5%. So both Vari and Premier are coming up with gains. I think Bajaj Consumer we highlighted 9% higher. Tattva Chintan is up 2%. Vikram Solar. So many of these solar companies, right, and they're all up. So 3 we counted, right? Silver and gold. By the way, yesterday the 2 largest volume-led gainers were Gold Bees and Silver Bees, and today they are on the other side with large volumes as well. So it's actually silver, gold, all on the losing side with large volumes at this point in time. Yep. So
just one point, Prashant. The Nippon Silver ETF that's traded. The low actually was, it went down to 262 approximately, and then in fact it's bounced up. So very, very volatile. It yesterday ended at 312, came down to 262 in the last few minutes, and now it's at around 290. So immense volatility out there, not for the faint-hearted, sitting on big returns, and some money may be being taken off the table.
Absolutely. Actually, we should highlight some of this, right? And just put out 3 or 4 of these instruments at the bottom of the screen, because there is a fair bit of profit booking, which is happening. But I mean, they've been short-lived for now, right? You get these once in a while, but otherwise the trajectory, at least for the last year and a month now, has been up and up. So that's the overall broader picture. Harold van der Linde is with us in our studios to take us through what he's making of things. Harold, great to have you with us here.
Good to see you. Live now this time.
I think first conversation in 26, or we've spoken, no, not this year, right?
We haven't spoken this year yet.
I think there's still time to wish you a happy 2026.
Yeah, Happy New Year, that's right. Yes, thank you very much, yes.
So it's been tough, right, Harold?
Yes.
Especially for India.
For India, it has remained tough, right? There was a bit of attention to India early Q4, I think it was, late last year, and India performed very good, and then suddenly that dwindled a little bit again. And I don't think that's too much to do with India, to be extremely frank. It's got more to do with Taiwan and Korea. The AI story is still doing very well. Order flow is good. Chinese exports are very strong. That is the build-out of data centers in the US, so people need servers, chips, cooling systems, you name it. And they are made by the Taiwanese in China or the Koreans. So the momentum is in these markets, and we've seen people shifting back there. And that meant, yeah, the attention left India for the moment, yes.
So you upgraded India, I think, towards the end of last year
right,
to
yes.
an overweight, and you believe that at some point this AI trade is looking a little crowded in markets like Taiwan, Korea, and therefore India will come back in favor and FIs will return.
Yes.
Well, that's not played out. So now when you speak to investors, both domestic investors, you're here in India, so outline your agenda for us. Domestic investors, foreign investors, I mean, what is the view now towards India?
I think actually the story is still the same, and I don't get that much pushback on this particular story. I had a round table last week, and we asked people for ideas. India came up, but I got the feeling that people don't want to play it yet because that momentum is still there, and things have looked a little bit better. So your valuations look a little bit better. Your earnings growth is starting to turn around, or at least a bit of earnings upgrade starting to come through. But so the story is actually improved a little bit. But if you then look at the order numbers and the sort of earnings upgrades that we see coming through of companies like TSMC and Hynix, they're really good. And you're right, people, I mean, they struggle to buy more almost. They have full exposure there.
Harold, good to see you in the studio, Harold. Yeah. What's worrying the FIs most? You know, the last few conversations we've had with you, you've been also telling us maybe in 2026 they make their way back. Now the valuations have corrected themselves to some extent. Hopefully earnings do come back as well. The other problem is, I think, on the currency front, where we're seeing the rupee slip. Out of these points, you know, what is it that's worrying the FIs to come back home? Because they're underweight. The holding is at the lowest levels ever. What's the key important factor? Or are the other markets still too good to ignore?
I think the other markets for the moment are too good to ignore, and that's what the momentum is. And I know people who are somewhat uncomfortable with it, but they think, you know, this might go on for a couple of months. And if the performance is there, and you leave too early these markets, well, then your boss will say, hey, why you're underperforming? Why did you sell so early, right? So they're playing the momentum. But I think, broadly speaking, there are 3 risks that come up for India. The first risk is currency. Yeah, and that's just a fact of life we have to deal with. And you can deal with that if you invest here by having companies that export and that give you sort of currency hedge. The second risk is what happens with the earnings in the near term. So we see earnings recovering, but is that really true? What's coming through? Is this sustainable? What sort of earnings are we going to see this year? The feeling was that, well, the feeling is last year we had just below 10%, 7-8% or something earnings growth. Next year, people working the assumption is going to be 11, 12, 13, something like that. And then a third risk, and that is, again, it's not a major risk factor, and it's a bit of a longer-term risk. I think India could do what we've seen in Indonesia. Indonesia, very profitable market 15 years ago. Margins very high. Companies make a lot of money, good cash flows. What then happened is that you had a new president coming in, Jokowi was his name, and he says, I want to build out infrastructure. So he invested in railways, roads, harbors, bridges, you name it. That meant that access into the market was really good. That comes at a time when e-commerce, I mean, you can see the analogies here with India. E-commerce is building out, so a lot of companies say, hey, we can do the distribution for you. And we've seen Chinese, Korean, Thai companies coming in. Competition intensifies, margins go down. So you get although you had decent economic growth, you get earnings growth that is going to be slower. And my suspicion in India is that this could happen in the longer term as well. It's not really a risk, it's just a fact of life, but it's something that we need to understand as well.
Harold, the union budget is a big deal in India.
Yeah, it's a very big deal.
Everyone starts by saying, oh, the budget doesn't matter anymore. And then, when the budget is presented, it does matter. And we found out.
Yes.
So what's your...
It seems almost like it's a celebration here, the budget. It's so much attention goes into it.
And we are celebrating on Sunday.
You're saying Sunday?
Sunday.
Oh, so you'll be here on Sundays working on it.
You can join us.
Yeah, I can join you. That's a good idea. I'll come back for it. Yeah, no, but the budget is really big. And I think sometimes too much attention is being paid to it. But it does show the direction of what the government wants to take, right? And of course, that creates a lot of excitement. All the analysts have to figure out what that means for their companies, and that's why it's such a big thing. There is something happening elsewhere in the region that we have to be cognizant about as well. Indonesia is going through a very similar sort of story as India at the moment. They've cut interest rates, they've done fiscal stimulus, the economy is starting to recover. It's a bit behind where India is, and the earnings might start to recover this year as well. Very much an Indian sort of story, right? But they've run to almost to the limits of their budget, and now the markets are getting worried. Are they going to break that? So they have a self-imposed 3% limit. They're at 2.8, 2.9 now, so they can't really do that much more. And the feeling is, what if they break it? Now, that's an Indonesian story, nothing to do with India. But if they would break it, people are going to say, where else in emerging markets could this happen as well? And then India would flare up. And I think actually your fiscal position is good, but yeah.
It's actually, some would say it's too good. And why, does it need to be so good in that sense?
Yeah,
right?
So you're in a very different
As someone said, I think CIO of a large mutual fund here in India, said, well, why does it, at HDFC mutual fund, he said, why does it have to be such a holy grail, right? Why can't we spend a little bit more? Because it's been very, very disciplined about it for the last 10, 12 years, right?
Yeah.
So, but if there is requirement and there is tax shortfall, why not try and borrow a little bit more? Yeah. I mean, if you can, and expand the deficit.
Yeah, the problem is, of course, I actually would agree with that. And a lot of countries need more investments, and the government needs to lead that. Indonesia is one, India is another one. The problem is that we're living in a world now where a lot of actually developed markets, economies, they're overextending. So we now see worries about the fiscal position in the US. Bond yields went up earlier this week again. In the UK, in Japan, it's becoming a worry. The funny thing is, in the emerging markets, the feeling it is pretty good. So, but it could be that markets are getting a little bit sensitive to this particular issue. But I do agree, India could probably spend a little bit more and do more.
My only point is, with all the fiscal discipline, I mean, the rupee is at 92.
Yeah.
Right?
Yeah. That's right, yes. Well, there's a consequence, right? There's only two things you can do with growth. Either you spend more, that's a fiscal expansion, or you cut your interest rates. Now, if you don't do fiscal expansion, you're going to cut your interest rates. That's what happens here, and that doesn't help your currency. But that's just the way it is. The really way to counter this is to get money in. A big investment boom. For that, you need to open up industries, make it easy to invest. You need to create an environment whereby people say, "Oh my God, we have to build out whatever it may be in India." So that's a whole different story altogether. Yeah.
Just getting back to the point about India versus the rest of the emerging markets, and if FIs will make a comeback here. So one of the drivers is supposed to be earnings momentum, a recovery, right? 12-13% seem to be the estimates this time. Yeah. But the pushback is that the earnings estimate in the other markets is still more, right? Your Korea, Taiwan, etc. So take us through the EPS estimates for the other markets, juxtapose that with the valuations that they're trading at versus India, and then make a case for money to come back to India.
I'm going to focus on Taiwan and Korea, and also on China, because there's a couple of things going on there as well. What you just see is continuous earnings upgrades, in particular in Taiwan and Korea, because of the build-out. So you have now almost $1 trillion has been invested in data centers and AI, and we're going to spend maybe another $1 trillion. This will come with problems, I believe, at some point in time. I don't know if you're paying for AI, but the vast majority of people that I know, they're using AI apps, but they're not paying for it. And if they pay, it's $20. Microsoft, I think they're making about $1 billion out of AI now, but they said earlier this week, listen, people need to adopt this because we're making a lot of investments as an industry. But that's a different ballgame altogether. The thing is, but building it out, you see these earnings upgrades coming through from TSMC, in Hynix, in Samsung, and they have enormous operational leverage. So big fixed cost, a bit more sales, and your margins expand. So you have strong earnings growth. We're talking about 30, 40, 50%, very high. That will moderate, but the earnings are still being upgraded, and that's where the attraction is, and that's people don't want to leave that. The story in China is a bit different. It's actually the Chinese that are buying Chinese stocks, not foreigners. So the foreigners are not going back to China. They're just going to Korea and Taiwan. It's the locals in China that have basically sitting on an enormous cash pile, $23 trillion US. It's just the cash in the banks by Chinese households, and they haven't done anything with it. And there's a lot of it they won't touch because it's their pension, but maybe 6 trillion they might start to allocate into property or to stocks or crypto or gold, whatever you can do. It seeps out as well into Hong Kong. So that's driving the Chinese market to a certain extent. So I think the Chinese market is a different story. It's really Taiwan, Korea, and the earnings are still being upgraded. And we're talking about very strong earnings numbers there.
Since you briefly mentioned gold, let's talk about that as well. You know, in gold here in India, it's a very, very important asset because we have 35,000 tons of gold with, households. And of just putting in the numbers, the value of gold households that households hold is now, more than what the entire equity market is, which is unusual in comparison to the remainder of the globe. Because if you look at Germany, Italy, that's in the vicinity of 25 to around 40% approximately, at most. What's the view on this asset class? From an India perspective, it's actually creating that wealth effect. But as an asset, what's your take? As of yesterday, that 35,000 tons of gold is more than $5 trillion. While the equity market is around $4.5 trillion.
So for a lot of Indian ladies, it must have been a really happy new year, seeing their jewelry being repriced. We're living in a different world. Geopolitics is changing. Central banks understand that, and particularly emerging market central banks. They are worried that at some point in time, I mean, some of them have actually told this to me, that they might get cut off from dollar exposure. Let's say there is a crisis at some point in time, for whatever reason, doesn't matter. You need dollars. In the past, you could go and say, can we swap this by other central banks or the Fed? But what if that doesn't happen? So you see central banks say we need to build our own financial resilience in this sort of new geopolitical world that we're creating or is unfolding. And we need to make sure that we have not only dollar exposure, but other currencies as well. But there's only so many Australian dollars you can buy and yen you can buy. So, and of course gold. So they're buying gold. But central bankers don't think about making profit. They just need exposure. So you got an asset where there's not a lot of supply coming up. Supply is fixed. There's only, there's only 2 swimming pools of gold in the whole world. You put it all together, it's not a lot. So supply is fixed. Demand from the central bank is good. And that just creates an upward drift. And that's what we've seen has happened actually some couple of years ago already. But so we think there's further upside risk.
Further upside for gold even from here on. Let's wind this conversation down, Ben, with the top themes that you like here in India. In the past, you had a little bit of cement, discretionary staples as well in the pack. Give us the top 2 themes that you'll have here in the Indian markets.
I think the top theme for me remain, I always like actually the domestic sort of story in India. I like stuff like, for example, hospitals. They're a bit pricey to be extremely at the moment. If I would look at the stocks that we would be focusing on, it would be some of the auto company, discretionary spending, some of the jewelry companies. I think
Mahindra is something that you'll have liked. Trent is something that you'll have liked.
There's a couple of these kind of jewelry companies. There's one with Kalyasha, I think it's got. I forgot, but anyway, it doesn't matter.
The jewelry company.
Jewelry, retailers, auto. We like the banks, not expensive. And if earnings and credit growth improves, that should be pretty good. So there's a few of these sort of domestic names, but if you come in as a foreign investor and you want a little bit of, you're worried about the currency, you buy some IT or something like that to hedge that out.
Absolutely. Thanks very much, Harold. Appreciate you joining us. Really, thank you for dropping by. And see you on Sunday.
See you on Sunday. Exactly. Good luck on Sunday. Yeah.
Okay, well, that is the conversation as far as Herald is concerned, as far as the market view goes. Well, KEI Industries is the next guest on the program. So stocks, I think, a bit under pressure. Mixed set in the third quarter. Revenue growth has missed expectations, but do note that export business has gone up substantially. We are joined by Anil Gupta, CMD at KEI, to take the conversation forward. Mr. Gupta, great to have you with us here. Good morning. Thanks very much for joining us, Prashant, this side. And I think, happy 2026 to you as well, sir. I think first interaction this year, and I hope this is a big one. Mr. Gupta, it has been a big one so far for copper prices, right? And I think all eyes on what that is doing. I mean, you and I have spoken about this before, and how maybe at some level, at some price, as you've put it, this will start to impact demand. Are we at that level, sir? Because in terms of pricing, it is a pass-through. But in terms of volumes, is it having a demand effect? Sorry.
Good morning. I really don't know how it is going to impact the demand of copper products, copper cables, in view of these high prices. But in fact, in last 9 months, our consumption of copper has gone up as compared to aluminium. It may be because of the exports, because in exports, major cables are procured with copper conductor. But, definitely I could see that especially in power cables, there may be some shift of demand from copper to aluminium in near future.
Sorry, could you give us, Mr. Gupta, the volume growth in wires and cables this quarter?
In this quarter, our volume growth is close to around 10%, and even more around 11%. And our copper consumption has grown by around 19%.
Copper consumption, that is by value?
No, by volume.
Okay. So you're saying that purely, if you look at the copper from the wire and cable side, that has grown 19% by volume?
No, only the copper. If I combine aluminium and copper both, then it is around 11%.
Okay.
Because there was a shift from domestic market to export. So the export has grown by around, wires and cable export has grown by 95% in this quarter. And hence, copper usage has been more.
Okay. So you are saying there's no impact, right? You're not saying, you started by saying, I don't see how it affects demand.
I have not seen any impact so far, but definitely the way the prices have gone up, there may be some shifting from copper to aluminium, especially in case of power cables.
In case of?
Power cables.
Power cables. Got it.
And so for you, what is the split between copper and aluminium? And if there is a shift, can you tell us by how much? So say the earlier mix was 50-50 and now it's 40-60.
No, our mix is at the moment is around 50% copper and 50% aluminium. Okay. But in terms of value, that if we say value of 50% copper will be much higher than aluminium. I can't quantify that what kind of shift can it be, because when the shifts take place, it takes a very long time, because converting the technical specifications of products internationally is not so easy, and it is a horizon of around, I can say, 3 to 5 years.
Got that. And there's also the risk about maybe some value-conscious buyers moving towards unbranded because of the kind of pass-through we've had in the overall prices. So just an overall, word on the demand environment. Your top-line growth was at 20%, but it fell short of consensus expectations. How is Q4 going to shape up for you, and what are you likely to end FY26 with? You'd given a guidance of 18%. Do you maintain that, and even on margins?
We are very likely to close at 19 to 20% growth over full year. We have already commissioned first phase of our Sanand project in mid of December this year. And gradually we'll be ramping up the production in this first quarter of this fourth quarter of this financial year. So I do expect that some contribution coming up from new facility also. But I can maintain that for next 3 to 4 years, we expect to grow by 20% CAGR year after year because of the new capacity coming on board. And we have a strong market, positioning in India as well as world over.
Hi, Mr. Gupta. Good morning. Good to see you in. So you have got new capacity that's coming on stream, but you've got new players as well that are entering the market. The Birlas, the Adanis. Now, yesterday you had Bajaj that announced as well that they want to enter into this field. Do you think there is enough room for everyone to prosper and do well? Or at some point of time, it's going to have some impact, right? Either profitability gets hit, either the volumes get hit, or is there enough in store for everyone?
In last 1 year, at least 2 or 3 new players have come into the wires market. But you see, we have still grown. So far, we have not seen any impact. And it will be very difficult to predict about impact of these newcomers. We are an established player. Our brand, due to our brand positioning, our dealer network, and our approvals with the customers, especially in the government departments and in the private sector, real estate bodies. We will always be growing. It will take a while for a newcomer, maybe around 3 to 5 years, to build up that network and to build up that, approvals from the ultimate buyers. It is dealer network alone will not suffice.
So you think everyone will survive, everyone will do well. And you are giving us your guidance that 20% growth will happen. Mr. Gupta, just a quick question. Yesterday when you delivered your numbers, you reported and you said that the cables and wires business grew by 20%. The fear was that maybe you have grown by just 6 to around 8%, very, very roughly, because that was derived by the price hike that we have seen from copper prices. Now it appears that you're saying that 11% is the growth that you've done, 10 to 11%. Yeah. Does that mean that a lot of that input cost pressure has not yet been passed on, and now you'll be looking at the price increases, which in turn will help the top line as well as the profitability in quarter 4?
See, our volume growth is around 11%.
Yeah.
Why people are driving 6%? They might be considering the prices of January. When we are taking the price increase, we are taking an average of full October to December, vis-a-vis last year, October to December. So when we say an average, the average prices from last year to this year in the third quarter has gone up by around 9%.
Okay. And do you think you can sustain this 10-11% volume growth in Q4? And tell us a little bit as we wrap this conversation about exports. That's been the big driver. What kind of growth can we expect from exports? Which are the key markets that are driving this? And what will all this mean for your margins?
The export growth is driven by mainly, our aggressive pitch into various countries, adding the geographies in our business, adding the products, and adding the technical approvals in various countries. And this momentum will continue. I do expect at least 35 to 40% growth in exports next year as well. I always talk conservative because we always aim for much bigger, growth. But when I say so, ultimately our aim is to grow by 20%. Whether we grow from exports or from domestic market, our ultimate aim will be to grow and utilize our capacities in full.
Okay. Mr. Gupta, we wish you all the best of luck. You're giving us a sense. Aim is 35-40% next year, but you will do much better. At least that's the aim. And 20% overall growth essentially is what you aspire to. Thank you very much for joining us here on CNBC. Stocks down a little bit, but it's done well. 3.5% down on KEI. We take a break. Tata Communications Management on their earnings and outlook coming up. Stay tuned.
Welcome back. Let's invite Tata Communication. That's the next management on the show now. Q3 revenue growth came in at about 6.5–7%. But if you strip out the Forex move, the top line growth was about 2–2.5%. The company's data and digital portfolio continues to do very well. Digital revenues up nearly 15% on a year-on-year basis. We have with us A.S. Lakshmi Narayan, MD and CEO of Tata Communications. And there's also going to be the succession plan, which has been announced effective April. Amor, thank you very much for joining in. This is Rima here. Just begin first with the broad picture on the kind of demand outlook. Because if we strip out the Forex movement, the company's top line growth was just about 0.5% quarter-on-quarter and year-on-year at 2.2%. Is that a bit muted?
I think one of the aspects that we will draw attention to is out of our overall portfolio, the core connectivity is nearly 50%. And that traditionally, we've said that is growing at a low single-digit numbers. It used to be around 5–6%, but in the last 2 years, it's come to around 2% based on some cable cuts and other impacts that we have had. But the other part of the portfolio is really the digital portfolio. And the digital portfolio has been doing quite well. Now, given all the macro conditions that we see, we do see some tailwinds on the infrastructure modernization driven by AI. We have seen a 15% growth on the digital portfolio. So I would say overall, we are very pleased with the momentum that we are seeing in the business.
So let's talk about the digital portfolio, which is the growth driver for the company. And as you said, the top line went up by 15% on a year-on-year basis. But at the EBITDA level, the digital portfolio is still making a loss. Can you tell us what the EBITDA loss is in Q3 and when will you break even?
Yeah, we are not calling out specifically on the numbers, but in the last IR day, we did say that the overall digital portfolio is making a 9% EBITDA loss. Within the digital portfolio, there are really 4 or 5 major domains. Right? So the network domain, the next generation connectivity, that is doing quite well, both in terms of margins and growth. The cloud and security similarly is doing well. I think the other 3 areas, which is the customer interactions, where we acquired Kalera, the CPaaS, the SMS margins are pretty muted globally. We want to improve those margins through diversifying that from just SMS to other channels like voice and RCS, and also building and bolting on a full agentic AI, where we've announced an acquisition of Commotion. So that will really bring that margin up. The fourth portfolio around Move and IoT has been a drag on margin. We are sharply focusing on pivoting that business to a new model where we will focus more on the margins and get that right before we emphasize on the growth. And lastly, the media business, the acquisition that we did with Switch and the combined is still making losses for us. We think we'll come to an LOB neutral and EBITDA neutral situation in the next few quarters. So that will help us in the overall journey towards the profitability of the entire digital portfolio.
Any timeline on when the digital portfolio breaks even?
We have said that FY28 is our goal. We want to get to at least the 23%, which is the lower end of the 23 to 25% spectrum that we have given. And we are quite confident of getting there in that time frame.
Okay. So FY28, you get to your stated margins of 23 to 25%, at least the lower end, and the digital portfolio breaks even. Am I getting it correct, sir?
Yes.
Okay, because there was some fear that you pushed forward your digital portfolio break even by 1 year. So instead of FY28, perhaps it would take place by FY29.
It could happen. There are many moving parts there.
Okay.
It also depending on the mix. So if you see this quarter, our CIS revenues Q-on-Q has grown 10%, but largely on the back of CPaaS, which is a lower margin business. We are also pushing ahead with a lot of new offerings. So this month end, you will see offerings that will help enterprises to accelerate the journey with the digital infrastructure for AI. There are 3 new product launches that we are doing end of the month. And all those 3 products are SaaS-like products, which will come at a very decent SaaS margins. And it depends on how those take off. We might be able to achieve the margin goals even faster.
Okay, apologies. I'm still trying to pin you down to some numbers and a guidance. And I know there is going to be a new CEO, MD, who takes over in April. Sorry, digital portfolio breaks even FY28 or FY29? Or it's uncertain at the moment?
No, we are certain. That's why I said, you pushed me for FY27, whether we would break even. I said FY28, we are confident.
FY28. And will we continue to see a 15% kind of a top-line growth in digital portfolio, given the order book, the funnel, etc.?
Certainly. I think we see momentum in the second half of the FY26. We are seeing a greater momentum, and hopefully that will carry on for the 27 and 28 forward.
Okay, seeing greater momentum in the second half of the year. Got that. What will be the contribution of your digital portfolio to the overall data revenues? I think now it's 50%. But as it continues to outpace the other segments, what will that number inch up to?
We have said that it should get to a 60%. That should be the next goal. So when we hit a 28,000 crore mark, our digital portfolio would be tad above 60%.
Okay. Did you all consider any acquisitions? Because to get to that aspiration of 28,000 on the data revenue by FY28, people have been pointing out that it's difficult to do so without an acquisition.
Yeah.
So, I mean, did you all analyze any M&A acquisitions this quarter? There was no announcement, but when can we hear one?
This quarter, we announced a Commotion acquisition, the AI startup. We are very excited about that capability that we are bolting on. It's a very unique platform that we have acquired. I would say its voice-to-voice model is amongst the best in the world, not just in India. And they've taken a holistic approach for AI with what we call as an AI operating system, which can sit above all the systems of records and engagement that customers would have, and helps customers to deploy agentic AI, voice AI in a very rapid fashion. So that's one acquisition that we already announced. So Rima, to your question on whether we would acquire more, we are constantly on the lookout. But I must add that we are not looking for acquisition purely to meet a number or to add revenues alone. It should be a combination of capability addition and a strategic fit to what we are doing.
So on this AI cloud economy, I think in some of the previous interactions you spoke about how you all have partnered with NVIDIA and you all have 1,000 GPUs, but the revenue contribution from that was minimal. I think the number that I have last was just 200,000. Can you give us an update on what is happening here? And are we seeing more by way of monetization of this GPU business?
Yeah, definitely. I think we started with the 500 GPU in the partnership. We just brought online the other 500 towards end of the quarter. We are seeing again a good run rate in our monthly revenues in AI cloud, and we would be doubling that run rate this quarter, and we'll double again in the next quarter. Our focus there has been largely to serve large enterprises. And as we all know, the enterprise themselves are still in the experimentation phase and not in the scale phase, and we are working closely with them. The second aspect of our strategy is to launch our AI studio that will sit on top of this GPU as a service AI cloud. And that is really getting launched end of this month again, and there are a few beta customers. So that will be another accelerator for us. And the third is the acquisition that we did last quarter, Commotion. The entire Commotion platform, their voice-to-voice AI model was trained on our Vayu AI cloud, and it will run on Vayu AI cloud. It's capable of running on other clouds as well, but it runs on the Vayu AI cloud. So we will have a full stack capability of the AI cloud, an agentic AI platform, a voice AI, and we will offer the whole stack to the customers. And that will be another avenue for us to monetize what we've invested in.
Okay. Just out of time, what is the monthly revenue from GPU as a service right now?
We haven't called out yet. We will we put all of that in our cloud and security offerings.
But it's doubling on a month-on-month basis.
Month-on-month basis.
It's small, but it's doubling.
Yes. Yeah.
Right. And can you call out the data center revenue? Again, here you're providing the service, the infrastructure. You're not actually building out the data center. But can you provide a number of how much that is contributing?
So, Rima, we only give that as a full segment of cloud and security. That has been growing very well for us. Cloud by itself was somewhat muted. We launched and relaunched the Vayu Cloud after doing a lot of work and with self-serve and capability enhancements. And we see that that will begin to contribute in a more meaningful way in the coming quarters.
Okay, all right. We'll leave it there, sir. Thank you very much. Good luck as you look ahead. I just want to make a quick mention of all the silver ETFs which are down and down sharply. Actually, if you just sort of sort what's down with volumes, the top 10 things are all silver Bs, gold Bs, HDFC Silver, Tata Silver, SBI. All ETFs down very, very sharply across funds. And we'll try and get some perspective on this in terms of, silver prices, of course, the prices themselves have taken a bit of a pause, but nothing, of course, like what we've seen here. So there has been, of course, some anxiety that maybe underlying financial prices have run up far ahead of where, silver prices have been at. So is that the pullback that we're seeing right now, or is there any other dynamic at play? I think that is something we'd try and get to you as we go forward. We'll try and speak with a fund at one of the many that are on your screen right now. So sharp pullbacks is what you have. Let's stay with the commodity and the metals theme. Jindal Stainless, Nigel, is the next management of the program.
Well, that's right. That stock is surging in trade after reporting an inline set of numbers, but the street is quite optimistic on the way ahead. Volume growth continues despite exports being under pressure. The net debt as well did come down. To help us out with what's the outlook from here on and how was the past quarter, Mr. Tarun Kumar Kulbe, the CEO of Jindal Stainless, joins us on the show. Hi, sir. Good morning and congratulations on a good showing in a difficult quarter, actually. Let's focus on a couple of aspects because the street wants to know whether Jindal Stainless will upgrade their guidance. Focusing on volumes first, any tweaking in the volume estimates for FY26? You've gone at a good rate in the first 9 months, so I ask you that. And what's the outlook for FY27, given that export contribution has now come down to just 5% of the mix?
Okay, good morning, Nigel. We had given an annual guidance of volume growth 9 to 10%. And this we had done in our calculations, and we believe that we are on course. So at this moment, I would still keep it 9 to 10% because the various product mix we keep on playing with depending upon the market situation. So for FY26, whatever volume guidance we have provided, we are right now sticking to that, and we believe that we should be meeting that. FY27, because there are so many changes happening, so very soon in the next call when we sit, at that time we'll provide you the guidance for the FY27.
What about exports? Will they go further down from this 5% contribution, or are there signs that things actually are rebounding?
Okay, so on the export front, Nigel, the thing is that the basic problem is of uncertainty. Our two major markets, one is Europe, another is the US. And okay, the rest of the countries also, some of the countries we sell, but these are the two major ones. US, we know the continuous different announcements and all keeps the people confused, keeps the buyers confused. And Europe, the issue was that CBAM is now at the definitive phase. And the issue was that till end of December, the European Commission had not given the threshold limits and the calculation methodology, which they came out towards the end of December. But still, what remain is that who is going to verify these tax calculation, and the verification method. So these, this kind of, non-clarity is keeping the customers a bit, holding them. But we believe that as soon as the clarity comes, export in any case, because we are able to, we are selling into the domestic, and always we have said that domestic is our primary market. But export, we can again increase. So far as percentage term is concerned, Nigel, we also have to be mindful that our base is constantly increasing. So even with the similar kind of export tonnage, in terms of percentage, it looks a bit lower. But yes, at the same time, the market complexities are also impacted it. But some kind of improvement can happen going forward.
Okay, all right. The other point is the EBITDA per ton. The last couple of quarters, Mr. Kulbe, I've been asking you, you're saying that it'll be in the vicinity of 19,000 to 21,000 odd. And this quarter as well, if I calculate, you're at around 21,000. Can it get better from here on? I asked you this because nickel prices, going by your presentation, it's cooled off. Ferrochrome, I have my ear to the ground as well. And in the last 3-4 weeks, ferrochrome prices have cooled off. So will that be a bit of a spurt in terms of the EBITDA per ton? And do you want to raise that guidance, maybe the lower end from 19,000 odd?
Okay, so Nigel, on EBITDA per ton, yes, you're right that we had given a guidance of 19,000 to 21,000. But at the same time, our 9 months, if we look at the performance, it is around 21,300. And I believe that the year closing should be closer to this. So a bit, I'll say 21,000, somewhat plus to 21,000. That is what we are estimating. So nickel at the same time is quite fluctuating. I mean, it went down, then again it has gone up. So all this also impacts. But just to provide a guidance, I'll say that we see it, whatever we have done in 9 months, somewhat closer to that, we should be closing the year.
At the upper end of the guidance. Got that. Yeah. What about the capex? How much have you spent already? I think earlier you were looking at around 2,700 crores for the year. How much of it has already been spent? And what happens to your net debt number? That as well has come down by around 200 crores in the past quarter.
Yeah. So capex, we had provided a guidance of 2,700 crores. And now currently we have already completed around 2,200 crores. And we believe that whatever guidance we have provided, somewhere those numbers will be meeting. And so far as our net debt is concerned, net debt has now come down to 3,451 crores, which was 3,991 at the beginning of the year. We had provided a guidance of 3,500 to 3,700. And now we believe that by the end of the year, we should be either closing at the similar level what we have attained, or maybe slightly lower also could be possible, looking at our performance. And with these numbers, our ratios, our net debt to EBITDA stands around at 0.67 and debt to equity 0.18, which are one of the best in the industry.
Okay, all right. The other point is what happens to your capex in Maharashtra? What's the update, sir? We are at CNBC TV. We'll be happy to visit the plant, and know what's the update to there, because you're talking about very, very large numbers, massive capex. So what are the steps from here on? Do we see the signing? Do we see some work start in the next few months? Give us some timelines.
Okay, so Maharashtra capex definitely, because Maharashtra capex, when we announced, we have also stated, Nigel, that is where our next phase of growth we see in the long-term future. And that is why we intend to build a big capacity over there, because our existing plants are coming to, almost space we have utilized. And strategically also Maharashtra we have selected. So we are working on it, because in India, greenfield, when you go for land acquisition itself is a bit time consuming. So we are working on that. At the same time, we are working on the other aspects of starting any greenfield project. Very soon we will come out with our definitive plan, and soon you will hear from us about the clearer timeline. I think in the next 1 or 2 quarters, we should be coming out with our plan.
So we can fix the date accordingly then, with regard to, post the MOU that's been signed with the Maharashtra government. Mr. Kulbe, you've been with the group, I think, for very, very long. You've seen all the cycles up, down, etc. Some difficult times as well. Now we have the budget that's coming up. And the fairest guys, the steel companies, they put a good pitch and they've got some protection. What about for the stainless steel industry? Tell us, what is the differential between domestic stainless steel pricing and the imports that are coming in there? Because for the last many quarters, you all have been talking about, yes, there is a problem with regard to imports. But I don't see too much movement on ground. But you can update me. Where is the file at? In terms of your request to get some protection.
No, absolutely right, Nigel. I mean, like on this cheap imports and poor substandard quality imports is something industry has always been complaining about. And in between, through QCO, these substandard exports were put in some check. But then again, government opened it. So we believe that okay, and there are always the people also represent about the capacities and availability of material. Whereas we have always been saying that in the stainless industry, in the MSME, a lot of capacity remains idle because of this substandard cheap import. So we strongly believe that the government should stop, should put a check on this, and this will help also in promoting the manufacturing or make in India, because that encourages investment, that encourages manufacturers to invest more and even further enhance the capacity. So we have also industry has also applied for a anti-dumping duty. The investigation is on that, but because that is also a time-consuming thing. In September 25, the investigation have initiated. Normally, it takes around 12 months, so that's what we are expecting, that the government eventually should take a favorable decision to that.
Got that, sir. Thanks a lot for joining in, giving us all of those details. The stock has been a big mover. If I look at it, even from the pre-COVID period, the stock is up 15 times, and in today's trading session, putting on another 3%. Time to slip into a short break. On the other side, we'll get chatting with our technical expert. Stay tuned.
Somal Mehta of Mirae Asset Share Khan is now joining in for a technical check on the markets, going strong, 200-point plus now on the Nifty. Somal, any Nifty bank trade and your stock calls?
Good morning to everyone. The trend still remains negative here for the short term. In the medium term, the structure has changed a little bit here. On the weekly charts, on the monthly charts, the previous swing lows have broken on the downside. The view remains negative, short term, medium term, both for Bank Nifty and Nifty. Now, the levels to watch out on the downside, targets would be around 24,800 for Nifty, and the reversal on the upside would be 25,600. So I'm not looking for markets to go above 25,600, and sell on rise should be the strategy on the mid caps specifically. Now, I have two trades. I have VBL which has broken a small consolidation on the daily charts, trading below the averages, below 200 daily moving average. I'll be expecting a sharp correction here. Stop loss would be 491 and target would be 460. The second call would be on Torrent Power. Torrent Power, very similar. A small consolidation has broken on the downside, trading below the short-term averages, making lower tops, lower bottom. So the stop loss here would be 1350 and target would be 1230.
Okay, thanks very much, Somal. Appreciate it. That's a short, quick conversation at this point. I mean, the big story, of course, is the sharp fall in all these silver and gold ETFs, which are down, and actually silver more specifically, but even gold lower. And of course, names like Hindustan Zinc. There are only few equities directly related to mining of some of this stuff. Hindustan Zinc, and then there is Hindustan Copper. They're also seeing some pullbacks. We take a break. We are back with the management of Bank of India to break down their third quarter numbers. Stay tuned. Coming up.
Fly Emirates, fly better.
Welcome back. We have a pleasant set of results to handle now. Bank of India's third quarter numbers came in fairly decent. What stood out for me, at least, is that the bank posted a 16 basis point rise in its net interest margins quarter on quarter. That's not easy in a quarter when there was a rate cut in December, remember. So the other things that stood out for me, loan growth at 13.6%, deposit growth a little lower at 11.6%. Well, it looks like loan growth is going a bit too fast, but importantly, they're all within the guidance. The market has given a decent amount of thumbs up. Well, today it's given a thumbs up to all stocks, but Bank of India also gets a thumbs up for these numbers. There it is. A decent 5% gain is not something you often see after the banking results. Remember when ICICI announced its numbers, it was not greeted with such a big thumbs up. So what's going right for Bank of India? To understand that, we are joined by Rajneesh Karnatak, Managing Director and CEO of Bank of India. Good morning, Mr. Karnatak. Thank you very much indeed for your time. I am very impressed, I guess the market is, by the rise in margins. And what is impressive is that there was a rate cut, and even then your cost of funds has, your yield on advances has not fallen. I mean, don't you have EBLR loans linked to the repo? How come your yield on advances did not fall, although there was a rate cut?
Yeah, thank you, Lataji, for having me here, and a very happy new year to you and all the viewers of CNBC. So yes, we have been able to maintain our margins, in fact, improve our NIMs, global NIMs from 2.41% to 2.57%. If you see the data, our yield on advances, as you rightly said, have they are at the same level at September numbers at 7.81, but our cost of deposits we have been able to bring down. So our cost of deposit as on December is now 4.77 only, and the difference between the cost of deposit and yield on advances was 3.04% as on December, which was 2.96% as on September. So we have improved it by 8 basis points. This has helped us improving the net interest margins overall. As your question with respect to specific question with respect to how we have been able to protect our this yield on advances, there I would say that we have done a lot of churning in the corporate advances and low yielding advances, which were AAA advances to PSUs, which were at very low rate in repo. There we have churned them and we have gone for AA advances where the margins were better by 20, 25, 30 basis points. So that has helped us in protecting our yield on advances, and the full impact of the repo cut which happened in the 5th of December has not come for the full quarter. The impact was only for 22 days. The full impact would be coming for the entire system in this quarter, in the Q4 quarter.
Okay. That explains. You said you churned your portfolio in favor of what and against what?
Yeah, that was in favor on the rate of interest only. It was in the EBLR only, the repo rate linked AAA rated borrowers. We shifted towards AA borrowers, where the rate of interest was much better from 25 basis points to 40 basis points.
Fair enough. Okay, I got that. Let me come to the cost of deposits now. That has fallen by 8 basis points. But you know, when I looked at your investor presentation, you are having actually a very big growth in bulk deposits. One would normally think that that will push up cost, isn't it? How come you manage lower cost in spite of having higher corporate or bulk deposits?
So just to share with you the data, so if you see the weighted cost of our retail term deposits, it is higher than the weighted cost of the bulk deposits by nearly 14-15 basis points. So in fact, the bulk deposits are cheaper than the retail term deposits. Though retail term deposits have grown by 14% and we are a franchise of around 5,500 branches, we would always be growing our retail term deposit. But to give you a sense, in Q4, the cost of average cost of those deposits was higher than the bulk deposits.
You know, will you run into an LDR problem? Because your deposits are obviously growing a little slower, 2 percentage points slower than your advances. As well, you are already relying on bulk deposits. So do you worry that you may not be able to keep up this pace because of deposits, or at least retail deposits being a problem?
Yeah. So we have a very nuanced approach as far as the LCR and other things are concerned. To just give you a sense, if you see our presentation, our deposit growth in absolute terms has been more than the advances growth. So our deposit have grown by around 92,000 crores and our advances on a YOY basis have grown by around 81,000 crores. So one point is that our credit deposit is growing at a faster pace than the advances, though in percentage terms, the advances is growing higher, but the deposit is growing at a faster pace, number one. Number two, the fact is that even though our CD ratio is at around 82%, our LCR is quite comfortable and well above the benchmark of 100% set by the Reserve Bank of India. That is the second point. Third point is that our this retail term deposits are growing at a healthy 14%, but our bulk deposit, as you rightly said, has inched up to 15%. However, in the entire domestic deposits, 85% of the domestic deposit constitute retail term deposits and CASA deposits. There also, if I give you a sense, The bulk deposits, there also we are growing quite healthy in the bulk deposits also. And definitely with the credit growth we are having 15% on the domestic side and global credit deposit of 13%, definitely there will be more requirement of deposits. And with the structural shift which is happening on the deposit, where CASA is not growing for the banking system and more reliance is on the retail term deposit and bulk deposit, definitely there will be some increase in the term deposits for the bank because we have to sustain the growth of the advances which is happening in the system.
Fair point. So how do you expect your margins to trend therefore? It looks like we are at the end of the rate cutting cycle. And maybe now your older deposits will start getting repriced also. How do you expect, what is the margins for this quarter, fourth quarter? What is the guidance for FY27?
Yeah, as far as the margins are concerned, so now the present margin that we have, we feel that we'll be able to sustain this margin in this quarter. And with the repricing in the term deposit, which is happening quite with pace, we think that the margin should bottom out in the Q4, and after which there should be improvement in margin, provided there is no further repo rate cut.
Okay. Well, there is a small rise in slippages because of that road asset. Can you give us a sense of how the SMA, I mean, I'm trying to read your investor presentation quickly, but anything in the SMA 1, SMA 2 that we should worry about? I think there is a marginal rise in the SMA 2 assets. Is that anything to worry?
Yeah, so there has been a 2 basis point increase in the slippage ratio. That is because of one road asset which has gone into NPA. But overall, I can confidently say that in the Q4, our fresh slippages should be at the same level in the Q3 which have been there. As far as the SMA book is concerned, see, SMA we have been able to reduce 5 crore and above from 6,400 crores to around 5,500 crores. And it is only 0.75% of the overall book. So SMA2 number, if you see more granularly, there are basically majority of the SMA2 is putting in the corporate book, which are 3 PSU accounts, which are there, which have now rolled forward towards the SMA2 category. But we have a state government guarantee over there. Okay. And we are quite hopeful that the slippage will not happen in these accounts. Okay. But as far as the overall SMA is concerned, yes, there is SMA in retail, MSME and agriculture book. But this is a normal SMA which is there, SMA 012 in the RAM book, and there is not much of a concern over there.
All right, I'll just tell my viewers, we are talking a bit of jargon. SMA 2 are loans which have not been paid back even 60 days after the due date. SMA 1 are loans that have not paid back 30 days after due date. So SMA 2 has gone up slightly. Last quarter for Bank of India, it went up by 0.29%. In the third quarter, it has gone up by 0.57%. So that's why I asked this question. But thank you, Mr. Karnatak, for that. The other point I wanted to ask you was, what is the sense you're getting in terms of where the best growth will come? And therefore, where will the margins come from?
Yeah, as far as the best growth is concerned, we are targeting, frankly speaking, our RAM credit. That is where the margins are. Retail, MSME and agriculture. There is where the margins are number one, and where there is diversification in the portfolio also, and we are able to spread our risk also. So our RAM book is growing at around 18% on a YOY basis. If you see, retail book is growing at around 20% on a YOY, MSME book at 15%, and agriculture book at 16%. So that is where we are targeting. Presently, our composition of advances is that 58% is RAM book and 38% is the corporate advances. In the long term, we as a strategy, we want that our RAM book should be at around 65% and the corporate book at around 35%, because that is where we feel the margins will be there going forward.
Okay. You're doing a steady recovery of about 1,000 crores to 1,200 crores. You know, a year ago, it was 1,200 crore. Last 2 quarters, you've been doing about 1,000 crore. Is there a lot of more recoveries? Can we expect in Q4 and next year?
Q4, definitely, we have a good pipeline for recovery. Nearly 2,000 crore of recovery we should be showing in Q4. Oh. And it would be much better what we have done in the Q3. So if you see the total recovery which has happened in this quarter, Lataji, so it has been around 1,500 crore, which includes the recovery plus the UCI and the URI, which we call the unrealized interest. There also recoveries happen when we do the one-time settlement and other kind of things. So 1,500 crore has been the gross recovery cash recovery, and it is 1.3% of the fresh slippages. And with around 2,000 crore of recovery, cash recovery we are expecting in this quarter, our number should be even better, considering the fact that we will be able to contain the slippages at the same level.
Oh, that's good to hear. Very quick last question. Has there been any discussion on consolidation? Should we expect some news, budget or later? What have you been told?
No, nothing, no news with us.
No news at all. Okay, ROE, any guidance you can give us? ROE or ROA?
So ROA, we are at 0.96% and we are very close to 1%. We should be touching 1% in the Q4 quarter, but for the annualized ROA, I would say that we should be somewhere around 0.91, 0.92% for FY26. And going forward, yes, for FY27, we are targeting a consistent ROA growth of 1% in the coming quarters.
Okay. All right, we'll leave it at that. So out of time. Thank you very much, Mr. Karnataka, for joining us. The markets have given their verdict, a 5% gain in the stock. The overall markets, after showing a brilliant start, has seen a little bit of profit taking, but that is normal after 1 hour of trading. It looks like we're in for a good day for the bulls at long last. On that positive note, wrap up on Bazaar. Chart Pass is coming.
Silver futures dip sharply on MCX. Silver ETFs take a sharper beating, down anywhere between 10 to 25% on likely liquidation of leveraged positions and low liquidity.
Dr. Reddy's top Nifty gainer after delivers a beat in the third quarter. India, Europe, emerging markets, all of them lead growth. Margins come in at around 23%. That compares with expectations of around 21%. The management tells CNBC TV 18 they expect single-digit growth in the United States, while other markets are expected to grow in double digits. The stock bursting away, up 5%.
PNB Housing languishing in an otherwise strong market. The stock down 7.5% on the back of a weak set of earnings, which missed expectations on most counts. Loan growth comes in much lower than management's guidance. Disbursements, margins too lackluster.
Earnings strength pulls up shares of Bajaj Consumer and Vari Energies. Bajaj Consumer delivers a solid 83% growth in the profits. Record quarterly module production as well as strong order pipeline aids the growth for Vari Energies.
EPAC Prefag downbeat following a 25% sequential dip in revenues in the December quarter, which is seasonally strong. This even as the order book for the company grows over 30%. Management tells CNBC TV18 they expect revenues of around 1,500 crore rupees in FY26. The stock down by 10%.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And it's been so long that we have seen some kind of green on the screen. You know, at least it's in the green, Mangalam. It's come off 100 points from the top, but we'll take the positive. There is some green on the screen. So good
Clutch
to see.
at the positives, Nigel. It is a positive, and the market breadth is looking a lot better than what it was same time yesterday. Though there was a recovery from yesterday that did not sustain at the highs, and today's opening also hasn't sustained at highs. But the good part is that the market's made a firm base for itself. Those two lines, that tell you the story of the day. From the word go, they have been maintaining that distance between each other. And maybe this train tracks continue in today's trading session as well.
I thought you were going to sing a few lines of the song.
No, Nigel. Maybe if it sustains and goes at goes to the high point of trade, maybe we'll sing.
Only the first line. After that, it'll be a little issue.
All right, what do? Let's get you some ideas for profit in the meanwhile. Let's get some ideas from our colleagues at Money Control Pro as well. Anubhav Sahu of moneycontrol.com joins in to talk about the stock that he's been tracking. But before we go to Anubhav, the other big Money Control exclusive yesterday of Donald Trump saying to India that maybe there will be a good deal soon has led the markets higher as well. We'll take that. We'll take credit for that as well from our Money Control guys. Anubhav.
Well, talking about Syngene, which is the leading CRDMO player in India, while it has been impacted by inventory adjustment by its key client Zoetis in last few quarters, we believe they are offsetting growth levers around. Now, firstly, a passage of USA Biosecure Act opens up opportunities for Indian CRDMO companies, and we expect that in next 12 to 18 months, there would be strong pickup in inquiries from the biotech firms. Secondly, Syngene has forayed into clinical trials opportunity, which is amongst the biggest sub-segment in terms of market size. Now, in this context, Syngene secured a global phase 3 clinical trial from a US-based biotech company to start with. Then some of the new biologics facilities are on the verge of becoming available. Now, Unit 3 facility is partially operational. Going forward, management expects this facility to contribute to the bottom line by fiscal year 27. Similarly, Bayview Biologics facility is likely to be operationalized in current quarter. Now, in addition, our company is building a new bioconjugation suite in Bangalore to target manufacturing of antibody drug conjugates. Lastly, valuation is at a significant discount to the peers. At the same time, one should note that last 4 years, gross block has gone up nearly 50%, and some of the facilities should start contributing to the bottom line in the near term.
All right, good time to get in Sachidanand to take her on the market technicals right now. Sachi, we've recovered a fair bit from yesterday's lows. We opened well also, but holding on to the green though off the highs. What should one do? Is it a no trade zone? Are you waiting for some specific levels for either direction calls?
Good morning, Mangalam. Mangalam, I think yesterday's verdict was very significant. We saw a very strong recovery, and the Nifty again, managed to, give a close above its 200-day exponential moving average support, which is placed somewhere close to 125,150, 140 thereabout. So I think an occurrence of a spinning top kind of formation near this particular support is a very significant development. But as we see, candlesticks always require a validity in terms of a consecutive closing. So I think going forward, we may see this volatility for next couple of trading sessions. But I think from a trading perspective, now the trend seems to be changing. It's a buy on decline scenario which we are observing observing. In fact, 25,240, 220 is an ideal zone wherein some long positions can be committed when it comes to Nifty. One can keep a stop loss at 25,160 on closing basis. And during this particular week, or probably in next couple of trading sessions, we may see again Nifty, rebounding towards 25,525 to 25,700.
Okay, all right. There's a possibility that Nifty does see a bigger rebound. Sachi, I missed the stop loss.
Good morning, Nigel. Nigel, I think the level at 25,160 is now very significant. We need a firm closing below this particular level just to, invalidate this particular trade. So I think the stop loss can be placed at 25,160 on closing basis.
Got it. Individual stocks you want to help us out with?
Nigel, I think since yesterday, what we have seen is a good development in some of the pharma stocks. And if you look at the structure of Lupin, which has been very significant, we have already seen very strong relative outperformance. Despite of the volatility in the market, the stock was sustaining above its 5-week exponential moving average support. Now, if you look at the overall data set, it looks like a bullish flag formation in process, and we may see a move towards 2220 on an immediate basis. But if you look at the overall pattern structure, it is indicating a price target somewhere close to around 2280. Hence, we are recommending building fresh long positions in Lupin, keeping a stop loss at 2162 on closing basis. The other stock which has come on our radar is REC Limited. Now, it's a very significant development wherein the stock was in a lower top, low bottom sequence since last 11 months. Now, if you look at the recent development, it has already breached from a declining wedge formation, and the recent consolidation now looks like a bullish pennant on the daily scale. So we are expecting a good rebound in this particular counter, and probably we may see the stock again scaling towards its 200-day exponential moving average, which is placed at around 386. And hence, we are recommending building long positions on decline. One can keep a stop loss at around 358 on closing basis and accumulate the stock for 386 targets.
All right, take that point, Sachi. Thank you so much for that. Your individual stock calls as well as your call on the markets. What we'll do is take a short break, come back on the other side. We have the management of EPAC Durables trading with gains after reporting a steady set of the third quarter numbers. We'll speak to them about the RAC business and the others after this short break. Ajay Singhania joins in.
You want to talk business? Meet me in the On-Board Lounge.
The Nifty holding on with gains of almost 135 points. Look at Bajaj Consumer, 16% higher right now. To my mind, the consumer result of the season so far, 31% revenue growth, 80% plus growth in the profitability, EBITDA doubling, margins improving by over 800 basis points as well. All things in the right direction with the company having valuation comfort as well. That stock continues to surge. But the other one on our radar is consumer durables company EPAC Durable. A decent set of third quarter earnings, largely aided by their small and large domestic appliances and component segment, not so much by the room AC segment, and which is why perhaps the stock has moved off the highs as well. Ajay Singhania joins us now, the CEO of the company. Obviously, we will be discussing the room AC down cycle, whether it's a temporary blip, revenue mix changes from non-room AC business, and revenue as well as the margin guidance for FY26. Let's start with the room AC part of the business, sir. That one saw a bit of a dip while we saw good performance coming in from both large and small domestic appliances. Could you give us a sense on whether this is likely to recover? This is temporary in nature because of the inventory that everyone's sitting on right now because of the weather conditions. What's your growth guidance for the room AC segment over the next couple of quarters? And how does this revenue mix change over the next couple of years?
So good morning. With regards to the room AC industry, we all know that the previous 2 quarters, Q1 and Q2, were highly subdued, and because of the unseasonal rains, there was a huge amount of inventory lying in the trade. Thankfully, after the GST reduction, some bit of movement has started. And then Q3, definitely we saw a huge amount of dumping by the brands in terms of the primary sale, although the October, November, December quarter not being a sales dominant season, but still because of the BE change, the inventories were dumped by the brands to the trade. So currently the trade inventory is slightly elevated. But at the same time, looking at the upcoming season, everybody is very bullish that with a strong set of summer, definitely in the entire industry is going to witness a good summer and recovery from what we have witnessed last year. So AC continues, I mean, despite the headwinds in the last year, the strong tailwind still continues. So the long-term story still remains that the industry is poised on 15 to 20% kind of growth over next 5 to 10 years for sure. So AC is still strong. The industry degrew over the last 9 months, and the same is what is reflected in the numbers of EPAC Durable as well. So for us, the shift from AC to the large domestic and small domestic appliances is a strategic shift. And this is something we have been focusing largely so that we could balance the seasonality in AC and also improve our overall asset turn.
Right. So, Mr. Singhania, you believe that demand will come back, right? Setting you up for a good summer.
Absolutely. So the industry is planning somewhere at 15 to 20% kind of an increase over the financial year 24-25 numbers.
Got it. All right. So let's hope that comes to that. But what about your growth outlook? And I think at the start of this year, the indications were you want to grow at around 35% with margins of around 7.5%. Yes. Now, that's not happened in the first 9 months. Realistically, what do you end the year with in terms of a growth number, if at all? Will it be a flattish number? And given that you're optimistic that demand comes back, very carefully, I would request you to tell us for FY27, what could your growth estimates be, sir?
Okay. So first of all, coming to FY26, so since 9 months already passed on, currently we are looking at almost like a flattish to a marginal growth in revenue, despite the degrowth in AC. So the degrowth in AC could be anywhere between 10 to 15%. So that degrowth has largely been set off by the increase in our small domestic and large domestic appliances, and that both the new and diversification products will continue to grow at a much higher rate. Having said that, on margin side, we continue that 7.5 to 8% kind of margin is a stable margin which the company will deliver and further improve upon in a medium to long-term basis. So on a medium to long-term basis, we intend to keep our AC portfolio anywhere between 55 to 60% of the total contribution, the total revenue, and grow the other two, the small domestic appliances, large domestic appliances and components at a much faster rate. So that's the overall strategy we have in place to balance the seasonality and to improve the asset turn.
Right. And between SDA and LDA, what is more margin accretive for you? What is the mix that is likely to be there?
So between the SD, LD, both some small and domestic appliances again have a very distinct season. So large domestic appliances for us is coolers, and then mainly now we're focusing heavily on the washing machine, which is kind of a Q3 product. So that's a product which goes in July, August, September, and then comes the Diwali season where the small domestic appliances picks up. So overall, we are looking at balancing the each quarter by having the right set of products. And margins per se are not very different. It's only at the gross margin level we see in both the categories, small domestic and large domestic appliances, comparatively better than AC.
Right. What about components and maybe, further capacity additions? At what utilization are you? What's the headroom for growth out here? And the components business, I suppose, could be a margin additive as well, right?
Absolutely, absolutely. So components are much better business to do, although the revenue prospects are less, but then, because it's a small ticket size product, so the margins are comparatively much better even as compared to the small domestic and large domestic appliances. So component is where we have grown multifold in last 2 quarters, and we will continue this growth. We see that we'll continue this growth in component business going forward.
Right. So if we ask you, say, FY27, you presumably grow around 20%, given the AC industry growing at around 15%, that's what you're expecting. And then you have other components which will grow a lot faster. 20% would be a lot more realistic, right? Over a flattish FY26, what does your revenue mix look like in FY27 and what kind of margin should we expect then?
So, like I shared earlier, in medium to short term, we are looking to maintain a 55 to 60% of contribution coming from room ACs, and almost 20% from components and another 20% from small and large domestic appliances.
And margins by the end of FY27 would be what, 7.5 to 9% itself?
Yeah, 8%, around 8% plus minus 0.25 is an average guidance. We believe that definitely will
take that point. Thank you so much for joining in and giving us your outlook. Wish you good luck and perhaps a good summer for your business. A good summer for your business, not necessarily a good summer for our experience, but be that as it may, that's the nature of life.
We want to keep the comfortable season and then improve the comfort of everybody.
Take that point. Thank you so much for joining in. We take a short break, come back on the markets and a lot of stock-specific action. Stay with us.
It's still green on the screen, but we have slipped considerably from the highs of the day. Currently, markets holding at around 25,270. The good news is the breadth of the market is still firmly in favor of the number of stocks advancing. It's been a while since I said something like that. Well, let's go across to Gaurav. He's here to tell us about PNB Housing, which is under pressure post the week showing in Q3 numbers. Gaurav, tell us more.
Yes, if you look at PNB Housing, first let's go through the numbers, what they have reported. Net interest income that increased by 10%, while PPOP increased by 8% because there was some pressure from the OPEX that we saw because of the employee costs that increased in this quarter, and at the same time profits that increased by 8%. It was a bit lower than the street's expectation, but let's also go through some of the factors why the stock is down. There are three key reasons. First is that let's talk about the loan growth number. Now loan growth came in at around 14%, and in fact within that, if you look at retail growth, that came at just 16%. Remember, management was guiding for 17 to 18% of the retail growth, although they have maintained their guidance. That was the first strike. Second is that if you look at net interest margins, now they have declined almost by 4 basis points, although it is still in that guided range of 3.6 to 3.7%. This quarter, street was not expecting net interest margins to decline. Management said that there will be some pressure going ahead as well in the likes of 10 to 12 basis points in terms of yield on advances, and that is the reason why, although they have maintained the guidance, there was some bearish comment there as well. Other than that, they are saying that if you look at the disbursement growth, now that came in at around 15.6% on a year-on-year basis. This was the biggest disappointment, and the reason being, if you look at the disbursement specifically in the affordable segment, that came down almost by 15%. This was a negative surprise for the market because given that the company is actually focusing more on the affordable segment, in fact, they also said that the affordable segment is going to get impacted. Not going ahead, but in this quarter specifically, it was impacted because of the Tamil Nadu issue and the governance issue that we have seen from that region. Going ahead, they are confident on bringing back that growth. In fact, they're also saying that this portfolio will be 40 to 45% of their overall portfolio versus what it is right now at 39%. There are some concerns around ROAs as well. Now, going ahead, management says that ROA is going to be in the range of 2.6 to 2.7%, but three key points. First is net interest margins, where they are seeing some kind of pressure. Second is that some kind of setback that we have seen from the affordable housing segment. And third is the credit cost. Now, in this quarter, in fact, in this year, they're expecting credit cost to remain negative, but in FY27, it will come back to the normalized level of 20 basis points. And the street is concerned that to achieve that stabilized ROA of 2.6 to 2.7%, there are many levers that the company will have to move. And that is the reason, if you look at the stock performance, it is currently under pressure.
All right, Gaurav, thanks a lot for that. From a stock which is under pressure to a stock which is at the day's high right now. Bajaj Consumer opened 7% higher, kept moving higher, and now, as we speak, around 16.5% in terms of gains that we're seeing, closer to 16%. Why is that? A stellar set of numbers coming in across all parameters. It is a beat. Why do I say that? Because there was a visible change under the new leadership. Naveen Pandey took over the company a couple of quarters ago, and now the revenues have grown, 31%, 234 crores turning into 306 crores. The EBITDA has more than doubled from 26 crores all the way up to 56 crores, which means that the margins from 11% have also gone all the way up to 18%. The management's guided for it to be around that 20% mark, so there is still some more headroom for margin growth here. The net profit obviously has also, on the back of that, surged from 25 crores to 46 crores. If you look at the internals, a large part of their business, most of their business actually comes in from almond drop hair oils. And if you look at the low unit packs, the sachets, etc., they've done extremely well, perhaps post the GST cut that has happened, which tells you that, demand at the bottom end is reviving a lot faster than the demand at the premium end. And that is volume accretive for the FMCG industry. Double-digit volume growth in Almond Drops hair oil, which is the mainstay of the company. And then non-ADHO portfolio, which is a smaller part of the business, that too grew in mid-single digit. And additionally, Bajaj Coconut portfolio has registered high single-digit value growth, which also is a positive because coconut is a fairly competitive market with the likes of Marico, which are the leaders, and Dabur, which are challengers, also looking to gain market share out there. So the new leader is a former Marico man. Let's see how he performs in the coconut business going forward. But for now, the stock, before these numbers, were trading at 17 times. You would not see an FMCG stock trading at 17 times. It was rightly so because there was no growth. But now, as we speak, growth has come by. The street is taking note of that.
I got that, Mangalam. Thanks for that. Well, let's also listen into some market opinion we got from market veteran Sunil Singhania on the current state of the Indian markets. Let's hear him out.
A lot of parameters are starting to show signs of, I would say, scare at the peak. The number of new lows which we hit yesterday was almost 750, 800. It's a good indication. I think 52-week lows after a not so great year, particularly for broader markets, point that a lot of investors are giving up and just throwing up stocks. On the other hand, on the global side, yes, I think this Trump mania has been reaching peak. But now I would say the good thing is that almost all countries have started resisting it. I would say that even on the mid and small cap side, we are at least being a little bit more proactive and trying to see where we can get value in this, really fearful times. We have a budget coming in. The macro parameters are pretty steady and healthy. Balance sheets of corporates are pretty steady and healthy. Obviously, the external environment is such that growth is right now on the corporate profit front stuck at 9-10%. But looking at the scare and looking at the kind of views and news flow coming in, I would stick my neck out and say that it's time now to start investing. In fact, last 1 week we have been quite aggressive in investing. And it's not about large cap, mid cap, or small cap. It is about stocks where there is visible profit growth and valuations are not out of whack.
All right, good time to look at companies where valuations are not out of whack and there is visibility on profit growth. That's exactly what the street is trying to do as panic sets in. We're holding on to the level of 25,250 right now, though off highs, still sitting with gains of over 100 points. With that, we wrap up on this edition of Chartbusters. You stay tuned. Trading Art comes up next.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia, and the initial cheer in the market is now starting to slowly but surely get replaced by caution. Of course, it's just early days. And Mangalam Malu with me. Mangalam, good morning as well. Well, the Sensex options expiry today, and it's showing some signs of that volatility playing out.
Indeed, Hormaz, it was perhaps the call where you open so much higher after what was a bad day in yesterday's trading session. Though we saw some recovery, there was always going to be some sort of volatility. What today's high does and what yesterday's low does is give us important reference points for the index to now look at on the way up and on the way down. So those are important parameters that we need to track. As we do that, let's also not lose sight of the fact that the mid-cap index is outperforming. More stocks are advancing than the number of stocks that are declining. Let's see whether those lines, which are fairly far apart, come any closer or not. The good part, however, is strong earnings are being rewarded, be it something like a Waaree Energies, be it something like a Bajaj Consumer, or the top Nifty gainer today, which is Dr. Reddy's, which will be our big story. We'll talk about all of that in just a bit. But let's go across to Hormaz once again for all the movers in the market right now. Hormaz.
You spoke of good earnings being rewarded, and we'll start off with that. And you spoke of Waaree Energies, and there are a couple of others as well. Rallis India is one such name. In fact, it's now up 15%, although Waaree has come off slightly from the highs of the day. Then PNB Housing, one of the accidents of today's trading session, is 7% lower. Now, take a look at the volumes at which they are trading at. Waaree Energies has now traded close to 60 lakh shares already in the first couple of hours of the trading session. The 20-day average is just around 4.5 lakh shares. So it's around 15 times its 20-day average already in the first couple of hours of the trading session. Rallis is even better. There's 75 lakh shares being traded already. The 20-day average is only 1.5 lakh. So significant volumes at which the stock is gaining in today's session. And same is the case for PNB Housing as well, albeit on the downside. 20 lakh shares have been traded so far on PNB Housing. The 20-day average here is only 2 lakh shares. So stock declining on volumes that are 10x its 20-day average. Profit booking now on some of the high-flying names from December. Both Hindustan Zinc and Hindustan Copper are down 5% in today's session. Hindustan Zinc is down 5.5%. Mind you, Hindustan Zinc has very little free float in the market. But take a look at the volumes as well here. Hindustan Zinc is trading on volumes that are higher than its 20-day average, but the fall in Hindustan Copper is coming on lower volumes. As only 1.5 crore shares have been traded on Hindustan Copper. The 20-day average is 2.5 crore shares. So keep that in mind, that the fall on Hindustan Copper is coming on lower volumes compared to what it usually is. And lastly, a stock on the outperforming side, Dr. Reddy's, holding on to gains today after its results. It's continuing to remain the top gainer on the Nifty. It has snapped a 6-day losing streak today. And so far in the session, we have had 26 lakh shares that have been traded. The 20-day average is just around 3 lakh shares. So it's gaining on significantly high volumes in today's session. But despite this, though, the stock remains below its key moving averages. And the crucial next levels to watch on the upside are the 50 DMA and the 200 DMA, both of which are placed between 1245 and 1250. So those are the two levels to watch on the upside for Dr. Reddy's. And the stock down around 12% from its record high levels, which is around at 1370.
All right, Hormaz, you spoke about Dr. Reddy's. Meanwhile, also a couple of these earnings which came yesterday, good earnings yesterday, continuously getting rewarded today as well. Credit Access was one of the big gainers in yesterday's session, following it up with a decent gain in today's session as well, up around 9% for that one. Schneider Electric is the other one which is buzzing on decent volumes. That stock is up 10%. And alongside that, we continue to see some traction in CEAT. CEAT is up around 5.5%, reducing the deficit for this week. Not Schaeffler India, Schneider Electric. And we have CEAT, which is up around 6% as well. But let's move on to the big story of the day, the big gainer on the Nifty, that is Dr. Reddy's. Ekta, what did the street like so much?
Well, yes, I'm going to start with what the street liked this quarter, and I'm not going to get into the numbers, really. It was the India business, or everything outside of the US. India was up 19% on a year-on-year basis, and interestingly, the company, licenses products from innovators and sells it in India. These products are basically not your generic products that you get in the pharmacy very easily, but they are innovator products which Dr. Reddy's is selling and allowing the other Indian market to access that. NRT, which is basically the nicotine nicotine replacement therapy business, they had acquired this some time ago, was up 25% on a year-on-year basis. Russia, highest ever quarterly revenue, it was up 51% year-on-year. US was $329 million versus $330 million versus estimates of anywhere between $280 to $310 million. The commentary was positive as well, so that aided the sentiment. The US should grow in single digits, but other markets in double digits. India, 15 to 16% growth is seen as sustainable over the near term. NRT business, the company sees strong upside to the earlier single-digit guidance. 25% is a very solid average for the company is aiming for in terms of margins in FY27. They're expecting to launch the blockbuster semaglutide in Canada anywhere between Jan to May. So this is going to be a pivot, important period to track. And also, they are looking to possibly launch in India on 21st of March. That's the date that they've given. And also Brazil and other major markets by July. So 80 markets is what they're aiming for. Street is looking forward to all of this.
Street is looking forward to it. So tell us what the Street is looking forward to. What are the analysts making of the numbers for Dr. Reddy's?
Well, yes, I'll just get to the key triggers. Semaglutide is estimated to contribute $180 to $200 million across markets in FY27. The bullish scenario goes up to $250 million. Street is working with a contribution of around $85 million in Canada, 100 crore market for India. Remaining should possibly come in from regulated markets. Biosimilars to watch out for. Denosumab, the launch is delayed by 6 months. Abatacept IV, where the approval is expected by the end of this year in the US. Rituximab, where they have received a complete response letter from the US FDA. That could be delayed. Any movement on that would be watched out for. Brokerages, CLSA has upgraded the stock to hold. Motilal has a neutral. HSBC has a buy call. Citi has a sell on Dr. Reddy's.
All right, Ika, thanks a lot for that. So that's about the triggers, what the Street liked and what's lies ahead for Dr. Reddy's. But we also spoke with the management of Dr. Reddy's to understand their business outlook for this fiscal and beyond. Let's listen in.
We believe that the US should grow a single digit, while the other markets we should grow double digit. We will continue to have launches like we normally do. The next big products that likely to be launched in the United States is Abatacept. Before that, we will launch a biosimilar called Denosumab, which will be smaller. So once the biosimilars will kick in, likely that we'll see a higher growth rate than that. The company is busy with the growth, so the growth is giving us those margins. We are containing the cost. The rate of our cost is half of the rate of our sales growth, and this is what is giving us the margins. In addition to the products that you asked, like semaglutide and Abatacept, we are also busy with BD. So the composition of the BD, as well as the compositions of the other elements, will determine if it's 20% EBITDA or 25% EBITDA for this kind of period of time. But overall, the 25% that we discuss is very solid average that we always aiming to do. This is the terminology that Health Canada is using for asking for additional information. They issued it in the end of October, and they got it already at the beginning of November. And we are waiting for the response, hopefully with approval. The approval can come anytime from now to May, because they have, per their regulations, up to 180 days to answer our submissions. It's a very important product for India. We will definitely launch in India once the patent is expired, which is in the later part of March. So we will do that. We are also submitting the product in many markets, more than 80. The other markets that will launch the product will be Turkey, Brazil. I'm talking about relatively bigger market for this product. So Canada, India, Turkey, Brazil, and then, of course, then many markets, as well as B2B. We're giving our products to partners so they can use it, both in India as well as outside of India.
All right, so that is Dr. Reddy's. What we'll do is take a short break. On the other side, SM Lakshmanan, the Vice President, Finance and Accounts of Thangamahal Jewelry, joins in to discuss their third quarter earnings.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Well, the Nifty is now on the verge of breaking that 25,200 mark. It's cut its losses, or rather cut its gains by over 200 points from the day's high, currently at the day's low, and sitting with a gain of just about 50 points. So when we started the show, the gain was about 100 points. That's halved. And a lot of these heavyweights are weighing the Nifty down. So pull up the intraday chart of Reliance. That's moved to the low point of trade. And HDFC Bank as well as ICICI Bank, both of them lower as well. The Nifty Bank struggling below that 59,000 mark, sitting now with a gain of just about 100 points, on the verge of breaking into the red for that frontline index as well. But let's talk about a couple of good numbers that came in. Thangamayil Jewelry reported a good set of third quarter earnings, gold prices, festive season, new stores in Chennai. All of that aided performance. SM Lakshmanan, who's the Vice President, Finance and Accounts of the company, joins us. Mr. Lakshmanan, you know, you had told us when you joined after the second quarter performance that October was the best month for you. You crossed 1,000 crores in revenue there. You upped your revenue guidance from 6,000 to 7,000 crores as well. Now one wonders whether you can do better than 7,000 crores as well, given the sort of surge that we've seen in gold prices or not. So I wanted to understand, one, whether you are revising your full year revenue guidance upwards or not. And the second part, silver. I mean, gold, yes, everyone was, looking at, but silver suddenly came out of the blue and outdid gold so much that despite the correction today, it's still holding well above that 3 lakh rupees per kg mark. What's interesting is that while 95% of your gold exposure is hedged, 65% of your silver exposure is unhedged. So the possibility of you making a big inventory gain in silver in the fourth quarter is very high as well. So if you could give us a sense on, what that inventory gain in silver could be and whether you will cross past that 7,000 crore mark for the entire year or not.
Good morning, Mangalam. Thank you for the opportunity. Thangamay Jewellery Limited has achieved a turnover of 5,661 crore rupees for the 9 months of FY 25-26, registering a retail revenue year-on-year growth of 59%. In terms of volume for the 9 months, gold increases by 9%, silver volume increases by 24%, and diamond volume increases by 28%. As far as the current quarter Q4 is concerned, yes, the tempo is maintained. And to answer your question as well, the company is looking at crossing an annual revenue of 7,500 crore rupees for the financial year 25-26.
All right. And on silver, you 65% of your silver is unhedged. What is the potential inventory gain here that we should look at?
Yes, Mangalam. Silver hedging is at 35% on 31st of December 2025. And to answer your question, yes, the silver revenue composition is very minimal as far as the total revenue of the company is concerned.
Mr. Lakshmanan, good morning. Thank you for joining in. Do you have plans to increase that number first up, or the hedged positions from the current 35%? That's one. And what about further hedging of gold as well? You can just club in that as well.
Yes, to answer your first question, yes, probably the company could be looking at increasing the hedging level for the silver from the present 34%. This first point, yes. The second one is, yes, 95% of the gold inventory is hedged. Since it is almost fully hedged, the company's focus is on the operating profitabilities.
And how much would you look to increase that silver number to, Mr. Lakshmanan?
How much to answer the question, if somebody looks at the Thangamay Jewellery's 4-5 years by hedging levels, it had been around 65 to 75%, which has been elevated to 85% to 95% as a policy. And the company sticks to that policy level, and it is 95% as of 31st of December 2025.
No. What we are trying to understand is silver. And also because, 5% of gold is still unhedged, 65% of silver is still unhedged. The quantum of gains on silver and the quantum of unhedged positions would lead to a decent jump in your EBITDA, even though the overall contribution is not so much. Even on gold, while it is a large contributing business, 5% is unhedged, which will still give you some gains. In the last 3 months or so itself, we've seen a big surge in gold, even over and above what has happened already. So what we want to understand is how much more operating benefits could come in from just this unhedged position, and how much can come in from the structural changes that you're making. Structural changes, you said that 6 to 7% is where the margins will sustain. But beyond that, in the very near term, what kind of gains could accrue over and above that?
Yeah, you answered the question. Since it is a 95% almost fully hedged, the company's focus is on the operating profitabilities. And as far as silver is concerned, yes, the present 34% could be increased to a higher level in the months to come. And the silver revenue composition is very minimal as far as the total revenue is concerned. And that, since we have talked about the EBITDA, let me tell you that the EBITDA margin for the 9 months of this financial year is at 6.67%. as compared to 4.91% of the previous year 9 months. This is predominantly due to the Chennai showrooms scaling up, as well as the non-gold revenue. My non-gold revenue is increasing at 65% year on year.
All right, and you expect that to continue, right? What is your mix coming in from Chennai likely to be in FY27? FY26, you had said it'll be 20%, and you're on track for that. It's about 17% right now. And how much of your revenue will be non-gold in FY27 and FY28?
Yes, non-gold is expected to be on an encouraging trend. It is at 65% as compared to the earlier probably 20s or 30s or 40s percentages. Now it is 65%, and it is expected to continue for all the possible reasons. And as you very correctly said, Chennai showrooms present revenue composition is 17% for the 9 months, and is expected to cross 20% on a full year basis.
Mr. Lakshmanan, what are your plans to open new stores going into the new financial year? You're currently at 66. Where do you plan to take that count to in FY27?
Yeah, 10 new showrooms have been opened for this financial year during the 9 months, taking the net store count to 66. Out of the 10 showrooms, 7 have been opened in and around Chennai and 3 in non-Chennai in the state of Tamil Nadu. As far as the expansion is concerned, yes, the company is looking into the second phase of expansion in and around Chennai from the first quarter of FY26-27.
All right. And could you give us a number on how many stores are you planning to open?
Probably without mentioning a number at the moment, the expansion is on the track and we will try to share the number probably by Q4 end.
All right, Mr. Lakshmanan, pleasure having you today. Thank you so much for sparing time and joining us to discuss your numbers. Wish you good luck for the rest of the year as well. That was the management of Thangamile Jewellery. Stock down around 2.5%, cooled off from the highs of the day. You're seeing it has been a good performer over the last 12 months. So take a short break. Markets being the more important factor here. The Nifty looking to claw some of those lost gains back. We discuss some technicals with Siddharth Rai Mangla of Sid Investing Financial Services on the other side. Very, very volatile as of now. Just a few minutes earlier, we were talking about how the Nifty has trimmed its gains down to 50 points. Now it's back at 100 points on the index. Now 25,250 is where we currently stand. Mangalam has hopped over to the FNO desk to tell us what's happening there. Mangalam.
Well, the market's off highs, but also off lows. So it's a very interesting phase of the market right now. The Nifty Bank, as well as the mid-cap index. The Nifty Bank at one point was up just around 95, 98 points. And in just the last few minutes, it's increased its gain by about 100 points, crossing closer to that 59,000 mark as well. And the Nifty holding around 25,250. But what yesterday's low and today's high have done is given us the range of the market. Yesterday's low was 24,920 and today's high 25,435 becomes the broader range that one needs to watch. But before that as well, if we were to go lower from here, there is strong support in the form of the 200-day moving average on the Nifty, which is 25,124. For the Nifty Bank, it's the 20-day moving average, which is over 59,286, which it needs to cross formidably for the market to move further higher from here as well. What's interesting is that the Nifty put writers at 25,300. Remember, this is an in-the-money put, are still fairly active. 25,300 put writers for a premium of 140 rupees, telling you that around 25,150 thereabouts could be support. And remember, these are options that expire next Tuesday, which also is the monthly expiry of the Jan series. 25,400 call writers, however, are still not throwing in the towel, telling you that around 25,500 or a little over that, where the 100-day moving average of the Nifty lies as well, there would be some sort of resistance. So any rally towards 25,435 and 25,500 could perhaps be sold into. And below that, the 25,200 put writers are also equally active. So short point, 25,150 to 25,100 is an important support zone. 25,450 to 25,500 is the resistance zone. That's what the option writers are playing for. But a lot of stocks are seeing a lot of short covering, Vari Energies being one of them, where the open interest is down, the shorts caught on the wrong side, and that explains why the stock is surging away.
7.5% higher on Vari Energies, but important levels highlighted there by Mangalam from the FNO desk. Siddharth Rai Mangla, the founder of Sid Investing Financial Services, joins in for a quick chart check. Siddharth, good morning. Thank you for joining in. Does this kind of move also warrant extra caution now on the index? We crossed 25,400 intraday, cooled off back to 25,200. Now we are heading back towards 25,300. It's very, very choppy right now. What do you do in a market like this? Your levels on the index and your stock calls for the morning.
Yes, sure, Hormoz. Hi, and thank you for having me on the show, first of all. See, Hormoz, if we talk about Nifty, I was just discussing this just yesterday with Nijal and Prashant that on a positional basis, purely on a structural basis, Nifty's structure has been clearly distorted since we closed below 25,400. And now, as long as we do not go back and close above 25,400, every bounce back in Nifty will be an opportunity for us to go short. My view remains quite the same even now, that as long as we are below 25,400 on the index, the room is open for a fall towards 24,800 and 24,600 because the structure is not looking very good. But only after we see a closing above 25,400 on the index, then we can start making long position, because right now amid all this volatility, the structure is definitely weak.
All right, structure is definitely weak. So what do you do? Individual stocks, how do you play them? Do you have long shorts or do you have one long and one short?
Yeah, sure. Hi, Mangalam. See, I have one long and one short, a balanced approach in a market like this. So first, the stock which we have to go long on is Jindal Steel. See, the stock is completely moving independently from the market sentiments from the last, even today in today's sessions, there is a very good breakout in Jindal Steel. So Jindal Steel can be bought right now. The spot is around 1072. We'll buy it here. The stop loss will be at 1055. And our targets being the first target 1110, the second target being 1130. The second stock, and this one we have to short, the name is Muthoot Finance. After all the good momentum which we have seen over the last 2 months, finally I'm seeing a sign of turnaround in today's session from the stock's highs, and we've also seen a breakdown. So Muthoot Finance we can go short. The January futures are trading around 3820. Right now, we can short them. The stop loss will be at 3870, and our targets being the first target 3700, the second target being 3650.
3650 towards Muthoot Finance, crossed almost 4,000 intraday yesterday. Siddharth, thank you for sparing time and joining us today. Your views on the index and on specific stocks as well. Continue our conversation on the markets on the other side with Mukul Kochar from Investec Capital Services on the other side. Welcome back. Still looking to remain at those 25 to 50 levels is where the index is currently at. So 90 points higher now on the Nifty. But the big talking point today, at least here in our markets, has been silver. The fall in silvers. The futures now on MCX are currently flat in comparison to their earlier fall of 4%, as you could see at the bottom of your screens. But you can't say the same for the ETFs. The ETFs of various funds dealing with silver are still trading with sharp cuts. At one point, they were down almost 18 to 20%. At least now, for now, they have trimmed some of those losses. They were 18 to 20% lower. Now they are 8 to 12% lower for some of those ETFs. Now, what caused this fall? At least in the global markets, overnight there was a fall because of the fact that the sentiments, again, the risk of sentiments ebbed because of Donald Trump's statements on Greenland, on Iran, and of course he pushing back on the tariffs as well, that he would not be implementing them from the 1st of February. That led to a rally in the risk assets. But surprisingly enough, the prices and the spot prices in the global markets are not falling in today's session, but the ETFs are seeing sharper cuts. The story here is the fact that over the last 40 odd trading sessions starting the 1st of December. Take a look at the leveraged positions here. Now, this is as per the disclosures on the margin trading facility, the MTF book on the NSE. You take a look at the leveraged positions that have risen. Starting from the 1st of December, the silver ETFs of Nippon AMC had an exposure of around 472 crore. That number has increased to almost 1200 crores as of the 20th of January, from where the data is available until. And the same is the case for the others, ICICI Pru, HDFC, SBI, Kotak. All of them have seen their leveraged positions go up in the silver ETFs anywhere between 3 times to 4 times, starting the 1st of December until the 20th of January. That is the kind of leveraged positions increase that you have seen in the silver ETFs. And now that these ETFs are declining today, owing, of course, more so because of the lack of liquidity as well, the fall is even more sharper. Now, starting off this year till date, the spot silver prices were up around 30%. They're still at those same levels because they haven't declined today. The Nippon Silver ETF, which has the largest leveraged position, was up 45% going into today's trading session. So it rose much more compared to the spot prices. So a bit of a mean reversion that's coming in for these silver ETFs today. Now, on a similar context, Nikhil Kamath of Zerodha had written on his social media platform on X that the MTF book in general overall market has grown up 5x since the COVID period. And we have spoken about this on CNBC TV18 as well multiple times in the past year. And he said that it is much harder to manage risks in the MTF business. And he goes on to warn that the next major correction could trigger synchronized liquidation of positions, because we have not seen a major correction phase like we saw in 2008 or 2015 or even the COVID-19 period. That's the warning that Nitin Kamath has had on Zerodha. But silver ETFs recovering slightly from the lows, but continue to remain a major talking point. But taking that conversation forward with Mukul Kochar, the head of equities from Investec Capital Services, joining in. Mukul, good morning. Thank you for joining in. Since we're on this subject, do you have your views on silver? The kind of moves that you have seen on over the past, let's say, 2 or 3 months. Your call here on silver and on the precious metals in general.
So first off, disclaimer: we are not, commodity analysts. We are equity analysts. But I can give you a broad macro thought on this. I mean, don't read too much into it though. There is this move away from currency reserves to precious reserves globally, and that started a rally in gold, which has now sort of gone into silver. The only difference being that silver has industrial uses, gold not as much. The second difference between silver and gold is that silver is a byproduct. It's not sort of, produced in silver mines itself. It's a byproduct of zinc and gold. So per se, there cannot be as much of a supply reaction as there is to gold. The only thing now I'll caution, So silver, so first of all, silver seems to be more grounded because there is industrial uses, more demand, etc. But at the end of the day, the speculative frenzy is very visible, both in gold and silver. The only thing I'll warn, actually, when it comes to gold is, the buyers are one-sided. So their foreign exchange reserves in large countries are being sort of replenished. People are switching from, even India is doing that, from hard currency reserves to gold reserves. So it's a one-sided buying of inventory which is limited, which is causing a one-sided reaction on the upside. What happens when these countries decide that they've had enough here? This is the problem with trying to sort of value or make a call on assets which don't have underlying cash flow. They're essentially speculative. So I'll refrain from that, but I'm generally sort of cautious on these kinds of moves.
All right, you're generally sort of cautious on these guys, and we take the disclaimer well as well. But typically what happens is that, when an asset class starts to move higher, it does find a lot of people's interest into that, and then perhaps they try to, build their expertise in understanding that asset class as well. But be that as it may, I remember you saying that the Trump deal or the India-US tariff deal should happen sometime last year as well. That's what the consensus was. That didn't happen. The consensus now is it will happen sooner rather than later. Yesterday we got comments from Trump, but there is still uncertainty over when that will happen. So that's one point. And amidst all of this, the global uncertainty, what do you make of the earnings season so far? And a lot of these stocks which have taken a sharp nosedive, is anything looking attractive to you? What's your view on the market right now?
Yeah, thanks. So, last year, May, June, July, even going into the, July announcement that the tariffs, that there'll be a deal on hand, we were constructive that the deal would happen. But post-July, when the deal did not happen, honestly, we took a rather cautious view on the market as well. Speaking a little bit about, the currency risk and hence the risk to the market. That played out, played out in full and in some manner more than what we were even thinking. Rupee crossed 90. I think now is a time to take the look at data points that are collecting on the other side, because sentiment super bearish. We have been meeting clients both in India and overseas. Sentiment's pretty one-sided against India today. A big part of that thesis is the currency. If you look at the underlying dynamics of the currency, though, they have genuinely turned. In November, December, you won't believe it, the big topic of discussion is the current account. But in November, December, our calculation, current account was probably neutral to positive. And that data will come out later. But honestly, the underlying data has already started, improving. Specific to the trade deal, it has become very complicated from, a sort of a simple discussion. There's, personalities got involved, et cetera, which everybody knows about, and I will not speak on that. But it's a US deal is somewhat complicated today. And honestly, anybody who's involved in the market knows this, so I will not sort of come out with, specific points there. What has actually changed is the progress with the EU deal, And that to me is something that one should pay attention to. Just to give you an idea, as an overall trade partner, EU is a larger trade partner with India in terms of exports on a monthly basis run rate. It is equal to the US. In terms of textiles, it's a bigger opportunity than US. EU is a bigger importer. And we have a clear pathway to replacing Bangladesh in the EU. So very, very positive for certain sectors. And by the way, this is very incrementally, supports our current account even better, and hence the rupee. So what has also happened is our move with the EU. So US's view was that, if we push India enough, their only choice is China, which they will never go with. If we push them enough, they will sort of give in some manner. By signing a deal with EU, we open another economic access and give ourselves choice, which the US also has noticed, by the way, and that's why the Pax Silica announcement by the US ambassador to India. So things are moving there. I mean, I think the bigger thing to focus on is to get the EU deal done. There's a ratification by the EU Parliament that takes a little bit of time, but exceptionally positive, I would say, in some manner as good or if not better than the US deal. And then, the US sort of handle the US pressure and sign a good deal that makes sense for us. I think the US deal will take a little bit more time. Pax Silica is a very good announcement if it happens for India. But overall, I think, give it a few months and the US deal should also fall in place.
Short on time, Mukul, but not short on questions. So we'll have to wrap here today. Thank you so much for sparing time and joining us today. The views on the markets. Take a short break. Corporate conversations on the other side. We'll be joined by the MD and CEO of Canara HSBC Life Insurance, Mr. Anuj Mathur, on the other side. Stay tuned.
Fly Emirates, fly better.
Welcome back. The market remains to be choppy. The Nifty at one point was higher by 100 points. In just the last 15 minutes or so, that has been sold into, now sitting with a gain of 50 points. So that's 50, 150 has happened a couple of times in just the last 20 minutes or so. But amidst all of this, a stock that has been gaining is Canara HSBC Life Insurance. Good performance coming in. Anuj Mathur, who's the MD and CEO, joins us now. Thanks a lot, Anuj, for joining in. Congratulations on a good set of numbers. You know, your APE and VNB growth for the first 9 months stand at 22 and 37% respectively. How has the growth in January been? What's your outlook for the full year on both APE and VNB? And also on VNB margins. At the first 9 months, they're improved by about 200 basis points, slightly shy of that 20% mark. Do you think you can end this year with 21, 22% on the VNB margins? So APE, VNB and VNB margins, if you could give us these three numbers.
Sure, thanks. No, first of all, thanks for having me on the show. This period has been really good for us. If I talk about 9 months, which ended on 31st of December. So our AP growth has been around 22%. And compared to the industry, we have done much better in terms of our AP growth. Particularly if I talk about the quarter, then it's even higher. I would like to mention about overall environment which is there in terms of how the insurance industry is growing and what is the outlook. So we see a very positive outlook now, and with the GST exemption which happened in September, now we are seeing actually green shoots out of that. We are seeing increased demand from customers and particularly protection. So as a company, we have done pretty well. And if you look at our VNB margin, it's about 19.7%. And this is after taking impact of GST and some provisioning on account of new labor code. So that way we have done well. And few other parameters I would like to touch upon is also a persistency, which is very important from insurance perspective. So our persistency, 13-month persistency has touched 85.6%. It's significantly higher than what we saw last year. So overall, across parameters, if I talk about, we have seen very positive traction. And we feel that this will continue. I'll not like to give very short-term guidance about January and all that because it's very difficult to predict month-on-month movement. But in terms of our business growth, what I expect is in line with the guidance which I had given last time also, that we expect our AP growth of about 18 to 19%, which will be higher than the industry. So that is in terms of the AP outlook which we have for the business. And we hope the next 3 months are going to be really good for us and as well for the industry. And in our case, we are going to focus a lot on protection. So I think that should help us in further kind of sustaining our VNB margin and also good profitability.
But 18 to 19% is something which is done already, right? 22% is what you've done in the first 9 months. With the last quarter left, obviously, unless you're expecting a bit of a decline in the last quarter, 18 to 19% is a given. Would you not want to revise that upwards?
See, it's better to kind of go for a better outcome rather than giving a guidance and then not meeting it. So I believe in maybe committing less and aiming for higher. So as I mentioned, very positive about our business. So let's see. I think in next 3 months, we'll get to know the actual numbers.
Yeah, Anuj, under-promising and over-delivering is what you are planning on doing. We'll hold you to those numbers, of course. But in your first 9 months, your ULIP share was down to 42 from 45, and your protection share has increased to 30 from 26. Now, where do you plan on taking both of these numbers to? Do you plan on trimming the ULIP share down further or maintaining it at these levels and the share of the protection business as well?
Right. See, what we have seen in the last 9 months is actually good demand coming from customers for ULIPs. So that's where our current ULIP mix is on the higher side. Yes, we plan to increase our traditional mix in these 3 months. And my projection is that we should end the year somewhere around 55% of ULIP and 45% of traditional. And having said that, I would like to mention that as a company, our focus on protection has increased. So even when we are selling ULIPs, we are offering protection riders to our customers, and we have seen very good uptake from customers in terms of these protection riders. So that's helping. And I think our overall protection focus, which includes credit life, which is the credit protection plans which we sell, as well as the individual protection plans, we see we are looking at good growth happening in the next 3 months. So we are quite bullish on protection. Our protection mix has increased. It used to be 4%. It is now currently about 7%. And this is an area where we are focusing now.
All right. So that's about, protection. Just a final question before we let you go. The GST impact, that has come down from what, 185, from 225 to about 185. How much further can it be rationalized? And the second part, there has been a lot of discussion around controlling commissions. Would you agree that distribution costs are very high right now? If, the regulators ask you for an itemized, disclosure, would you give that? And at what level would you be comfortable for not just yourself, but the entire industry? Do you think that's coming?
Right. So I think your first question was around the GST impact on VNB. Yes, so last time when we said the impact could be without management actions around 2.25%. Now we predict it's going to be 4%. We have taken several measures actually, which includes controlling operating expenses, as well as I mentioned, in terms of protection, increasing our protection mix. So I think this is what we should end the year without any management actions around this number. So we are expecting that with management actions, it should be slightly better. So that's the kind of projection which we have on the impact on VNB on account of GST. We have taken several measures, and I think in the next 3 months, we'll see the final number. And let's hope so that it should be better. So that is on the VNB and the GST impact. About the distributor commission, I think there is news there in the media in terms of rationalization of commission. And I think whatever the regulatory directive will come, we will always abide by that. And I'm looking forward to guidance coming on this area from the regulator side.
And you are okay with continuing, the cap on expenses management, or there is also this thinking around, lines of deferred commission on life insurance. Do you think that will happen? So there will be either capping of segmental, commissions or the lines of deferred commission model. Which one would you prefer?
See, I'll not speculate in terms of what is going. But yeah, deferred commission is something which is always good because that also helps you improving your persistency and all of it and the impact on customer return. But we would like to wait for the final guidelines to come in terms of what structure the regulators. But in terms of expenses of management, we are very comfortable because our cost ratios are very favorable. So we never had that challenge in the past. Neither we are going to have that challenge in future. But any regulatory decision on this account will be welcome from our side.
Anuj, thank you so much for sparing time and joining us today to discuss your numbers and the road ahead. Wish you good luck for the rest of the year as well. Take a short break. More on the markets on the other side. Stay tuned.
The indices holding in the green, but mildly so right now. 40 points for the Nifty. It's been choppy ever since, the last half an hour in particular has been more so. The Nifty is off the highs, off the lows, still sitting with gains across the indices. The Sensex is just about, less than 0.1% higher. So we'll monitor how that goes along with the Nifty Bank, even though the mid-cap index does well. We'll leave it to the team of Halftime Report to take the market action forward. That's it from Hormaz and me. Thank you for watching.
Market off, days high after soaring in opening trade. Trump rules out use of force or tariffs to take over Greenland. PSU banks, industrials and healthcare are the big gainers, even as Realty drags.
Dr. Reddy's gains after it beats estimates in an expectedly subdued quarter, but the outlook for FY27 is positive, with the key drug launches expected to make significant contributions.
Eternal delivers a strong Q2 with all-time high food delivery margins and heady growth, coupled with positive adjusted operating profits at Blinkit almost on cue. Dipinder Goyal steps back to let Albinder lead as CEO.
Silver ETFs see sharp cuts as the futures for the precious metal on MCX take a dip. The elevated margin positions in several silver ETFs leads to sharp drawdowns after outperforming spot silver prices.
I have great respect for your Prime Minister. He's a fantastic man and friend of mine. We're going to have a good deal.
US President Donald Trump praises Prime Minister Narendra Modi in a mega money control exclusive, calls PM Modi a close friend and expressed confidence that India and the United States will have a good deal soon. Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me Sonal as well as Vinny. Well, it is possibly that, bite from Donald Trump, which has probably enthused the markets a little bit, and the fact that there will not be anything too intense in terms of the Greenland steps as of now. So that's probably what the markets are taking cue from. But as of now, off the day's high for the markets, we have the Nifty, in fact, 247 points off the day's high as we speak. But the mid-caps are managing to hold up around 0.6% currently for the mid-cap index. The Bank Nifty absolutely flattened out. And that seems to be the pressure point in today's trading session. The banks, which are seeing incremental profit booking at this point in time, along with Reliance, which is seeing some amount of profit booking as well. So that stock should come up for you. A lot of results to watch out for, which we will be discussing all through the trading session. But we do have big numbers to reckon with. So do watch out for the likes of Interglobe Aviation as well as DLF, Bandhan Bank, to name another few. Hi, guys.
Hey, girls. Good afternoon. That's exactly the point, right? Earnings trickling in, so much happening globally. Comments coming in from Donald Trump as well. For our own markets, we are closer to the day's low than the high. It's been quite volatile, you have to say. For now, the Nifty, yes, it's up 44 points, but it is off the lows, off the highs, and managing to be in the green as we speak. The mid-caps, though, they are outperforming, and we'll discuss a lot of it on the show today as well. But Winnie, it's all about what's happening globally, and especially earnings, massive reactions to that.
Absolutely. Globally, what is happening, commentary that comes in, as well as a lot of earnings reaction is what we see coming in today as well. And a lot of movers today also, even in the broader end of the market, are back on the back of the numbers. So we will be keeping an eye on that. We'll take you all through all of those details as well. Keep an eye out on PSU banks, though. They are managing to hold on to some bit of a gain in the trading session as well. But what's on the show for you all today? We bring you all you need to know on ICICI Pru Small Cap resuming subscription in our new segment, What's Trending segment. We will put the spotlight also on silver ETFs, which are seeing a sharp cut as the future of MCX takes a dip. As well as we'll speak to the management of Rajratan Global on the back of their December quarter earnings. Later on in the show, we'll connect with Rahul Purwar, who is of ImmunoAct, as Cipla partners with ImmunoAct to launch CAR T therapy for blood cancer in Africa. So that's all that we have, and a good lineup for you all on the show today. But first up, let's bring on board our first management for today. That is Rajratan Global Wires. They reported a strong set of numbers in Q3 FY26. This is their highest ever quarterly volumes, but margins came in a bit flat. So we're going to be discussing all of that with the CMD of the company, who is Sunil Chordia at Rajratan Global Wires. Sunil, good afternoon. Thank you so much for joining us on this show. Let's talk about the numbers. Volume growth, very, very healthy growth, Sunil. What can we expect in terms of overall outlook for FY26? Do you think revenue growth is going to be much better than what we've been seeing in the last couple of quarters as well?
Yes, thank you for inviting me. And as communicated to you during my last interaction with CNBC, we said that we are focusing more on volume growth. This time market is competitive, but we don't want to lose the market share. And we have demonstrated a strong growth in last 2 quarters in volume and on the top line. Of course, margins are under pressure because market is competitive. We have global competition in our Thailand operation, and even in Indian market, this product has overcapacity. But Rajratan is very much geared up to regain its market share.
Mr. Chordia, you spoke about volumes being the focal point now, right? So does it mean that margins will continue to be below that 15% mark? That was the peak that you had achieved. So is it fair to assume that it will be at the current mark, 13 to 13.5%? And to gain market share and focus more on volumes, are you taking price cuts? How are you gaining that market share?
No, we are not doing price cuts, but now we have started taking orders from customers where prices are not so good. Okay, because we have open capacity in our Chennai location, and our first target is to fill up the capacity in Chennai.
And what about the margins?
And margins will continue to be like this. I don't expect margins to improve because there is a price increase in raw material in this quarter. Even that will have some impact on the price. But increasing volume will compensate for the price increase as well as competition. And because making more volume also reduces our cost of production, which we are able to pass on to the customer and gain major volumes with the same margin.
All right. Well, Sunil, actually, I just wanted to sort of narrow down on that incremental or the raw material cost that you spoke about this quarter, which did impact you all. Can you just tell me what the impact was, say, from the higher commodity price cycle that we're seeing on the company?
So we have seen around 3% increase in the raw material price in the current quarter, in the first month of the current quarter, and it is likely to further increase. We have been able to pass on the price increase in some cases, but generally there is a 1 quarter lag in price in getting the realization from the customer, and because our volume growth is very high, we are able to absorb this. We are able to compensate the price increase in raw material by reducing the cost of conversion.
But
so I think our margin will remain intact at 13-14%. Yeah.
Oh, okay. So you're expecting that margin to remain intact at 13 to 14%. You did mention Thailand in your first answer. If you could just elaborate a little bit, because it seems to have seen a good recovery after around a 5% growth that you saw in Q2. Just tell us what led to this volume growth that you've seen of around 37% in Thailand. And are we going to see that continue in the coming quarters, or is this a flash in the pan?
Yeah, no, it's not a flash on the pan. This will continue because we have done a lot of efforts in global market. We are selling bigger quantities in US market. We are now regularly selling products in European market and also in Southeast Asian market, along with higher market share in our Thailand market. And this will continue. So Thailand will continue to grow at 20% volume year on year.
Okay, we'll continue the strong growth in Thailand as well. Also, I just want to understand now, overall, obviously, the Indian auto sector that did get a bit of a boost and a bounce back given the GST cuts that came in, and that is sustained. Could you explain us the mix that is there between replacement as well as OEM as of now for the company?
Yeah, so we supply raw material to tire companies, and we don't know how much of that they are using for replacement or OEM. But yes, 70% of the tires go for replacement market and 30% go for OEM market. And the tire market is expected to grow 12% this year, which is a very good growth this year. And of course, it is supported by a cut in GST. So there is a better demand of tires, and I think this will continue for one more year.
Mr. Chodia, you mentioned that you want to fill up your capacity, the Chennai capacity especially. What was the capacity utilization in Q3 once more order come in? Because now you're taking customers which are priced lower as well, right? What will it look like by the end of FY26 and FY27, resulting in the volume growth that you're talking about?
Yeah, so Chennai in the first phase, we had a capacity of 30,000 tons, which currently is utilized 70%. But simultaneously, we have decided to invest in the remaining capacity. So phase 2 of the production has also started, and we are ramping up capacity to 60,000 tons very soon. And next year, we target to produce 35,000 tons out of 60,000 tons capacity in Chennai. So Chennai is the plant where we have continuous growth targets. Yeah.
Okay. Just quickly, you did mention it's a very competitive environment now. Just tell us where exactly is the competition coming from, and how do you expect that to trend in 2026?
Yeah, so our competitors in India have also increased capacity. Rajratan has put up a greenfield project in Chennai with doubling the capacity. So Indian market has overcapacity, but we are not. We are able to compete with that. Okay, and in our Thailand operations and global market, we have competition from China. But you should appreciate that in spite of competition from Chinese players, we are profitably growing in Thailand, which is a good thing for Rajratan.
Sure. That's great to hear, sir. But thank you so much today for joining in, telling us the outlook of the company as well as what we should watch out for in terms of capacity utilization. That's the management of Rajratan Global Wires joining us on the channel. But we're going to step into a very short break. And here's a note for you all. The countdown for Budget 2026 is underway. The most influential voices decode and analyze the impact of and policy decisions from Finance Minister. We bring you a power-packed lineup throughout January and on the day of budget. Helios Capital Sameer Arora for all things market, followed by JP Morgan Sajid Janoy to discuss the macro signals. We also get you insightful analysis from industry veterans and Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric.
Welcome back. Positive advanced decline ratio in today's trading session. But let's focus now on our What's Trending segment today. A key development in the mutual fund space, ICICI Prudential Mutual Fund is reopening its small cap fund from January 23rd, allowing fresh investments. This marks a rollback of curbs imposed in March 2024 amid stretched mid and small cap valuations. Sonal is here to give us more details on this, and then we're going to answer a few of your small cap queries with our technical expert as well. But Sonal, over to you.
Well, it's an important update that has come by. ICICI Prudential Mutual Fund, they have resumed their subscription in small cap fund. This is with effect from tomorrow, that is 23rd of Jan. Now, do remember back in 2024, where there were so many conversations about frenzied rally in small and mid caps, SEBI had indicated and asked AMFI to talk more about investor protection. There were stress tests which were taken as well by different mutual fund houses. So on 13th March, they had discontinued this on the back of stressed valuations. In fact, in Feb 2025, S. Narain, the CIO, had indicated that there is overvaluation in mid and small caps, saying that the market cap growth has actually outpaced profit share as well. Now, let's talk about some data here. Since the time they shut subscription in this particular fund, remember, the existing investors could continue their SIPs, but they did not take any fresh registrations. So from March to December 2024, small cap index surged 30%. And since then, the small cap index is down 15%. So after that surge that came by post halting subscription, there was still a surge that came by in small caps. Now, if we talk about the performance, the scheme has been flat in last 1 year. On a 5-year basis, they have seen returns of 22%. And since inception, it has seen returns of 12.5%. The fund manager is Anish Tavalke, and some of the holdings, they'll come up for you on the screen. Jamna Auto, SKF India, Amara Raja, Hero Moto. There are some large caps as well, because it will have some proportion of large caps. All the other names, Supreme Petro, Tata Chemicals, a segment which has not been doing well. There's Oil India, 3M India, DCM Shriram, EIH, to name a few. But of course, it doesn't go on to say that since they've started subscription here, the small cap index or small cap stocks, all of them will rally, because they did see a rally after shutting down subscriptions and registrations as well. So this is the point that I wanted to make. Other than that, they have also reopened funds for subscription, which include the US Blue Chip Fund, the NASDAQ 100 Index Fund. A lot of it is, of course, because they would have some limits in terms of LRS, and Strategic Metal and Energy Fund as well. But yes, this is the idea on small cap funds. They still have no subscription for the mid cap fund, which was shut at the same time.
Absolutely, that's the update there, the latest update that we have. But market veteran Sunil Singhania says that he is turning proactive even in small and mid caps to find value in these for rally. Listen into his view.
A lot of parameters are starting to show signs of, I would say, scare at the peak. The number of new lows which we hit yesterday was almost 750, 800. It's a good indication. I think 52-week lows after a not so great year, particularly for broader markets, point that a lot of investors are giving up and just throwing up stocks. On the other hand, on the global side, yes, I think this Trump mania has been reaching peak. But now I would say the good thing is that almost all countries have started resisting it. I would say that even on the mid and small cap side, we are at least being a little bit more proactive and trying to see where we can get value in this, really fearful times.
Okay, all right. So that's the view coming in from Sunil Singhania in terms of the broader markets. But let's get to our tech guest then. Ajit Mishra joins in from Religare to answer a couple of the queries that we have, which have come in on the small cap space. Well, Ajit, thank you very much for taking the time out. Let's get to the first question that we have. We have Sanjana Kapoor, who in fact writes to us from New Delhi. She asks if she can enter Gujarat Ambuja exports at current levels. What would you recommend to her?
Yeah, good afternoon, Ekta. So Gujarat Ambuja export definitely looks promising in comparison to what we have seen in the small cap space. The index, what Sonal was just sharing, is down roughly around 15%. The stock has also witnessed decent decline, but from the last couple of months, we are seeing noticeable recovery with volumes. So she can consider accumulating even at current levels. Now 125, 128 is his immediate base. So with that as a stop loss, she can hold her long positions with 165, 170 as a position targets.
Okay, all right. So that's about Gujarat Ambuja exports. The other one is coming in from Shweta Jain, writing to us from Mumbai. Holds 50 shares of Electronic Smart India at 100 rupees a share. Wants to know whether to stay invested or sell at current levels. What's your take on this one, Ajit? Almost at that same level, at around 87 rupees a share.
Yeah, so we are seeing that majority of the counters from this space, they are witnessing pressure, but EMART likely to stabilize around the current levels. So she can definitely continue to stay put. But the recovery time could be slightly higher. So with roughly around 80 as a stop, she can continue to hold her positions.
Okay, all right. That's on the queries that we have today. But overall, Ajit, what would you say with regards to what you are seeing in the broader markets? Because we are seeing this BSE small cap index already underperform on a year-to-date basis. It's down around 7.5%. It's recovered from yesterday's low. But nonetheless, do you think that the index and the mid caps where they are placed right now, technically, we could see further downside?
So Ekta, mid-cap index have recently made a new record highs in line with what we were seeing in the benchmark index. But at the same time, small cap, though there was marginal rebound, but could not, see any kind of meaningful recovery. And now we are at the 52-week low as well. So definitely, mid-cap definitely has an upper hand. But yes, here also one needs to be selective considering the kind of volatility that we are seeing in the market. But yeah, small cap definitely indicates a possibility of further correction. So roughly around 16,000 in the Nifty small cap is something that we are eyeing as an immediate support. In case if the index fails to hold this area, then probably we may see further decline to about 15,600 mark.
Okay, take that point, Ajit. Thank you so much for joining in today with your index levels and specific small cap queries that our viewers had today. With that, we'll slip into a short break. But as we do that, here's some good news for our viewers. India's business news leader is now click away, introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Fly Emirates, fly better.
Welcome back. Some pickup in the markets. The Nifty is now up 100 points. So it's been quite volatile. We'll be tracking those market moves closely. But for now, yes, there is some recovery which is underway. But what's seeing a sharp cut is silver ETFs as the futures for the precious metals on MCX take a dip. Hormuz is here with more details on what's happening here. Hormuz.
You know, some very interesting moves that you're seeing in the silver ETFs today, particularly so because of the fact that the spot prices on the global markets are not down and the futures on the MCX have also recovered from the opening lows. And you can see that in the price action from these ETFs as well, as most of these ETFs at one point early morning were down anywhere between 18 to 20%. Now they have cut their losses down to around 6 to 12% for most of these ETFs. And it so happened because of the sentiments in the global markets going a bit risk off, the risk on sentiments were slightly returning because the risk off sentiments ebbed after remarks that Donald Trump made yesterday at Davos with regards to Greenland, with regards to Iran, and pulling back on the tariffs as well that he was going to implement from the 1st of February. So all of that played a part. The story here, though, is that the rise that you have seen in silver as a commodity over the last, say, 38 to 40 trading sessions starting the 1st of December, it has had a corresponding impact on the number of leveraged positions that you have seen in these silver ETFs. Now, take a look at the Nippon silver ETF as well. At the 1st of December, the MTF book disclosures show that the exposure here was 472 crore in terms of leveraged positions. As of the 20th of January, that position figure went up to almost 1200 crores. Same is the case for ICICI, Pru, the HDFC, SBI. All of their silver ETFs have seen their leveraged positions go up anywhere between 3x to 4x from the 1st of December. And on similar lines, Nitin Kamath of Zerodha also wrote on X yesterday with regards to this MTF book, something that we have also at CNBC TV 18 spoken about multiple times in the past year. He mentioned that the MTF book has gone up significantly since the COVID-19 period, although it is extremely difficult to manage risk in this MTF book. And in case there is a correction, there will be significant issues because of the fact that the liquidity when the markets go up is decent, although when the markets go down, that liquidity dries off. And in case there is a severe correction, the next phase of correction that comes in, it could lead to a synchronized liquidation of positions, and that would not end well. And that is something that he warned of on the social media platform X. But as of now, the silver ETFs are looking to recover from the lows of the day, but it's been a very, very volatile session for the commodity as a whole.
Absolutely. Well, maybe the geopolitical risks ebbing a little bit has resulted in that, Hormuz. Thanks very much for joining in and giving us that perspective on gold, silver ETFs, which are really one of the key focuses in today's trading session. But let's shift focus to the pharmaceutical space. Just a few days ago, we heard that Cipla has partnered with ImmunoAct to launch a particular CAR T therapy, which is basically used for blood cancers. This will be in Africa. Do note that Loris Labs holds around 33.86% stake in ImmunoAct. Now, to discuss this and more, we have Rahul Purwar, who's the founder and chairman at ImmunoAct, joining in. Mr. Purwar, thank you very much for taking the time out. And firstly, congratulations on this particular tie-up with Cipla. If you could just give us the details for this particular drug. Is it already available in India? Is this Nexcar, which is now going to be, distributed in Africa by Cipla?
Thank you, Ekta. Yes. So Nexcar 19 is one of the first product came out of ImmunoAct for the blood cancers like leukemias and lymphomas. And this is the product which we are licensing and partnering with Cipla. And this is our platform was developed at ImmunoAct, first product from this platform.
Okay. All right. But how is this particular CAR T therapy doing in India? Can you share some numbers with us?
Absolutely. So far we have treated almost 600 patients using this CAR T, which is phenomenal progress in last 1.5 or 2 years. And product is doing very, very well. And it is supplied to almost 70 different hospitals across the country. As you may be knowing that cell and gene therapy platform is one of the complex platforms, and it is considered one of the very difficult or complex technology. Was not available until recently in India. And ImmunoAct brought this product not only accessible to the mainstream hospitals, but also in the tier 2 hospitals.
Okay. What is the pricing? If you could just apprise us of that, because I know it is much cheaper than the foreign counterparts. But if you could just reiterate the price difference to us, and what would Cipla be, selling that at in the African nations?
Yeah. So in India, we have brought this product at a fraction of the cost what compared to the other countries in the Western countries, where the product only costs around $500,000 US. In India, it's almost like 1/10 of the cost. And as you can imagine, this product was developed at IIT Bombay in partnership with Tata Memorial Hospital and supported by many government funding agencies as well, along with the Laurus Lab, which invested in ImmunoAct. So the pricing in India is a little different. However, when it goes to Africa, again, I think the pricing would be very, very significantly different and affordable to the African patient. And as you know, that Cipla, being the pioneer in very high quality, affordable healthcare, what they have done in year 2001, when they brought the HIV medicine almost at the fraction of cost to Africa and the entire world, I am hoping that Cipla and ImmunoAct partnership, this will lead to really revolutionary medicine access in African market at a fraction of cost.
Okay. Laurus Labs holds around 33% stake in the company. What are the plans in terms of maybe increasing their stake, divesting it, or do they stay at these levels?
So right now, ImmunoAct is focusing on the growth in domestic market, as well as this is our historic moment that we are our first official entry into the international market, starting with South Africa, Morocco, Algeria, and we have plans to go to Eastern Europe or European countries, and ultimately we will definitely attempt to go to US.
Okay, so there is no point on Laurus Labs pairing the stake? Any conversations, or what is the strategic idea behind it? Will they up their stake?
Right now, those discussions are not there. However, what we feel like from the domestic market, right now we are getting revenue, so we may not need the growth capital within India. But once we go to out of India, especially in the Gulf or in the European market, for those markets, we may need the capital. And that's the time we will discuss who is the right partner and who will be happy to support us.
What is the timeline for that, Dr. Parvar? And the other question with regards to that is that is Laurus Labs probably interested in maybe going 100% in ImmunoAct, and then you can probably take a more managerial call and run the business for them?
So right now, for me, I am right now the founder and the professor at IIT Bombay. Right now, I'm not in the executive position at ImmunoAct, but as a founder, I can tell you that ImmunoAct is at a very strong position because of our last financial year and this financial year, we are seeing very good growth. And we are hoping that next year, even it will be much better. So we do not need capital at this moment. In fact, we came up with our new facility in Navi Mumbai, which can cater almost 5,000 patients a year. And this is already now functional, and I think ImmunoAct moved to the new facility. So we do not need capital at this moment, and I'm sure that Laurus, as well as other partners, other future partners, they will be happy to support our international growth as and when needed.
Okay, all right, Dr. Parvar, we're going to leave it on that note, and congratulations and on the bigger feat of treating almost 600 patients with your CAR-T therapy at 1/10 the cost in India. So that's for blood cancer. Thank you very much for joining in and speaking with CNBC TV18. We'll take a short break, but back to the markets full tilt. Mangalam will join in with his F&O update. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. As of now, Nifty is off the highs. It's off the lows as well. 25,200 again, about that mark is what the Nifty is trading at. But what are we keeping an eye out on in the world of F&O? Let's go across to Mangalam, who's at the F&O desk to give us the midday updates there. Good afternoon, Mangalam.
Good afternoon. So, if you look at the market from 11 a.m., it has been flitting in a 100-point range. At some point, it's 100 points higher. At some point, it's just a 50 points higher. And now, as we speak, it's in the middle of that range itself. It's about 75 points higher. So, fair to say that after, gaining in the morning and thereafter falling from the highs, it's been fairly choppy for the last hour and a half or so. So, direction is something that we will seek in the second half of trade, particularly because it's also a Thursday, which implies that it is Sensex expiry. And also, this is the expiry week. Jan 27th is where we have all the January series contracts expiring. But what today's high and yesterday's low have done, have given us a nice broad range for the Nifty to work with from a big move standpoint. If it crosses past today's range on the way up, which is 25,435, today's high, then one can expect the market to move further higher, or if it falls below yesterday's low at 24,920. Though these marks, both of them, look fairly distant from where the market is right now. So on the lower level, it's important to track the 200-day moving average of the Nifty, which is about 100, 120 points lower from current levels. And for the market to move higher in the very near term, the Nifty Bank has to do some heavy lifting. And for that, it has to cross the 50-day moving average of 59,286 as well. So those are important near-term levels for the indices. In terms of Nifty options, 25,300 seems like the mark where everyone's playing or, putting their positions on. 25,300 call and the 25,300 put. Both of them give you a nice 100-point range on either side. So 25,200 at the lower level to about 25,400 at the upper level. And if you want to broaden that further, 25,400 put writers, call writers and 25,200 put writers are equally active as well. What do all of these things tell you? That the Nifty is likely to be in this 25,150 to 25,450 sort of range in the next couple of trading sessions. In terms of individual stocks, a lot of these ones which are getting pummeled today, the likes of PNB Housing and even KEI Industries are seeing some short positions being added. Long unwinding on Hindustan Zinc. Remember, all these copper-related, silver-related stocks have come off the highs. So some long positions being unwound out there and some longs being added on Ashok Leyland. So that's another stock that I'll be keeping my eye out on. Ashok Leyland is the one which is seeing some fresh long build-up in today's trading session so far.
Okay, all right. Some interesting names there, where we are seeing a lot of action on the F&O front. Thank you so much, Mangalam, for joining us with all those cues. It's time for a break now. When we come back, we'll get in Gaurav. We'll focus on a whole host of stocks which are reacting to their Q3 earnings. Stay tuned for that.
Welcome back. Well, for the markets, it's just about trending higher for the mid caps as compared to the Nifty. So we have the mid cap index, which is up around 1%, so outperforming on that one. But just want to point out that Eternal has slipped into the red, so it's down around 1.5% at this point in time. So that stock, remember, started strong in today's trading session. There is that Blinkit EBITDA positive, which is one of the key positives for the earnings this time. But separately, Apollo Hospitals, there was a note on Apollo Hospitals as well, where Citi has said it's a high conviction buy with the target price of 9,600 odd rupees. They've also said that HealthCo should probably deliver margins of around 7% going forward. So that's the reason why Apollo Hospitals is in focus. But we have a whole host of stocks which are all reacting to their Q3 numbers. Gaurav is here to take us through that entire list that he's got. Gaurav, over to you.
Well, yes, as you said, mid caps are actually rising, and there are some mid caps who are actually increasing on the back of the good set of numbers. So first, let's talk about Bajaj Consumers. If you look at the numbers, net profit increased almost by 83% on a year-on-year basis, while the revenue that also increased almost by 30%. And this is the reason. This is the reason why, if you look at EBITDA margins, now they have increased from 12% to 18%. So 600 basis point of increase here as well. As a result, we are seeing some uptick in this counter. Vari Energies is yet another company where we saw net profit increasing almost by 26% sequentially. Now this also translates into the net profit which doubled on a year-on-year basis. Revenue increased almost by 25% on a sequential basis. And here as well we saw the EBITDA margin improving almost by 200 basis points sequentially. On the flip side, we saw PNB Housing. Now, they reported numbers which were below Street's expectation, and there were two key concerns. First is that net interest margins that declined sequentially, and at the same time, second is the disbursement number. Now, disbursement came in weak, and specifically in the affordable segment, where the company was actually expecting to grow at a very higher pace. There we saw the disbursements decline on a year-on-year basis. As a result, we saw a sharp fall in this counter. Again, on the flip side, in the financials itself, we saw Bank of India rising in trade, and the key reason is that net interest income. Now, that increased almost by 6.5% on a year-on-year basis, but at the same time, we saw net interest margins, which actually came in as a positive surprise. They increased almost by 16 basis points sequentially, and now they stand at 2.57%. Lastly, let's also not forget about Rallis. Now, the numbers, they came on 20th of January, but after that, today we saw HSBC actually upgrading the stock to buy and giving a target price of 300 rupees. What they're saying is that all segments performed well for the stocks, and in fact in the results also we saw volume growth was there among all the segments, and they have actually upgraded stock because we have seen 35% of sharp correction in the last 3 months, and after that HSBC believes that there is a case for upgrade, and now is the time when you can actually buy in the company. As a result, we are seeing this stock is also up in trade more than 10% as we speak.
Okay, all right, some interesting names there. Big surge in some of these mid-cap and small-cap stocks. Thank you so much, Gaurav, for summarizing those numbers for us. With that, we'll slip into another break. When we come back, we'll get you more on the markets. So much happening in the broader markets. We'll get you all that action on the other side.
Welcome back. Well, let's talk about one of the top gainers on the Nifty today. That's Dr. Reddy's, which is reacting to what was a good set of numbers in terms of its expectations. Now, what the street did like was everything outside of the US this time, interestingly. So we had India, which was up around 19% this quarter. We had the nicotine replacement therapy. This is basically a business that they acquired some time ago, which was up 25% year on year and 8% sequentially. Russia recorded its highest ever quarterly revenue. It was up 51% year on year. The US sales came in at $329 to $330 million versus estimates of $280 to $310 million. Now, the commentary was positive. US should grow in single digits. Other markets should grow in double digits. India, 15 to 16% is a sustainable growth that they expect. NRT business, they expect a strong upside to the earlier single-digit guidance. 25%, very solid average that the company is aiming for in terms of margins for FY27. Now, overall, they expect to launch semaglutide in Canada between Jan to May of 2026. Semaglutide will be launched in 80 markets, including India on the 21st of March and Brazil in July 2026. Key triggers going forward, according to analysts, will be semaglutide plus the biosimilar launches of denosumab, Abtaseb and rituximab in terms of the key pipeline. Brokerages, CLSA has upgraded the stock to hold, Motilal has a neutral, HSBC has a buy call and Citi has a sell on Dr. Reddy's. In fact, let's listen in to Erez Israeli talking to us on the numbers.
The company is busy with the growth, so the growth is giving us those margins. We are containing the cost. The rate of our cost is half of the rate of our sales growth, and this is what is giving us the margins. In addition to the products that you asked, like semaglutide and Abtaseb, we are also busy with BD. So the composition of the BD, as well as the compositions of the other elements, will determine if it's 20% EBITDA or 25% EBITDA for this kind of period of time. But overall, the 25% that we discuss is very solid average that we always aiming to do. This is the terminology that Health Canada is using for asking for additional information. They issued it in the end of October, and they got it already at the beginning of November. And we are waiting for the response, hopefully with approval. The approval can come anytime from now to May, because they have, per their regulations, up to 180 days to answer our submissions.
Okay, that's the management of Dr. Reddy's, but market as of now 25,233, up 0.3%. So in the last 1 hour, we have seen it move from 25,198 to 25,230 levels. In that range is what's it seen in terms of a move today. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.
Market off day's high after soaring in opening trade. Trump rules out use of force or tariffs to take over Greenland. PSU banks, industrials and healthcare are the big gainers, even as Realty drags.
Dr. Reddy's is among the top gainers on the Nifty after it beats expectations in an unexpectedly subdued quarter, but the outlook for FY27 is positive, with key drug launches expected to make significant contributions.
Silver ETFs see sharp cuts as the futures for the precious metal on MCX take a dip. The elevated margin positions in several silver ETFs leads to sharp drawdowns after outperforming spot silver prices.
Honeywell says automation is on a growth path with upsides from better use of data, while engineering and automation major ABB also sees strong energy demand ahead, with India playing a big part in its global growth.
I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Control exclusive calls PM Modi a close friend and expressed confidence that India and the United States will have a good deal soon.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Horvas Fatakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. The markets today doing well. It's off a little bit from the day's high, but still holding well in the green.
Holding on, and the bulls would hope that it holds on, because considering the fact that you're significantly off the opening highs, at one point when the index was up well over 200 points, almost close to 250 points, and now those gains have just come down to 30 points. So there's some important levels that the index will have to defend on the downside, first being the 200-day moving average, which is at 25,124. That's the first level to track on the downside, and of course the 25,300 to 25,400 range turning out to be a barrier yet again for the index. As soon as the opening highs were made, selling pressure has come in, and since then the markets have not managed to recover from that selling pressure and continuing to meander along that 25,150 to 25,200 range on the upside. Now the Nifty Bank has been the principal culprit as to why that selling pressure has emerged today. Take a look at the chart as well. You'll get to see at one point the index was well over that 59,500 mark. That's the most important level for the Nifty Bank, and since then it could not sustain above it, and now it has declined almost 650 points from the highs of the day. Just a couple of numbers before we move on. Steel strips wheels numbers on your screens. The profits are marginally down on a year-on-year basis. Margins have narrowed compared to last year as well. The stock choppy as of now, but what is not choppy is CAMS, Computer Age Management Services, and that stock is up almost 5% after its results. Nothing much to write home about in comparison to the results. They were in line with expectations, but the stock, after a prolonged bit of underperformance, is now moved almost 6% higher, and some more broader market and Nifty earnings we await for the course of the day.
Absolutely. And if you take a look at the sectors, right? PSU Bank Index, it's doing well. We've got Bank of India, Canara Bank and Union Bank, all of them gaining between 1% and 5% right now. The Pharma Index, as we pointed out, is also doing well. We've got Biocon, Glenmark Pharma and Lupin, all of them between 1% and 2% in the green. All on the downside, however, we've got that Realty pack. The index is down over 0.5%. And if you see Lodha, Godrej Properties and Oberoi Realty, all of them down 2%, all of them down over 2%. And in some stock-specific action, we've got PNB Housing, which fell over 7% today on the back of weak earnings, while IIFL Finance was also under pressure ahead of its earnings and the fact that it's going out of F&O. So lots of earning action to watch out for. But meanwhile, silver ETFs have seen a sharp cut as the futures for the precious metal on MCX took a dip. Hormaz, you're following that, so tell us more about it.
It's interesting with the kind of price moves that you have seen on the silver ETFs today, particularly so because the prices in the spot prices in the global markets have not declined. Right. That is one. And the second bit being that the MCX futures as well, they were down around 4% earlier in the day. That those two have now recovered from those lows. Now, the risk off sentiment slightly ebbed last night, and if you could see what Donald Trump said with regards to Iran, with regards to Greenland, also with regards to the tariff that he's not going to be implementing from the 1st of Feb. And despite that, the spot prices in the global markets are where they are. They're still above the mark of $90. They saw a bit of a dip yesterday, but since then, they've remained where they are. Now, The story here, though, is that over the last 3 months, the silver prices in general have doubled in value, actually more than doubled in value. But if you take a look at that, the last around 40 odd trading sessions from the 1st of December, the number of leveraged positions they have increased in silver ETFs. And how? You look at Nippon AMC, on the 1st of December, the leveraged positions were at 472 crore. That number has gone up to 1200 crore as of the 20th of January, which is from where the data is available as of now. Same is the case with ICICI, HDFC, SBI, Kotak. All of them have seen their leveraged positions on the silver ETFs go up anywhere between 2.5 times to 3 times, maybe even 4 times in some cases over these last 30 to 40 trading sessions. So that is the kind of activity that you have seen in silver. And spot silver prices were up 30%. The Nippon Silver ETF itself was up 45% as of yesterday's close. So that shows that it outperformed even the spot prices. So some bit of mean reversion coming in as well, if you could see, for the silver ETFs. And at one point, all of these silver ETFs were down almost 18 to 20%. They've cut some of those losses. They're still down around 6 to 12%. And the MTF book is something that we at CNBC TV18 have been reporting all through last year as well. And on similar lines, Nitin Kamath wrote about this yesterday, saying that in case of a massive correction event, such positions will be the most at risk because it is very difficult to manage risk in an MTF position. And there is decent liquidity when the markets go up, but when the markets go down, the liquidity dries up. And that is why you can see these exaggerated price moves on the downside. And although the silver ETFs are recovering from the lows, still down anywhere between 6 to 12%, but it has turned out to be a very, very choppy day for silver as a commodity. And that's about silver, but an exclusive story now on the anvil. Yash is picking up some details with regards to the government's planned offer for sale in LIC. Yash, tell us, what are you picking up?
Well, Hormaz, what we've been given to understand from our sources is that LIC's offer for sale, under which government was scheduled to divest part of its stake, is likely to be postponed. That OFS with respect to LIC is unlikely to happen in the current financial year and is likely to be postponed in the next financial year. There were preparations which were going on. Bankers had been appointed, roadshows were done, and the indication was that it could happen in the fourth quarter itself of current financial year. According to our sources, that is unlikely to happen and goes on to the next financial year. Important update with respect to the timeline that we've been able to pick up from our sources is that the OFS for LIC has gone down the priority list as of now, and it's only likely to happen after the conclusion of IDBI Bank divestment. So, of course, that will be a key parameter or a key metric to track the timeline for LIC's OFS. SEBI, of course, importantly, has given LIC time till May 16, 2027 to raise public shareholding in LIC to 10% from the current 3.5%. We've written to, of course, LIC as well as the Department of Public Asset Management on this particular story, that is DPAM. A response from both parties is still awaited.
All right, Yash, many thanks for taking us through those details. Now, earlier we spoke to Harold van der Linde, Head of Asia Equity Strategy, HSBC, on how this year looks for the growth potential of the Indian economy. Take a look.
I had a round table last week, and we asked people for ideas. India came up, but I got the feeling that people don't want to play it yet because that momentum is still there. And things have looked a little bit better. So your valuations look a little bit better. Your earnings growth is starting to turn around, or at least a bit of earnings upgrade starting to come through. But so the story is actually improved a little bit. The first risk is currency. Yeah, and that is just a fact of life we have to deal with. And you can deal with that if you invest here by having companies that export and that give you sort of currency hedge. The second risk is what happens with the earnings in the near term. So we see earnings recovering, but is that really true? What's coming through? Is this sustainable? What sort of earnings are we going to see this year? The feeling was that, well, the feeling is last year we had just below 10%, 7-8% or something earnings growth. Next year, people working the assumption is going to be 11, 12, 13, something like that. The problem is that we're living in a world now where a lot of actually developed markets, economies, they're overextending. So we now see worries about the fiscal position in the US. Bond yields went up earlier this week again. In the UK, in Japan, it's becoming a worry. The funny thing is in the emerging markets, the feeling it is pretty good. So, but it could be that markets are getting a little bit sensitive to this particular issue. But I do agree India could probably spend a little bit more.
Time to take a short break, but just as we do that, the countdown for Budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from the Finance Minister. We bring you a power-packed lineup throughout January and on the day of the budget. Helios Capital Sameer Arora for all things markets, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We also get you insightful analysis from industry veterans and Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric.
Fly Emirates, fly better.
Welcome back. You're still with us on Business Lunch. US President Donald Trump said he and NATO Secretary General Mark Rutte have formed the framework of a future deal with respect to Greenland. In an interview with CNBC's Joe Kernan, minutes after posting the statement, Trump described the Greenland framework as the concept of a deal. Take a look.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland. And it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark, Rutte. And I assume he's been speaking to them. He's been speaking to all of them.
The European Parliament has frozen its work on a key EU-US trade deal, pushing back against President Donald Trump's demands over Greenland. The pause is the strongest material response the European Union has shown so far to what several leaders last week called a blackmail. Eminent economist and former first deputy managing director at IMF, Geeta Gopinath, warns of a fragile global economy with US-Europe tensions and tariff risk as key headwinds. Speaking to CNBC TV 18 Shireen Bhan on the sidelines of the World Economic Forum, she said US and Europe are turning against each other, and that is the biggest global economic story of 2026.
We still have very easy financial conditions. And we're in this world of geopolitics, as you and I are seeing right here in Davos, and all kinds of explosive messages coming out of all heads of state.
Yes.
And if there were truly an EU-US tariff war, because so far, there's been a tariff war, but it's been one-sided, which is the US has imposed it, and the EU has not retaliated. But now they are threatening to retaliate. If they do, then I do expect markets will react much more strongly.
Meanwhile, Geeta Gopinath also said that it is not possible for the world to do without the US. She also said that India's growth is the highest among the major economies of the world, and the country can raise the per capita income if the growth momentum sustains. Listen in.
There is a lot of chatter around this that the world is going to get by without the US. The likelihood of that?
Oh, that's going to be very hard in the near term. I mean, it's not possible. Firstly, the exposure the rest of the world has to the US is huge. It's not just in terms of the consumers and the large scale of the market that exists, but also just the investment in the US markets, both in terms of bonds, in terms of stock market, equities more generally everywhere. And the dollar, the critical role the dollar plays everywhere. So no, decoupling is not an option at this moment. India's growth is, one of the highest, is the highest among the major economies of the world. It is going to become the third largest economy. It's just a matter of, a couple of years. Based on current numbers, it will be 2028. If it's able to sustain this level of growth, it will be able to raise per capita incomes, which is the true challenge for India right now. And we are seeing good reforms happening in India. I think the public infrastructure, both the physical infrastructure, the digital infrastructure, both have been, truly transformative.
Meanwhile, the US president also signaled that he has a favorite for the Fed chair's replacement. Listen in.
The replacement for Jay Powell.
It's true.
I just saw the Mr. Hassett, who I have a pretty good relationship with. And you're right.
He's fantastic.
He comes on.
I like actually keeping him where he is, to want to know the truth. I don't want to listen. He's so good on television.
On CNBC would be a great time to give us more.
So good on
Are we down to 2 now? Are we down to... I heard Rick Reeder had a strong...
Yeah, I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1. All 3 are good. All 3 would be, I think, good. We have a problem with the man that's there now. He's too late. He's always too late, except when it comes to politics for the other side.
No.
Now, US President Donald Trump is set to formally announce the first charter of his so-called Board of Peace for resolving international conflicts with a $1 billion price tag for permanent membership. 15 countries have now agreed to join, and each country will sign accession documents in accordance with its legal procedures. Now, in the latest, President Vladimir Putin of Russia has confirmed that they will be actively considering joining the Peace Board with $1 billion of its frozen assets to be used as a membership fee. Listen in.
I would like to begin by thanking the U.S. President for this proposal. We have always supported and continue to support any efforts aimed at strengthening international stability. We also acknowledge the current U.S. administration's contribution to the search for a solution to the Ukrainian crisis. Regarding our participation in the Board of Peace, the Russian Ministry of Foreign Affairs has been instructed to study the documents received by us, consult with our strategic partners on this matter, and only then will we be able to respond to the invitation extended to us.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
Welcome back. Now onto our continued coverage from Davos. So over 50 CEOs of top global and Indian companies speak exclusively to CNBC TV 18 on their India plans. Now, automation was one of the key talking points at this year's World Economic Forum meeting in Davos. Shireen Bhan caught up with the management of Honeywell and ABB to understand their perspective on automation and its impact on their businesses.
Automation is a secular growth trend. As the world becomes more productive, you need to put automation in all kind of infrastructure, energy, supply chain, buildings. So that's a core of what we are. And Honeywell has been in automation for 100+ years. As we look ahead, the power of data has to be unleashed, which automation systems create. Now, traditionally speaking, we are all used to AI, and AI has been a conversation topic for the last 1 year.
Yes.
But what has become less understood is how does a industrial sector benefit from AI? And because the data from a industrial system is not in public domain, you can't train the data and then put data science on top of it. So that's where the physical AI comes in. You want to have access to data, remove the data friction, solve it for segment-specific issues. We are, quite blessed to have very strong India business growing at double-digit rate for several years. And I think the India growth story is really playing well for us. We are benefiting from it. Our business has been growing double-digit for, as I said before, for now 3 or 4 years in a row, and we expect 2026 to be same. And fundamental of that is the investment in infrastructure is certainly helping us to grow. As India GCC story grows, that also helps us because those building and infrastructure are also automated by us.
Can also use automation, and I talk about also the electricity grid, what we call grid automation, which is also how we use energy. It's not just getting more and more, it's to use it at the right time. This is a bit thinking about traffic. There are not really enough cars in the world that we should have traffic jams, but it's because that we all want to go at the same time, and that's the same with electricity. Yeah. So we can use automation in our grids and in our buildings. Energy management is all grid automation. It's about how to balance loads, that we don't need to heat the hot water at the same time so we prepare our dinner and wash the clothes at the same time. That goes also the same for industries. We can balance out it, and this is where automation is needed, to use electricity smarter, both saving energy but also balancing it so that we don't put more stress on the grid and our networks than needed. So there is where automation plays a key role.
And with that, it is a wrap on this edition of Business Lunch. Midcap Radar takes all the action forward.
Welcome back. We continue our coverage here from Davos 2026 from the World Economic Forum's annual summit. One of the big issues that is being talked about here, outside of Greenland, of course, is Venezuela. President Trump making it clear that the U.S. will actively be involved with the Venezuelan oil industry. What will that mean in the near term, and what implications will that have as far as oil supply is concerned? Will it put further pressure on prices, and what will all of this mean for Indian oil companies? Joining us now to talk us through all of that and more is the IOC chief here with us in Davos, Mr. Sani. Always a pleasure. Thanks very much for joining us on CNBC TV 18. Let me start by asking you first, 2026, a year of oversupply likely?
Thank you, Shireen, first of all, for hosting me here. Yes, supplies are there, and supplies are in ample quantity as of now, which is what explains, if you see the better part of last 6 months or 8 months or 9 months, we are hovering at around $60. Present today it is $64, yeah. I understand, but that is because of immediate issues. But given everything, all the geopolitical issues, giving every disturbance, giving every war going on, and still crude hovering at around 60 or below, or thereabouts, it shows that we have a good supply of crude oil.
So you expect prices to be in this same range, despite all of the uncertainty and volatility?
Despite everything, it is there. It is a very...
Remains stable.
Remains stable. If these things are taken out, if these wars are taken out, if these geopolitical situations, they subside, I am very sure that it is going to be minus 60. Somewhere below 60. Somewhere below 60.
But, one of the factors that is impacting you on account of your imports is the depreciation of the rupee. We've seen the rupee hitting record lows every day virtually. How are you dealing with that and the impact of that?
That has a negative effect on our profitability, because as you understand, as India, we are buying around $130 billion worth of crude oil, and every depreciation has its effect on our profitability, because we are selling mostly in rupees, buying in dollars and selling in rupees. So we have a negative impact on the profitability.
How much have you been able to ascertain? How much of the impact it will be?
It is a complex equation. I can explain to it, but it will take a lot of time of your air time.
Okay.
But in nutshell, I can tell you that...
What will the impact on the bottom line be?
That's what I'm saying. That in nutshell, I can tell you that we are having very decent cracks right now for MS and for diesel. For diesel, it is hovering at around $18, $19, and for MS, it is hovering at around $10, $12, which is a decent place to be. And with crude prices at where they are, 60, 64, we are able to manage a proper bottom line.
Okay.
That's much because I can tell you that within few days we will be declaring our Q3 results.
Yes.
So I can't talk more than that.
I understand. I appreciate that you are in a way in a silent period, so you can't say very much more. But in terms of margins as well, are you going to be able to improve on margins further?
I am going to improve more margins by doing my internal things better. In last 9 months or so, we have embarked upon a transformational journey. I can talk about Indian Oil, wherein I am working on improving the efficiencies of my refineries, improving the efficiencies of my supply chains, improving the efficiencies of how the whole ecosystem is working around it, how my people are developing, how the transformation is happening, and how my efficiency of my capex is increasing. So, and how I am primarily trying to complete my ongoing projects. So all this is going to bring overall efficiency in the system, and that is going to, these will be the factors which are going to affect my profitability in a positive manner.
So how much of an expansion can we expect? I'm not asking you about the coming quarter.
I'm saying.
I'm not asking you about the coming quarter, but in the slightly more medium term, what kind of an expansion can we expect?
I can tell you that we are going to have significant improvements in our operating systems on a physical pattern, on a physical perception. I will be doing much better than what we have been doing for ages. So this will be a different Indian Oil going forward. I'm not talking about quarter to quarter. I'm talking about year on year. I am going to be much better than where we were there.
Okay, let me ask you now about the big topic that's being discussed here. What happens to Venezuelan crude, with the US getting actively involved, and what does that mean for companies like yours? What does it mean for India if Venezuelan crude were to come to the market?
Any new crude is welcome. and our refineries...
How easy do you believe it's likely to be?
It is very difficult. I personally feel that it is not very soon that we will see those crudes on Indian shores. Although I can give you assurance that several of Indian refineries are capable of processing those crudes in admix manner. Some of the private sector refineries I know of, and several of the public sector refineries also, they are capable of doing it. But as a person, as a person who knows about things, I can say that because it needs a lot of investments there to bring up the crude in Venezuela. So I don't see very quickly these things happen.
Okay, so if there's still a question mark on availability from Venezuela, what about Russia? The question mark there continues?
It is still hanging there. I will refrain from speaking to, respectfully, I will refrain from speaking.
No, I understand and I appreciate. So I will leave it at that as well, Mr. Sani. But, you know, let's talk about some of the other factors now. One overhang that continues to weigh on your stock is the possibility of an excise duty hike. Is there any indication at this point in time that that is likely, given the fact that we've seen crude oil prices coming off so sharply?
I don't know from where these things come. I have no indication of it. And to make it very clear that it is a very simplistic view that is propagated that if crude prices are so and so, the pump prices will be so and so. If it is $100, then the prices will be high, and if it's $60, the prices will be low. Please understand and please propagate this, that it is not so simple, because the more important factor is how the cracks are working in the international market. What I am getting by processing 1 ton of crude or 1 barrel of crude, how much of MS or diesel I get it, and how much is that differential going there. That differential is what is affecting the prices on the pump, not the $65 or $100.
Okay.
So it is not a very simplistic thing to say.
So you're saying unlikely or not in the offing or not at all at this point in time?
No indication at all as of now, that much I can say.
Okay, so that's the story as far as the excise duty hike is concerned. But LPG under recovery, what is the status on that front? How much have you managed to already get on account of it? How much is pending due to you?
We have been given a package of around 30,000 crores as an industry, of which half of it has come to Indian Oil, and it is being given to us on a monthly basis, and that is coming it started from November 25, and it will continue up to October 26, and monthly we are getting that proportionate value where we are getting.
Do you believe that you will require more?
It all depends. After October 26, we will again assess, because it is a positive and negative buffer which we are working on. So as the LPG prices in the international market improve or decrease, or at that point of time, what is the price of LPG cylinder that is going on in the Indian market, it will all depend on that. First, we have got this. It gives me a visibility going up to October 2026. Beyond that, we will again reassess, and again we will talk to government if it requires.
Pivot and the transition to renewable energy as well. You've got significant plans there, amounting to almost $17 billion. You know, the capital, B, the returns. I mean, give us an outlook on what you are penciling in, what you're factoring in.
Look, this is a big story. This is a story which has many factors. The most simple one that people talk about is solar and wind energy. That is a very simple one. It also gives me around 13-14% return on equity that I am investing, which is on the lower side. But it is a sustained return on, say, 25 years once I have invested. So that is one part of it. Then there are other aspects of it. The bio story. Bio story is a big story for India, because India has the potential to develop itself as a mega source of bioenergy. Maybe not only for India, but for export also. So that is where we are looking into compressed biogas, we are looking into ethanol, we are looking into second generation and third generation ethanols. We are looking into several aspects of that. Plus green hydrogen. Today, Indian Oil is putting up the biggest green hydrogen plant in India, 10,000 tons per annum that we are putting up at Panipat, and by 27 December, it will be ready for production. Again, sustainable aviation fuel, and again linked to the bio story. Today, again, I am the only company in India today which is certified to produce sustainable aviation fuel, and that I will be doing in the next 4 to 5 months. By May or June, I will be ready to dispense sustainable aviation fuel to meet 1% mandate of CORSIA for 27. So that I will be ready to produce that. So these are the initiatives in nutshell, and these we'll have to see which of them gains traction, which of them goes further, gives me profitability, and then we will have to see. The capex plans are there. And my net zero ambitions for 2046, they stand.
Mr. Sani, as we speak and we're live on CNBC TV 18, a lot of analysts are messaging us with questions for you, and let me address two of them. One says, what steps will you take to build your market cap? Your stock has given zero return from 2018 to date.
No. That is, I think the analyst has to be corrected. I will correct him with my figures. Since last 7 years or 8 years, my stock has given you 15 to 16% return. They are not accounting for the bonuses that we have given, the splits that we have given, the dividend that we have given. They are only looking at the price of the stock. But these factors also have to come into picture. And when it comes to picture, I am giving you one of the best returns in public sector space. That much I can tell you with assurance.
Well, that is an unequivocal view there on the company's performance. But as you leave us, Mr. Sani, also explain to us, you said that this is going to be a very different company in the near term, near to medium term. What could that mean from the metrics that the market tracks?
So it is going to be much efficient. It is going to, and I'm not taking the name of the matrix that you track, starting with G, but but I am telling you that this is going to give me profitability. This is going to increase my efficiencies. My refineries are going to be in quartile 1 of Solomon benchmark, which is international benchmark for refinery operations. None of our refineries or none of public sector refineries have been in quartile 1. Today, 3 of my refineries are going to be in quartile 1 this year, including Chennai Petroleum, which is my subsidiary, and 2 of my Indian oil refineries. So that is how I'm going to improve my efficiency. That is how I'm going to reduce my CO2 emissions. That is how I'm going to save on my fuel. That is how I'm going to improve the productivity of my people. So these are the metrics on which I'm working, and overall it will go into that metrics which you understand.
So as you leave Davos 2026, you feel confident about growth? You feel confident about profitability?
Yes, I am very confident about it.
Better than the previous year?
You can say that.
I can say that, and you are saying that here on CNBC TV 18. Mr. Sani, always a pleasure. Appreciate you joining us here on a very cold morning here in Davos with an outlook for IOC on all things from Venezuela, Russia to where we could possibly see IOC in the near term transform itself as a company and prioritize things outside of the current areas of activity. We are going to take a break here on CNBC TV 18. Don't go anywhere. We're back in a moment with more. Stay tuned to CNBC TV 18. Our coverage continues.
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV 18 Motilal Oswal studio. Markets continue to be in focus. Earnings are coming in thick and fast. For now, we are in the green, but midcaps, they continue to be on our radar, 1% higher on that index. So let's talk about some of the big midcap movers then. We have Gaurav with us to take us through the midcaps that are moving around in trade. Gaurav.
Well, yes, market is a bit volatile today, but there are certain stocks who have actually decided their direction and it looks like they are not actually in the mood to change it. First, let's talk about Bajaj Consumers, because if you look at the numbers, they were strong and after that we saw a sharp spike, and after that, let's also not forget about Waaree Energies. There also we saw a good set of number and the stock is up more than 7%. Remember, Realty India, they came up with the numbers just one day before, but at the same time, today there was a note from HSBC and after that we are seeing some rally in this stock. Other than that, there are certain stocks who are not only gaining in trade, but we are seeing strong volumes here in the likes of Jindal Poly, Schneider Electric Infra, J&K India and Bluestone Jewelry. All of these stocks are up more than 5% in a trade. But on the flip side, let's also not forget about losers. We have got EPAC, PFAC, because if you look at the results, those were a bit weak, and at the same time, profit that declined almost by 45% on a sequential basis. We have also got PNB Housing Finance. We saw disbursements which were weak, and at the same time, net interest margins declined. And lastly, let's also not forget about EPAC Durables, because the key RAC segment, there we saw the growth was muted, and after that, we are seeing some kind of fall in these stocks. And let's also not forget about some of the stocks who are losing with strong volumes. They are in the likes of Tata Communication, Kalyan Jewellers and Tattva Chintan. All of these stocks are down more than 4%, 4 to 5%. Let's also not forget about some of the stocks who have reached their 52 weeks high levels. And we've got Federal Bank, SAIL and Credit Access Grameen. Remember, Credit Access Grameen gained more than 8% in the yesterday's trading session as well. And today also it is coming up as one of the top movers. And on the flip side, on the 52-week low level, we have got Kalyan Jewellers, Godrej Properties and Jubilant Food. Remember, Kalyan Jeweller and Godrej Properties, these stocks, if you look at the performance for the last 5 trading sessions, they are down more than 15% in trade. So let's watch out if there is any more downside left in these stocks, or is there any fundamental reason why these stocks are falling, and let's see how they perform in the days coming ahead.
Take that point. Thank you for that. Nearly 9 days of decline for Kalyan Jewellers. We'd explained the reasons why the stock was lower yesterday as well. But meanwhile, just had a couple of more stocks to the list that Gaurav was talking about. You know, Physics Wala is one of them. A recent listing up nearly 13% with decent volumes backing that stock. And alongside that, we have Imagica as well. Imagica is now up around 6%. And we are seeing some traction on the way up for a couple of these names like Copran, etc. as well. All of them higher and up about in trade. Let's welcome Sudeep Shah of SBI Securities for a quick technical check on the market. Sudeep, we've been in this range over the last hour or so. We've been, in a 100-point narrow band on the frontline index, the Nifty. Do you think this is more of a sideways move for the Nifty that continues after big wild swings on either side yesterday and this morning? And it'll be more prudent to have a stock-specific approach?
Absolutely, Mangalam. Good afternoon. Well, what we are observing is that post yesterday's wild swing and today's gap up, the selling pressure at higher levels is still persisting. Now, a lot of mid caps and a lot of large caps, we are seeing post that initial 15-20 minutes move when Nifty was positive, 150 to 200 points. Then post that, we've seen sustained selling pressure from higher levels. So what we feel is that it's important to have a stock-specific approach, plus play with key levels. Now, 25,330, 25,350 from a closing basis remains an important level now from here on. So until and unless 25,350 is not crossed on a closing basis, I don't feel that we need to be too aggressive on the long side. Let that happen and then participate in the rally. On the downside, 25,100, 25,120 band, which is the 200-day moving average, now holds extreme importance, and any close below that, the doors would be open for 24,700. So this 25,100 and 25,330, 350 band is the most important range where we are currently trading into.
All right, take that point. A couple of these FMCG names are doing extremely well this afternoon. So we have Godrej Consumer reports its numbers tomorrow. A good set is what is expected right now. That's moved to the high point of trade. Pidilite has spiked as well. Pidilite has surged to the high point of trade as well. And from the frontline end of things, HUL has been relatively resilient in this decline for the markets, and understandably also been an underperformer for a fairly long time. So maybe some bit of defensive buying purchase seen on HUL. Britannia is the other one, which is mildly higher. But individual stocks, what are you recommending right now, Sudeep?
Mangalam, two stocks on my radar. One is BEL, Bharat Electrical Limited. Now, here what we feel is that this particular stock has outperformed all other defense names, and it's sustaining above 405 levels, taking support at all dips. So here, this can be bought with a stop loss at 403 on the downside, and 435 would be the potential targets. The second stock that we feel can do well is Steel Authority of India Limited, SAIL. Breakout above 150, sustaining around that level, and 146 can be a decent stop loss, and we feel that the targets on the upside could be closer to 156, 160 levels in the coming few sessions.
All right, take that point. Thanks a lot, Sudeep, for joining in. BEL and SAIL are the stocks that he recommends. Take a short break, come back, get you more on the markets and a lot of stock-specific action here on Midcap Radar. Stay with us. Welcome back. Even if the Nifty is range bound, the mid-cap index is telling you an entirely different story. That index has actually moved to the high point of trade with far more number of stocks in the green as against the number of stocks which are in the red right now. And the ones which are picking pace, Indian Bank, that's the one that should come up for you. It's a decent up move that we've seen on that stock. Tenneco Clean is the other one, which is up around 7% as well. And we've also seen some movement come by in return in Canada HSBC Life Insurance. Remember, the stock, after its numbers, saw a move on the way up. Thereafter, it was sold off. And the management says the next couple of quarters looking good for the company. The stock has crossed that 150 mark. With that, we'll wrap up on this edition of Midcap Radar. But you stay tuned. Mutual Fund Corner when we return.
Cool.
and welcome to MF Corner. I'm Sonal Bhutra, and with me as always is Vinny Motiwala. It's been a busy day for the mutual fund industry in general. There's so many updates that are coming by as well. So Vinny, let's get started with the first one, and that is ICICI Pru AMC. They have started taking subscription in their small cap fund. So let's address that news first, and then of course we'll talk about what's happening in the silver ETF segment as well. Now remember, yesterday there was a notification from ICICI Pru AMC where they indicated that they will be starting subscription for their small cap fund starting tomorrow, and this would include this fund of course allowed their existing SIP, STP as well up to 2 lakh per PAN per month. Now this discontinuation happened back in 2024. This is after there was a lot of frenzy in mid and small caps. There was a stress test which SEBI asked or AMFI asked these funds to do as well, and just before that in Feb 2024 there was a comment that came in from S. Narain, who's the CIO, indicating that there is valuation fear in small and mid caps, and their market capitalization growth is much faster than the profits that they're making. So definitely this was the reason why they halted subscription here. Now do remember, since the time they halted subscription to December 2024, in those 9 months the small cap index surged 30%. So it's not like the subscription halting meant that the frenzy in small caps stopped. However, from those levels, the one that we saw in 2024, the small cap index has come off 15% from the highs as well. So there's still some time to go up apparently. So this is no indication that this is the time from where we'll see a massive rally to come by as well. So that is something that we wanted to put forth. Now remember, in terms of the performance of this particular fund, in last 1 year it has been quite flat. We do have a 5-year CAGR of 22%, and since inception the fund has given a return of 12.5%. The fund manager here is Anish Tavalke, and generally if we look at the performance of most of these small cap funds in year-to-date basis and last 1 year basis as well, there has been a decline. But the other funds which are reopened for subscription are there for you on the screen. Some of those foreign funds, and they have the strategic metal and energy fund of fund as well. But you know, generally we've been talking about it, Vinny, that how these small cap funds year-to-date and on a 1 year basis have seen a decline. But that is not how we look at mutual fund investing, the past 1 year returns. So that is something that we wanted to put forth. But yes, there has definitely been a decline in terms of returns for small caps.
Absolutely. So it's interesting, time, and Sonal has mentioned and put forth that, you know, this is no indication that this is going to stop or whether you should buy. We are just understanding as of now what's going on here. But silver ETFs, that's the next one, an important, things that are happening here as well, because silver ETF today, look at it, we've seen a sharp sell-off that's come in for silver ETFs as well, whether you look at any of the names, Nippon Silver, ICICI Pru Silver ETF, 10 to 20% was the range that we saw the fall coming in for all of these, though they've recovered from the day's lowest point. But silver ETFs, like you can see on the screens for you all as well, that has seen a sharp sell-off in today's trading session. Obviously, there are a lot of global factors that come into picture as well, commentaries that come from Trump as well. But to not forget that there is an increase in leverage positions for some of these silver ETF funds as well. So we'll be watching out for that. But that's what we're going to be discussing today with our guests. And let's bring on Nasser Salem, who's the managing director at Flexi Capital, joining us right now to talk to us about all of this. Nasser, good afternoon. Thank you so much for joining us on the show. You know, I was talking about silver ETFs, and that is something that is seen a very sharp sell-off today. So one, in terms of, we also have a lot of viewers who have asked us queries as well. So what should one be doing right now with terms of silver ETFs? Prasad from New Delhi is also asking that if now he can look at investing in silver funds directly, is that something that one should keep an eye out on? How should one play the strategy for silver?
Good afternoon, Vinny and Sonal. Great to be back on CNBC. I think to all your viewers and to all of you, a very, very happy new year from all of us at Flexi Capital. To your question on silver, Vinny, and I must tell you, now it's entered into very unnurtured territory, if I can say so. I'm putting my neck out in saying this, that, silver fundamentally, the levels that we were tracking to was between $62 to troy ounce to about $74 now. It's far beyond that. The other indicator that we track to is the gold to silver ratio, right? And historically, the mean average has been about 60s to 1 time. And now, it's come to about 51 or 2:1. It's been very, very volatile. I think as far as we are concerned, to all your viewers, if there is a tactical call that was made for silver That chapter seems to be ending now. That game has come to an end. It was, if it falls from here by about 30-40%, perhaps there could be some value that one can see. But today, it's a very, very cautious view we are giving on silver. Fundamentally, investors are pricing in higher industrial demand, I must tell you. And it's now become very, very speculative. There is more speculation in silver than fundamentals, and therefore it's a very, very cautious and a clear view that one should avoid it. As far as if it's a tactical call, the money has been made. Please avoid any FOMO buying here.
But what about, silver mutual funds, or someone wants to start investing through SIP? Prasad was asking about that. Is that something that they can start right now?
See, Vinny, long-term fundamental, both silver and gold. I mean, in this case, silver. Since your question is that, the only point is that silver today is so high. Even if you're buying in an STP or through an SIP, you may end up buying only at lower price points. So if you have a patience which is fundamentally long, and you are about you have a good view of about 5 to 7 years, because I must tell you again, in the last 10 years, we've seen drops of silver as high as 50 to 75% intraday, right? So therefore, very, very cautious view. Yes, if you're still very keen, SIP is the only way to do this. But again, fundamentally cautious, long-term view, 5 to 7 year bare minimum.
Okay, take that point, Nasir. Now that we've spoken about silver ETFs and what's happening in that state, let's come back to small caps, because that definitely is the talking point. The starting of subscription in ICICI Small Cap Fund, what do you make of it? Because the biggest question that investors are asking now, and we've gotten that query as well, should they subscribe to this now? Or do you think there's still time to wait?
So also the start of 2026 has certainly been a testing time for investors, especially with the small and mid-cap category. Segments facing a notable correction, right? Since the beginning, in just 20 days, the correction, as you may have seen, is about 6% in the Nifty Midcap 150, the index, and about 7% in Nifty Small Cap 250. So clearly the PE valuations are looking attractive. I mean, with median PE midcap of 150 and small cap of 250. But again, cheaper valuations does not guarantee any major return, right? We still feel that a quality first mindset, mid caps and small caps can be preferred, since the correction has wiped out the overvaluations, but low quality stocks. But this only is favorable when you have a long-term horizon. Again, the fundamental point is valuations they've come off a bit, but as long as you have a long-term horizon, and as far as subscriptions are opening up for a lot of these larger asset management companies, it's a good welcome, because from a diversification basket perspective, certain proportions can go into SIPs in the small cap space. And again, very, very staggered, not looking at lump sum again, because you can get benefit of higher, because of volatility and rupee cost averaging, you can enter into a small cap. But again, very, very cautious and very slow approach. Again, there, valuations have come off, no doubt.
No, so specifically for ICICI Pru AMC Small Cap Fund, Nasir, that's the particular story. I'm not just talking about the entire small cap universe in the mutual fund space. For this particular fund, Lohit is asking if he should start subscription via SIP or lump sum in this particular fund.
ICICI Small Cap is definitely a go buy for us. It's one of our shortlisted recommended funds. It has a very interesting PE ratio currently, also holds good alpha and beta compared to some of the other funds. So it's you may look at that given your portfolio. I'm assuming that the underlying has been discussed with a specialist, somebody who's certified. So staggered way can be looked at with the ICICI Small Cap.
Okay, staggered way is what one could look at. So SIP way is you're saying is go about it. But Nasir, how much of one's portfolio should look at in terms of the mid and small cap in the current scenario? How should we go about that?
So clearly, see, as far as mid and small cap is concerned, this obviously should be a part of your core portfolio, between core and satellite. So we feel that in the core portfolio, currently in small cap, we would not go beyond 10%. Clearly, as I told you, the reasons why we're still waiting for valuations to become a little more attractive, perhaps in the next few quarters. And In mid caps, we can go as high as about 15 to 20%. Again, a very, very staggered way. And these exposures are a function of the overall portfolio, assuming that your basic hygiene of core and satellite has been addressed. And there is obviously appetite for volatility that one has when you're investing in these category of funds.
Okay, all right, take that point, Nasir. We have a lot more questions, so hold on to that. For now, we'll slip into a short break and come back with more on what to do with the small cap and the mid cap space. Stay tuned for that.
Fly Emirates, fly better.
Welcome back to IMF Corner on CNBC TV 18. We still have with us Nasir Salim, Managing Director at Flexi Capital, and we're discussing mid and small cap funds. How should one go about it? Nasir, there are another important question, that was put to us by some viewers as well. This is from Arav Jain. Actually, he's asking that, and a fair question, because some of the small cap funds now are holding over 200 stocks to manage liquidity. Are they becoming closet indexers and maybe killing that ability to generate alpha? How should one be looking at this when they are looking at funds, small cap funds?
See, basically, Vinny, I'll tell you, as far as small cap is concerned, the universe is obviously not very large as compared to large cap funds and stocks. So clearly, the concentration bet. I mean, one of the views that a lot of fund managers are trying to do is trying to ensure that liquidity, and after, especially when SEBI introduced scores, liquidity test scores, to say that if you want to redeem money and if there is a massive redemption pressure, can one manage that? So I think today's scenario that is being done very beautifully by all the asset managers. Clearly, they're trying to maintain optimum liquidity. Obviously, SEBI has come in and pushed in to get those controls in place. So that for today does not seem to be a bit of a challenge, because the larger asset managers, like for example you said about ICICI, some of the other ones that we kind of have shortlisted work, like, for example, there is Bandhan, there is HDFC, there is Sundaram. Some of these continue to hold all of these measures very effectively to manage liquidity or massive redemption pressures that one faces. But the discussion is that, the horizon, clearly, as compared to large or mid, for small cap investors has to be very, very long. And from these levels, we still feel a 7 to 10 year horizon is ideal for small cap investors, which also means that, if you don't need liquidity, you can actually just park in money in those small cap funds, and obviously manage to ensure that some of the ratios that we all track remain, in that category the highest for those funds. So one is that. The second quick one, Vinny, as I told you, is that between the larger asset managers, what they're also wanting to do is they're betting on small cap in the event that they will become, bigger over the years. And that's when the multiple and the return on generation of investment happens to those funds and those investors who put money in them. So those are the two broad, very important criteria where we feel at least that will address one part of the small cap portfolios.
Okay, take that point, Nasir. And you have indicated some of the funds that you like from the mid cap and the small cap space as well. From the small cap space, it is Bandhan small cap, HDFC small cap, Sundaram small cap. And if we look at the performance of some of these funds in last 1 year and year-to-date basis as well, of course, most of the small cap funds have seen a decline year-to-date. For LICMF, it is around 8%. We do have Motilal Oswal, which is down 9.5%. Quant small cap fund is down around 11%. But if we look at the Sundaram small cap fund, while it is down 4% year to date, it is actually up 1.3% in the last year gone by. Similar is the story for Bandhan small cap fund as well. It has not declined as much as other funds. For HDFC mid cap as well, it is one of the funds which has done well in last 1 year versus the performance that we've seen year to date. That's the underperformance that is coming by in mid caps and small caps in general. But Nasir, with investments, everything comes with some sort of risks as well. If somebody is looking at investing in small and mid-cap funds right now, in the current scenario where we are talking about so much volatility, do you think there are pockets they can look at? Do you think some sectors they can look at? Or straightforward, they can just dive in and buy any of these right now?
No, clearly. So, Sonal, there is, inherent risk as we just discussed. So clearly, I think if you look at broader parameters, see governance, mid and small cap companies are more prone to key man risk or corporate governance issues, right? Compared to Nifty 50 giants, Sonal. And liquidity and volatility, since small and mid cap is highly volatile and and offer less liquidity, we just spoke about, this segment is likely to be too risky for investors with shorter investment horizons. So to answer your point, I think, there are very important parameters that, we as MFDs track for our investors, which is, what is the kind of information ratio that we track, Sortino, standard deviation, it's something which is very, very important as a barometer. Returns alone cannot be the reasons for one to choose funds. So I think a combination of these, ensures that, you have the right choice of funds. And some of these funds that you just named and that we've shortlisted for our viewers and for you, comes in with those tick boxes, and those ticks have been clearly been mentioned. For example, we've not chosen a particular fund where there could have been any past issues on where they've gone and compromised on corporate governance for small cap companies, for example, right, or mid cap companies, for example. So I think it's very, very important that for all our viewers, the right set of funds using parameters I just spoke to you about, standard deviation, return is one parameter. So there is risk and return. Both have to be married together to obtain the right set of funds, which in this case is PE ratio, alpha, beta, information. All of these combined, put together, and the returns will govern, and of course, liquidity and volatility through standard deviation, liquidity tests introduced by SEBI, and governance, as I just mentioned to you.
Okay, liquidity, governance, ratios, returns, all of that combined should actually form a part of the checklist, right, Nasir? It's not only, and also returns doesn't mean just 1 year return. Check the long-term returns. I think that is also key, because we time and again mention everyone just sees 1 year returns, they pick up the fund. That's not the way to go. Nasir, if at such a time, right now, what if one who's already invested in a small cap fund or a mid cap fund, whether lump sum or SIP, maybe is underperforming? How should they look at it? Is it maybe time to look at stepping it up Do they continue with the step up that you go for every year? What should they do?
So clearly, so I'll answer this part in two parts, Vinny. One is that, if you've already invested in lump sum, the last 1 year returns have been suboptimal as compared to relative to the other funds that you may have held in your portfolio. So clearly there, I think it's a status quo. Please don't exit, because if you exit, assuming that you've done your checkbox there, it's long-term money. This could be a certain dip that you may have seen. So that's a hold there. As far as your question SIP is concerned, yes, depending on your cash flows, step up SIPs can be done, because it smoothens out volatility from small and mid cap markets. So a step up SIP can be done, because as I told you today, the valuations are still not very great or very attractive. Cautious approach there. So a gradual increment, between 15 to 20% incremental SIP step up can be done in a small and mid cap. That will smoothen out the volatility and help you get rupee cost of averaging benefit in it.
Okay, all right. Take that point, Nasir. Thank you so much for joining in today. So this is the idea around small caps and mid cap funds right now. Yes, a big fund has started subscription into their small cap fund, but that doesn't go about saying that it could be the right time. Of course, the index is still down 15% from its peak, and that is something that the investors should be aware of in terms of all the risks that Nasir mentioned and some of the factors to be considered before investing your money into small and mid cap funds. But with that, we are completely out of this edition on MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.
To understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and just a bit from now, Prashant as well as Rima will be joining in. Well, we started the day on the front foot. The Nifty popped up close to 200 points at one point in time. However, from the top, we did see some kind of selling pressure. And from around 10:30 odd, the bears made that fight back. And that's where we've come off the top. The good news is still the number of stocks are advancing, and more than the number of stocks are declining. So you need to thank God for the small mercies. I guess the bulls will be saying that even in today's trading session. The Nifty Bank, well, dancing away all the way to around that 50 as well as the 20 DMA. But it's pulled back a little bit. On a closing basis, you'll at least want it to end closer to around that 50 DMA, which is ballpark around 59,200 a close. Next to 20 DMA will be something that's on the bulls' radar. But a green day, you don't have to complain after this sort of selling that we've seen the last few days. Some green on the screen. I'll tell you what, the bulls will take it. But how do you position yourself in the final hour of trade? Midesh Thakkar joins us from Bonanza Portfolio. Midesh, is that sort of a day, right? Not getting the confidence yet that the markets want to break up. We've got the intraday dip, buy, or still you believe the structure is punctured, that we're still going to go down from here?
Good afternoon. So I think my view is that the structure is on the weaker side. In the morning also I mentioned that, close to 25,400, we look to sell, and we got a high of around 25,435. So as long as we are not closing about 25,400, 450, the negative structure will prevail. Even if we close beyond that, it will just negate the negative point. There's nothing positive about it. It might just go into sideways consolidation. So for the time being, the idea of buying is slightly on the lower side in case you get extremely oversold levels. Like yesterday you had a PCR which was below 0.6, etc. And also, then I think you might want to cover your shorts and maybe play for a 1-2 day kind of a bounce back. But overall, I think this is a market which might retest the lows which were made yesterday, which is about 24,900. And in case you break that, on a slightly positional basis, a chance of testing 24,600 is also there.
Mitesh, I request you to wait. We'll get your trades in just a bit. But let's go across to Shireen, who's in Davos and in conversation with SBI Chairman C.S. Setty on the sidelines of the World Economic Forum.
Our coverage continues here at Davos 2026, and we're live with a man who has a pulse on the Indian market, but also is picking up on conversations here in Davos on what that could potentially mean for India. C.S. Setty, the Chairman of State Bank of India, live with us. Thanks very much for joining us here on CNBC TV 18. Do you feel like the mood this time around, even though the headlines are screaming more negativity around geopolitics, the mood within CEOs is tad more optimistic than the previous year?
Absolutely. I think the conversations with leaders across the tech space or financial space seem to be more positive than it was earlier, despite whatever are the headlines. Yes, I think the people are getting used to the new world order,
and not waiting for it to settle.
Yeah, I think that's really a positive sign.
Mr. Setty, banking drew in a lot of FDI last year. 2025 was a big year as far as FDI into the financial sector was concerned. Do you see that trend continuing? And what does it mean for banks like yours to see this kind of money coming into your competitors?
The competition always has been there, Shirin. I think we lived through 2 centuries of competition. But I think it's a good sign in the sense that one is the foreign investors are much more confident about the Indian banking system today, and they're willing to bring substantial capital to that. And some of these banks where the FDI is coming in have the potential to scale up their operations with the capital buffers, what they can create. I think it's a very good development in my view. And that also shows that the regulatory environment is warming up to the these capital flows, and is definitely positive.
Any capital raising plans for you per se?
We just finished 25,000 crores. I don't think we are in need of capital at this juncture. And we also have very strong internal accruals, the capital augmentation which happens through the profits is significant for us. So And we are also planning, as you are aware, the divestment in SBI, AMC. So that will also be capital augmentative for us.
By when do you expect that to happen?
So this calendar year, definitely.
As far as loan growth is concerned, sir, your credit growth outlook has been between 12 to 14%. Likely to hold that number?
Yeah, we are still holding that number. Of course, we have our quarterly results around the corner, so I won't be able to talk much about the numbers. But I think if you see the December industry numbers also have been very positive on the credit growth side. And the guidance of 12 to 14% is still relevant for us.
The loan to deposit ratio at the system level at a record high. What does that mean as far as your ability to lend is concerned and deposit mobilization as well?
For SBI, that has never been a concern. For the industry, yes, there will always be an equilibrium. But it is also important that the shift in the financialization of the savings towards non-bank channels means the banks cannot build their asset side purely on the deposits. I think they need to have the access to the market and some of this money which is moving to the other investment channels have to come back to the real economy. And I believe that there will be a structural shift in terms of the balance sheet structures for the banks. Broadly, if you see, I keep quoting my New York example, New York branch is 80% market borrowings and 20% deposits. We may not go all the way there, but I think
how far do you think you'll go?
I think difficult to imagine what could be the mix, but definitely the mix will change. And too much talk about LDRs may not be relevant as we are able to build our assets based on the market borrowings going forward.
But how soon do you believe you're going to see this balance sheet mix change, as you just pointed out?
I think in another 5 years, there would be a noticeable shift in the balance sheet structuring.
Okay, another 5 years. You said that LDR is not something that one should look at or pay too much heed to. But at this point in time, where do you believe that we are starting to see some stress emerge? Are there any sectors, any pockets where that could potentially be a sign of concern?
Not really. Not really. I think even if there are some time to time, we keep talking about microfinance and unsecured personal loans. But they don't pose the systemic risk from a product point of view. Yes, I think we need to be careful in terms of how we are delivering those products. But I don't see any structurally important developments on the asset quality side.
On the rupee, sir, we've seen a swift and a very sharp move as far as the rupee is concerned. What's the outlook there?
So I don't think anyone is looking at a certain level for the rupee.
But has the swiftness of the fall surprised you?
I think some of this temporary movement, particularly on the FPI outflows, definitely impacting the rupee, and the geopolitical concerns and the capital movement definitely would be having some impact on the rupee side. But I think we should not be unduly worried about swiftness, yes, but the level I don't think we should be worried about.
Okay. So, AI, large part of the conversation here at Davos, and of course that's technology has been something that you have been prioritizing and doubling down on. But as you look ahead, how much more are you going to have to invest? How much more do you do on AI? What is the plan on that front?
There is no separate allocation for AI, but I think the potential of AI at the scale has to be realized for banks like SBI. You can't have one simple use case and say that, I have adopted AI. So our focus now currently is to build the AI stack, technology stack, and identify some of the very transformative use cases, particularly in terms of customer protection. We are the largest user of AML models for fraud risk management, for instance, transaction monitoring, and then move towards hyper-personalized offering to the customers. We are approaching AI from a scale point of view, not simple use cases.
Okay.
And the starting point for thinking about scale is that how do you set up your AI technology stack? And I've been talking to a lot of people here in Davos, and there's been good conversations around AI, not simple proof of concepts, but I think adopting AI at scale.
Okay, what should we expect then from SBI in 2026 in terms of tech spending, in terms of focusing on some of these areas that you just spoke to us about?
Technology is critical for us, and one very favorite narrative for me is that every 6 years, State Bank of India doubles itself. And that cannot be handled simply by doubling the number of branches or doubling your head count, but the right investment in technology and digital adoption. And we are also focusing on the digital migration of our customers. So how do we make more adoption on the 2.2 what we launched, for instance, and also a lot of technological developments, both in terms of simplifying our own internal process and also simplifying the customer journeys.
Finally, an outlook as far as rates are concerned in 26?
I think calendar year 26 probably would see one rate cut.
And deposit rates?
Deposit rates are sticky. I don't think any time the major adjustment will happen in the deposit rates.
Unlikely?
Unlikely.
You're not going to move on that?
Not only us, I think overall banking system, the rate cut may not translate to the rate cuts on the deposits as long as the robust credit growth is there.
Well, Mr. Sethi, always a pleasure. Thanks very much for joining us here on CNBC TV 18. Appreciate your time in Davos, and we look forward to seeing you back home when you announce your results. Well, that is the Chairman of State Bank of India, CS Sethi. A quick break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more. Hello and welcome to CNBC TV 18 special coverage here from Davos 2026. I'm Shireen Bhan. It's very hard to get this man to join us in our Davos studios, but we finally managed. Sunil Mittal, what an absolute pleasure. Thank you very much for joining us here in Davos. Let me first start by asking you what the big takeaway is from that Trump address, what he had to say, the resetting of the global order, so to speak.
Well, I think there are many things that can be taken out of their speech. I would say, prepared speech and rest a lot of rambling all over, as you know. But I think what you take out of that is a new world order has been set.
A new world order has been set.
So now where it lands itself, we have to see. The direction is very clear. The old institutions are not working, at least especially for the US. They believe that they have been taken advantage of, despite being the richest nation in the world. So I don't know how to sort of balance that argument that they have been taken advantage of, yet they keep on becoming richer. In Trump's small gathering that we had yesterday, he said, since I've come, everybody's become twice as rich, if not more. I have made American business people more rich.
Yeah.
So in some sense, he's acknowledging that America is getting the better deal out of the world, and yet he's complaining. But I mean, that's who he is. He wants more for his people, more for his country. But I think what is most important out of this is some of the very close allies of US, Canada, Europe, and many others, recognize today that they are now not having the backing of US as they had before. And that would mean that Europe, Canada, many other countries will have to start thinking about themselves.
What about India in all of this, and specifically India in response and relation to the US?
I think India is busy with doing many other things. The EU deal is around the corner. I'm very hopeful that on the 27th, 26th, 27th, something will be announced. Both sides have made early statements to say everything is looking in good shape. India is tied up with the UK, very, very comprehensive FTA. Australia has done, New Zealand is done, Saudi is done, Saudi is about to be done, UAE is done, Qatar is done. Only piece that is left is US now.
An indication?
I think it will be done. My own view is there are some, last minute negotiations and also some creases that have to be ironed out between the political leadership. But I think US needs to be reminded that for the last 10, 15 years, especially during Prime Minister Mr. Modi's term, India has leaned a lot towards the US. It has moved away from a lot of those people or those countries which America was not in favor of. Our relationship with China has changed. We started to move away even from Russia in some sense. You just can't throw these 10 years of work away by getting upset on one or two trade issues, on some duty, on something which is not delightful to a small constituency in the US. We have invested very heavily into this relationship. I am hopeful that better sense will prevail all around and we will come to a decent landing point. It may not be a 100% satisfactory outcome, but no deal is 100% perfect. You will get to a point where both nations will start to come closer.
Well, Ms. Mittal, let's talk a little bit about business now. And I want to start by asking you about possible tariff hikes, because the last time when we spoke in Davos, you'd spoken about an ARPU closer to 200. We're now at 250.
300.
Are we already at 300?
No, I said my wish has been 300.
Your wish has been 300. We're at 250 currently. But so a tariff hike likely in the offing, even possible?
I think everybody agrees that a tariff repair is absolutely essential. There is no one, including the government, believes that you need to have a very robust, solid infrastructure supporting the digital dreams of India. For that, investments have to be regularly made, and we are not talking about investments for the faint-hearted. There are billions of dollars going every year into the network, into spectrum. Therefore, there's got to be a reasonable business case out there. 300 rupees is what I said 8 or 9 years back. I'm not even asking for adjustment of inflation. Just in real terms, 300 is still eluding us. Can we get there? It needs another 15, 17% increase in tariffs or rearrangement of packs that are given out. For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus one, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway in which everybody is contributing 20, 30 rupees a month to consume a ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to that point of touching 300.
Come to the point of touching 300 in 26, but you talked about a comeback of the third player, and now with this AGR uncertainty, which was looming large over that particular player, ending in a way or being resolved in a way. A game of three, essentially, what could that mean?
We have always said 3+1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3+1 is a good playing place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
No, not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts. But we still
Will you be moving the courts?
I think we are still engaged with the government. We just want to present our case to the government in terms, especially around reassessment and recalculation. I think that's not a legal point. That's a mathematical point, a correction of errors, manifest errors. We will engage with the government first.
So what do you believe that reassessment could potentially mean if the government were to go through with that?
Well, they are going for Vodafone Idea in any case. I think for anybody, if the formula will be the same, if you're paid money that has not been counted, if there are double billing that has come through, if all that is established, your base principal goes down. And that has a cascading effect on penalty, interest on penalty, and the amount can come down significantly. So, and I don't think so any government would want to take more money than it is due. And our really case is what? We are saying, take what is due. We are not asking for any concession, but don't take more than what is due.
Don't take more than what is due, and you haven't heard back from them on the plea for reassessment just yet. But, I want to understand from you what we can expect now as far as your capex plans are concerned. They have been moderating. What can we expect in light of this move to 6G and whether or not we are on the cusp of a 6G rollout as well? Give me a sense of what we should realistically expect.
Capex has not come down. 30,000 crores, and I'm not talking about spectrum. We are spending 30,000 crores, and I'm only talking about India, not Africa and other places. 30,000 crores is being spent in capex every year. It'll continue to be spent. If it is not 4G, it gets into 4G, 5G. If 5G is almost sort of tapering off, it's more fiber, it's more FWA, it is more data centers. So you'll continuously see about 30,000 crores, give or take a little bit. I would say a little more than 30 than less than 30. That will be the order of magnitude. As to 6G, there are standards being still formed. I think we are a few years away. But we don't produce technology. We use technology for the betterment of society, our people, the digital dream that we have. AI is solving a lot of problems. That is really coming in a big way. We have been the leading operator around the globe in checking spam and fraud. Billions of messages and calls are being prevented. Yet it's not complete. We are doing more there.
What kind of AI investments could we expect from you?
Well, on the data center, I would say definitely very large investments. We are doing a big data center for a large international client in Vizag. That's
with Google?
With Google. It'll double up our capacity from where we are today. We would like to get to 1 gigawatt of capacity as soon as we can. Will it take 3 to 4 years? Perhaps. But that is a big
focus area, priority area for you, data centers?
Data centers and sovereign cloud. I think we are also going very heavy onto sovereign cloud. All the enterprise cloud hosting should now start to come onto Indian platforms, and Airtel Sovereign Cloud will be one such platform where we are combining with IBM, with Google and others, but making it a sovereign cloud so that banks, other financial institutions...
When will that be a reality?
It's already a reality. We have already a few customers. Airtel has been running its own on-prem cloud for a long time, but we have already got some good marquee customers, not declaring them as yet, but good wins have been had.
What is the aspiration for the sovereign cloud that you just spoke of?
I think we want to be competing with the large big boys of the world for the Indian market and then African market.
Give me a rundown of Africa. The business, of course, there has turned around and has turned around quite steadily. What is the aspiration now for the African business from here on?
Well, I just hope and pray that the currency remains stable. It's a growing market. It's one of the fastest growing market of telecom anywhere in the world. The market is growing at over 20%. You don't get to see that anywhere. If currencies remain in secular depreciation mode, which is 3 to 4% a year, I think Airtel Africa could get to a $10 billion revenue. By the way, had currencies not gone, widely down, it would have already been at $17-18 billion, and we are at 6. So you can imagine the, damage that the currencies have done in dollar terms. $10 billion, $5.5 billion of EBITDA. looks to be a possibility. The company has now become a FTSE 50 company from a company which was kind of on the edge of 100. Now it's at 50. It's a 15, 16, $17 billion market cap company. So Africa is in great shape now.
Satcom services, because that's the other big bet that you're making, but there continue to be some regulatory uncertainties there. As and when those play themselves out, what's the aspiration on that front?
Look, we are the second largest investor in Eutelsat OneWeb, with the French government having injected a very large amount to take the largest stake. British government is a partner. We are serving Davos, Ukraine, we are serving Taiwan for the strategic needs. We will not be competing with Starlink or Amazon Leo in the consumer market. Our whole constellation is designed for enterprise services, aero, maritime, enterprise services, defense, security needs of the nations. Recently, the Kundalia, the boat which went from India to Oman, was fully equipped with OneWeb terminal, and they were in contact throughout the journey with everyone. So I personally believe that there's a place for few LEO operators, and there are only two at the moment, Starlink and OneWeb. And we are making good progress with that. As far as India is concerned, ready when they are ready, but the total capacity that we have for India will get us, what, a couple of 100 crores, 200 crores of revenue? So whenever it happens, it happens.
More appetite for global deals, global M&A?
Absolutely.
Yes?
Absolutely.
Which sectors are you looking at?
Telecom.
When can we expect
more
these deals to come
take time, but we are now heavy into British Telecom, a wonderful company which we have had a relationship for long years. We are the single largest shareholder of BT. I'm on the board now along with Gopal. We are trying to polish that beautiful gem. More will come.
More will come in the telecom space in different jurisdictions.
Yes.
Okay, let me end by asking you, we've seen a battle on between airport operators and telcos. How is that likely to resolve itself?
It is too much noise. It will get settled down. In the end, customers have to be served everywhere. Under the Indian Telegraph Act, old 1856 and 2023 now, right-of-way access, provision of services to customers is a must. Equally, airport operators put up a lot of equipment and all that. They need to be given compensation for their returns. Some balance will come out. I'm more worried about the contracts that are being given to third parties for the tunnels, for the metros, where they pay a ton of money to Metro to get a franchise, and then they're wanting to charge a lot to us. And what does that mean? Customers suffer, because we cannot pay obnoxious charges for right-of-way to the tunnels and to metros. Airport, I think, is another story, will get settled because it's between private sector. It'll get settled.
It'll get settled. So 2026, what should we expect from you in terms of new developments and perhaps even new announcements?
Well, announcements will come as they come.
Of course, 300 ARPU is what you're hoping for. Whether that happens or not is a different story.
I know, but not focusing too much on ARPU. I think we'll continuously work towards providing better services to our customers, protect themselves. Financial services is an area where Airtel is focusing on. Airtel Payment Bank is now becoming a very important, a safe second account for customers. We are having millions of accounts opened up. It's picked up huge traction. You transfer 2 lakhs there. Worst case scenario is somebody can steal that amount, but your main accounts are safe. So I think that particular area where you're spending through banking channels, you need a safe, secure second account. And I think that is where the focus is going to be. Good services for customers, better networks, more 5G deeper going into the rural areas, and more financial services, safe second account, and keeping our customers very safe from spam and fraud.
Sunil Mittal, always a pleasure. Many thanks for joining us here on CNBC TV 18. Appreciate your time, and we look forward to our annual conversation. I hope we can make it a little bit more frequent, but thanks very much for joining us. That is Sunil Mittal joining us here in Davos live in CNBC TV 18 studio. A quick break, but don't go anywhere. The Chief Minister of Maharashtra coming up right after this.
Okay, well, two big interviews from Davos, State Bank of India chairman and Sunil Bharti Mittal. And the market, look at that, right? I mean, I think we've recovered 60 points from 2:30 p.m. on the index. So there is a bit of a buying which is coming in at lower levels, most definitely. I just want to highlight two names. IIFL Finance, I think at 2:30 as numbers were coming in, the stock was making up its mind what to do. And I think now it's making a decisive move on the downside. It's down 10%, actually it's circuit lower. 560 on IIFL Finance, and Gaurav will join us in just a bit to talk us through this one. And the other one is Radico, which of course I think reported at about 220-ish, and the stock perked up. Numbers look better than the same quarter last year and compared to expectations as well. 6% higher, one down 10, one up 6. That's a story in terms of earnings over the last 20-25 minutes. Well, let's go back to Shireen, who's in conversation with the Maharashtra Chief Minister Devendra Fadnavis at the World Economic Forum in Davos.
Welcome back. The conversations continue here at Davos 2026. Joining me now is the Chief Minister of Maharashtra, Mr. Devendra Fadnavis. Maharashtra, of course, has been making its presence felt here on the Davos promenade for the last few years, and Mr. Fadnavis has become quite the regular here. Thank you very much for joining us here in Davos. What's the Davos headline that you're going to start with?
I would say that Davos has been very good for Maharashtra. Especially, there are several announcements, but I will name 2-3 announcements. Yesterday, we announced Innovation City in Mumbai.
Okay.
So, in our last Davos visit, the theme was innovation and AI. And it stuck to my mind that we need to create an innovation ecosystem in Maharashtra, because now if we have to leapfrog, we'll reach 5 trillion economy, Maharashtra may reach $1 trillion economy. Now, to leapfrog, we need to have innovation ecosystem. And then I discussed it with Mr. N. Chandrasekharan of Tata Sons.
Yeah.
And he was kind enough to steer the entire thing. And he sent his team world over to see all the knowledge cities and innovation cities. And after working for 1 year, yesterday before 450 strong international audience, we have announced innovation city, which will be situated 15 to 20 minutes from the new Mumbai airport.
Okay.
And this will be India's innovation ecosystem for the world.
Okay.
So this is one announcement which is going to absolutely revolutionize the innovation ecosystem.
But tell me what that means, sir. What are we going to see being set up in that city?
So, see, today we know that the innovators need plug and play entire ecosystem. That ecosystem we are going to do. So yesterday only they have announced data centers and certain other stuff worth $11 billion there at that place. So whatever is required, we have seen all the world innovation cities and knowledge cities, and a combine of that. You'll find in the Mumbai's innovation.
$7 billion in terms of investments for data centers. Will that come from the Tatas or will that from the Tatas?
So Tatas first announced it, and then the international community is also coming forward. So I may not name them now because yesterday only I have 4 or 5 meetings, and it has created a buzz. And people from international community want to come there, want to look at their innovation centers there. So I think it's going to be...
But what will be the differentiator, Mr. Fadnavis? And I'll ask you this in the context of what other states are also saying here in Davos and their plans. We've got Telangana, we've got Andhra Pradesh also talking about setting up innovation cities, innovation hubs, AI innovation hubs in specific. What will be the differentiator for this?
See, the innovation hub and an innovation city is a little different. Innovation hub is a sort of, you can say, small standalone type of a hub.
Okay.
But innovation city is something where you host, different innovators. So several AI and innovation hubs can be seen in this city. That is the main difference. Second difference is, I respect all these states. They are doing very well. I'm very happy about them. But ultimately, the real ecosystem lies in Mumbai. One must understand. And this ecosystem, if we capitalize, I think we are going to change the space of innovation. Again, since we are short of time, one more announcement I must tell you, which is very important. We also announced a new smart city near New Mumbai Airport. It is a Raigad Paint Smart City. It will be a new business district which we are creating. So the BKC is our business district. A BKC-like business district in 250 acres. We have announced. The land is identified. All the permissions are taken. And we opened it for the investors. And I'm very happy to tell you that investors from USA, from Singapore, from Australia, from UAE, from Netherlands, they have already signed MOU here with us, and they are investing more than lakh crores in this smart city, which is a new business district.
When will this be operationalized?
So, excuse me for this.
It's -7 degrees. We're all excused. You have no idea. You have no idea how cold it is here. As we said, my apologies for making you brave -7 degrees. It is an open studio, by the way.
So I must tell you that it is at the verge of starting, because the land is identified. It's a joint venture between a private player and MMRDA, which is a state-owned company. This company now has land. We have taken all the approvals. So approvals are there, because normally environmental clearances take time. So now it is ready for investment.
Okay, all right. Well, that's Devendra Fadnavis, Chief Minister of Maharashtra, saying an innovation city is coming up in near Mumbai, near the new international airport. And that, it's essentially already about $11 billion worth of investment, data centers and other physical infra has been committed, which is all going to come up in this place. Land has been identified. You could hear that conversation with Shirin. We'll go back to that very interesting chat with the CM of Maharashtra. But look at, I was mentioning two names, right? IIFL Finance, it was limit down 10%, now down 15%. Oh boy. Yeah. Gaurav is now joining in with what exactly is causing this. Gaurav, take it away.
Well, yes, if you look at IIFL Finance and if you look at the numbers are not that bad actually, because loan book growth is at around 38%. If you look at the pre-provisional operating profit, that has almost doubled, and at the same time they have also reported profits worth 500 crores. But what is actually bothering the market is the development and the comments that the company have made. Now, what company has said is that the income tax department has directed the company to get the accounts audited for a specific block period, and that is the reason. If you look at the stock reaction, it has been a sharp stock reaction. Remember, the company has also mentioned that in the last year of January, there was an IT audit which was conducted at IIFL Finance and at the same time IIFL Home Finance, and for which they have already deposited a certain amount, and this was for the period of FY18 to FY23. And now it is said that the income tax department has asked the company to get the accounts audited, and that is the reason. If you look at the sharp fall, we are seeing a very negative reaction in IIFL Finance right now. We are yet to get the clarification from the management, but for now, market is not taking it in a positive way. As we speak, the stock is actually reaching its lower circuit once again.
Okay, that is just an absolute plunge. Gaurav, just one more time, just repeat, what is the IT department is asking IIFL Finance to re-audit statements for a particular period, right?
Yeah, so the period that they have mentioned in the notes to accounts is for FY18 to FY23. In January 2025, there was an IT audit which took place in IIFL Finance and IIFL Home Finance, and for which they have already blocked certain amount. Now, there is another development that they have mentioned about in their press release. What they are saying is that the income tax department has directed the company to get its accounts audited for the specified block period. So that is something we are still yet to get the clarity from the company, but it seems that market is not taking it in a positive way at all, given that there is this audit which has been asked by the IT department for IIFL Finance.
Okay, I think we have Mr. Nirmal Jain now joining us. Gaurav, stay there. We'll come back to you. Nirmal Jain, of course, is chief at IIFL Group, founder of IIFL Group. Nirmal, great to have you with us here. Good afternoon. Thanks very much. You just heard Gaurav explain the reason why the market is worried, because the numbers look good, but there is this IT department.
I think,
so could you explain?
There's a complete misunderstanding. So section 142A is for complex accounts. And in our case, when the gold loan business has more than 6.5 million customers, obviously that requires certain, and this thing is very procedural. And whenever after search they do a block assessment, they do it for 6 years. So there's nothing unusual about it. And in terms of the block assessment period, I think we have done the reassessment, and there's 1.2 or 1.3 crore rupees of tax has been paid. But other than that, I think anything is speculation, because the special audit, if you read 142A, it talks about accounts or inventory valuations which are complex. That's the time they do the special audit. Or that is when if department is not able to do with their own resources, they can appoint a chartered accountant. And so, a CA firm has been appointed. They've been given mandate for 60 days time to submit the report.
Nirmal, if you can explain it. So there were two issues, right? In early 2025, there was some search by the IT department, etc. But before that, on the gold loan side, RBI had stopped you from dispersing new gold loans. That issue took some time, and finally it got resolved, and they allowed you, and you've been sort of back in the gold business for a while. So this particular issue now relates to what? It's the gold. You started by saying, yeah, go on.
This relates to income tax.
Okay.
So, okay. Gold loan embargo from RBI happened March 24, which are lifted in September without any conditions. After that, we also received approval for 500 new branches for gold loan from RBI. I mean, just basically reaffirming that our compliance is now fully to the satisfaction of RBI. Income tax surge happened in the month of February 2025. And in the income tax surge, the standard procedure is this, that there's a search department, they make the appraisal report, which they send it to central department. And based on that, they basically ask you to submit the revised return. And then when the revised return assessment and everything is done for a block of 6 years. So there's a revised return that we have submitted for, and we have paid them some small, it's a very nominal amount of extra tax that we have paid. And when the assessment department, when they have complex accounting or whatever, then they can appoint a special auditor. But that doesn't mean, I think the special audit has been done by RBI also for gold loan, but this is a special auditor appointed by income tax. Obviously, the special audit done by RBI report will be with RBI, and this is being done by income tax department.
Okay, but this is after you have already paid extra tax. They've.
So they are two independent things. So one is that the assessment department will ask you to do a revised. So we are aware of the special audit will happen in this case, in our case, when the number of customers and accounts or the volume of transaction is so enormous, then the department will always appoint a special auditor. I mean, typically they'll appoint a special auditor.
It is aimed at what? I mean, you're saying it's just procedural. It's not.
Yeah, it's procedural because the RBI report had a mention of cash transactions. We were disbursing loan up to 200,000 rupees of cash instead of 20,000 rupees. And almost about 86% of our customers are less than 3 lakh of rupees of income. So we basically operate in small areas. So that was the finding which RBI has, and that is the finding on which income tax is also investigating. And when they did the search, we gave them the entire data, which was basically the data backup. It still took 3 days time because such enormous amount of data. But as far as we are concerned, we are, as a company, we are 100% confident that there's no further liability we expect on this account.
Okay. Afternoon, this is Reema here. So just in scenario planning, if there has to be a negative outcome to this, what shape can it take? Will it be in the form of a penalty, or will there be some business restrictions that could come through?
No, I don't think there's any business restriction or penalty will come from this. Okay. So what happens is that income tax department, once they got a special audit report, based on that, they can accept our revised return or they can challenge it. If they challenge it, then you can go and appeal. And so there's a procedure for that, but I don't think any penalty or any business disruption is legally permissible under this.
Okay, and this special audit is for the period from 18 to 23 financial years.
After CERT, they do block assessment. So everything will happen only for that time period, 6 years. So when we file our revised return, we don't file it for 1 year. We file it for 6 years in block.
Okay, and the special audit will happen for the 6 years, basically.
Yeah. So whenever anything will happen, the revised return, the revised assessment, and the special audit, everything will be for a block of 6 years.
Okay, so the auditor is appointed by them, the IT department.
Yeah, that's right.
How long does it usually take?
Typically, it takes about 60 days.
60 days. So we can't really. I mean, there is no amount under audit or quantum under audit in that sense, right?
No, there's no amount under audit. Yeah. There's no quantum under audit.
Oh,
nothing
can be. We do. Yeah. And what you said is, once the results of the special audit come, based on that, they can challenge what you paid as extra tax or they can accept it and close it, right? That's it.
In search, typically, this is a long drawn process. I mean, there's a income tax process with no way to shorten it. So when the search department sends it to assessment, central department for assessment, and from there it can go into appeal, which takes years.
Oh, okay. If they challenge it, and then you go into appeal, and then that may take a long time, basically.
Yeah, absolutely. So that's very routine.
Okay, got it. That's that. I mean, I think the stock has recovered about 7% as you were talking, Nirmal. The numbers have been very good, right? There's no issue with the number per se.
The environment is good, and we have done significantly better on our asset quality because our strategically our goals have been to focus on asset quality and bring down GNPA and NNPA below 2% and 1%. And if you notice in this quarter, our GNPA has come down from 2.14 to 1.6%. And similarly, even our NNPA has come down significantly. Also, gold loan business, we have more than fully recovered. So we closed the quarter at a 43,000 crore a year, which is all-time high. And our profitability also has recovered in line as we get the operational leverage, particularly from our gold loan business. Right. And also outlook is fairly positive because the economy is doing well in the segments that we operate in. And all our businesses, whether it's mortgages or gold loan, we expect the momentum to continue.
Okay. Just two questions on the housing finance business side. There was, of course, plans to IPO it at some point, etc. So what's the plan? What's the strategy there? And on IIFL Capital, what's going to happen? There was some plan to sell some stake.
Okay, the housing finance listing need not be by IPO. We can demerge and get it listed. But these are the things on which board has not discussed or not decided anything. So for the time being, there's nothing imminent in terms of any separate listing of the company. At appropriate time, we'll take it to board and discuss. Coming to IIFL Capital, I think the news which was reported in the newspaper is a bit speculative. At this point in time, whenever there's anything which has to be disclosed to exchanges, we'll do that. But no transaction has been done till now.
There was a report, sir, that suggested that a PE is looking at it. You want to deny it totally?
There are quite a few PEs looking at it. From the PE point of view, they are looking at opportunity of investment, and whenever there is something which is synergistic and which we think is value add from a long-term perspective, we'll look at it and we'll take it to board and shareholders as whenever the approval is required.
There were two names, TPG, and this is, actually, this has been around from, I think, we reported in October of last year that TPG was there to acquire up to 20% in IIFL Capital. Bain was also there. Without naming names or anything, but it's the process is on. You're talking to people.
No, people are talking to us, but that is a continuous process. So for any company, there can always be inbound inquiries.
Okay, I remember exactly around this time there were changes, proposed discussion paper, etc. on those from SEBI, and sentiment had soured the first time we had reported exactly around that same time. But interest is still there, right? You're saying you're not talking, people are talking to you. So obviously you're implying that there is a lot of interest.
Yeah, there is always interest, yes.
So TPG and Bain, both of them made the calls, right?
I can't take names because there's nothing which is on the card or nothing which has been discussed by board or approved by the company.
Okay.
But private equity in general will have interest in our finances. No, all our companies that way. But so there are always inbound interest, but there's nothing which is signed, agreed, or anything which is material for us to disclose. So no transaction, no deal has happened till now.
Nirmal, will you just leave us with the FY27 kind of forecast for loan growth, margins? Where will you be at? What's the target?
So I think the indication that we had given earlier, we stand by that. There'll be about 20-25% growth in loan assets as well as profitability.
All right. Thanks very much, Nirmal, for that. Appreciate you coming on. And I think stock's down 12, but the point is it's off the lows by quite a bit. Nirmal Jain telling us that it's purely procedural. It may take time depending on what the special audit finds, but the company's got, if the special audit disagrees with the earlier assessment, then the company can challenge it. And that kind of sort of, takes some time. But procedural is how, Nirmal Jain is describing this entire thing. 550 or so on the stock. Well, let's bring in Nimesh now, who is joining in with D Street Chatter, what he's picking up. Nimesh, thanks for joining in. What's happening?
Hi, Prashant. 0.5% pullback, but clearly off the highs of what we saw in the intraday. Again, it looks like there is a bit of pullback from the extremely oversold levels. And that's pretty much in the broader markets as well. Having said that, unlike what I said yesterday, there is a bit of buying interest. Doesn't seem to be the case today. In fact, the selling continues from the larger FIs. That's the overall sense as far as flows are concerned. And we are seeing very sharp reactions to earnings as well, right? So Wari is up 10%. Bank of India is buzzing on back of good numbers. On the other side, PNB Housing is down. IFL, we got Nirmal Jain to speak about it. But again, that's down as well. So big reactions coming to the earnings, and that's going to be the trend, at least in the near term from a market perspective. I guess 25, 450 is a level to watch. That was for a long time a bit of a support. Now that will act as a big resistance as well. So we need to move above those levels for the confidence to be back. I don't think even in today's pullback there is enough confidence to buy or look to bet on the mid cap or the large cap name. So that's from a flow perspective. I guess as I said earlier, even in the broader markets, a bit of a relief rally is clearly seen because it's extremely oversold. But I don't think there is enough appetite to buy or even venture or look to add at current levels.
What about stocks, Nimesh? Any buzz that you've picked up?
Well, so the first stock on my list is UPL, a marginal recovery after a big sell-off that we saw ever since the company announced the plans to list Advanta, a big 10-12% correction, but a bit of a relief rally today. But I guess from a flow perspective, a leading domestic mutual fund has added yesterday in yesterday's fall, and some domestic and some clutch of HNIs have also bought is a sense in UPL. So that's from a flow perspective. The second stock is Prime Focus. Even that's buzzing in trade today, good volumes. I understand some buy flows at HNI desk, and also there is a buzz that maybe that there could be some corporate development. A potential fundraising in the subsidiary business is a buzz as far as Prime Focus is concerned. And the last is Ashok Leyland. There are a couple of reports in the morning. Most of the analysts have raised the target prices and estimates for Ashok Leyland. But there is buying as well. Some domestic AIFs and a leading long only fund seems to be an active buyer, and hence a bit of uptake in Ashok Leyland in today's market.
Okay, all right. Nimesh, thanks very much for that. So that is D Street Chatter. There's UPL, there's Prime Focus, and Ashok Leyland. Nimesh, just one thing on if you're there on Prime Focus. This is the subsidiary is the B negative. We're talking about.
That's right. So I think it's been in the works for a while now, and my sense is that the city is anticipating that the valuation that they're going to get is going to be quite large. So that could be a big potential fundraising and a bit of re-rating as well for Prime Focus. So that's the anticipation as far as street is concerned.
Okay, all right. Thanks very much for that. So UPL, Prime Focus, Ashok Leyland in focus. 150 higher on the Nifty, 25,312. We'll take a break. Neeraj Devan on the other side. Stay tuned.
Welcome back. Counting down to close. Mitesh is here with us for a few last trades. Mitesh, what do you have for us?
Okay. I'll give some STBT trades given the fact that it's closing time as well. So, APL Apollo, I think post the numbers, the stock has done well. Take a BTST here with the stop at about 1967 for targets of 2010, 2015 for tomorrow. And Hero Motors, that's another STBT with a stop at about 5,500 for targets of 5,450.
Thank you very much for that. Neeraj Diwan, independent market expert, is now joining in. Thank you very much, Neeraj, for joining in. Let me start with Eternal. Numbers are fine. Quick commerce continues to fire for the company, but the stock has slipped 10% from the day's high and now in the red. So is it the leadership change that's caused a little bit of anxiety amongst investors? How have you assessed the news?
Yeah, good afternoon. Yeah, I also feel that it is maybe because of the leadership change which has been announced yesterday, because numbers are not bad. And the stock was trading at a good price. The kind of growth they've shown, margin they've shown. I would have expected the stock, if this news wouldn't have come for the leadership change, stock should have been positive today. So I think just a knee-jerk reaction because of that. But numbers, there's no complaint.
Do you own Eternal, or are you recommending to your clients at 275?
No, I don't own, but I'm recommending to the client.
Recommending at this juncture. Gold and silver ETFs has also crashed today after a record rally. What have you made of that? And are you recommending a buy here?
Yeah, I'm positive on silver. See, the fall today can be attributed to the statements made by Trump in Davos, where he's indicated that he's not going to use force to acquire Greenland. And the stock, then the silver and gold rallied recently. The recent rally was very sharp and quick because of geopolitical concern. So I think that correction is happening right now. But I think post this correction, I am positive on silver, though I'm positive on both gold and silver, but more on silver. I've been positive on silver for the last 1.5 years now, and been recommending to my clients, and all my clients would be holding it also. And I'll continue to be positive. I think if there's a material correction, that will be an opportunity only, because the longer trend still remains very positive. Looking at the uses for silver, demand for silver, and the demand supply gap which is there right now.
Look at two names, right? Hindustan Zinc. Hindustan Zinc is down about 5%. Again, it's up 10% already this year after this 5% fall. The other one is Thangamayil Jewelers. Again, I think they do a fair bit of silver as well. But, it's down 7.5% right now. I'm not sure there's any other reason except that they're being treated as kind of silver proxies more than anything else. At this point in time. Let's just look at IIFL. IIFL is still holding. I think it fell about 14.5 down again, but now 13 lower. We just had, that's a 15% cut on almost a 15% cut. So it's had a sharp recovery and then going south once again at this stage. Gokuldas Exports is having a bit of a, it's being able to, I guess, breathe a little bit, right? I mean, it's back to almost 600 rupees. That's a 6% pop, 597. I mean, the recent low was 550, 547, by the way, the low yesterday. So, it's a decent kind of recovery, about a 50 rupee recovery that we've seen from the lows yesterday. Neeraj, any thoughts on some of these names, especially battered down names in the textile space?
Yeah, Gokuldas Exports I've been following. Last time also when the 50% tariff news came, the stock corrected to 650, 670 kind of levels. And then, slowly when some positive news flow started coming, the stock had rebounded to 800, 850. I think it's a very good company, this company which can cope and change with circumstances, though right now the exposure to US is huge and they're almost 90% export-oriented company, but it's a very good company, good management. They've been margin, when they operate, they generated good margins. So I feel this may be an opportunity only because even after the run-up today, it's still much below its 52-week high. So I think these kind of companies, when these kind of news flows come and they correct, there are opportunities to buy.
Bajaj Consumer was quite the forgotten stock, overlooked, and numbers used to always be very pedestrian. But now with the new management, stock has bounced back. Numbers are looking very strong. Have you had a real look at Bajaj Consumer?
No, I don't track Bajaj Consumer.
Okay, big move, 20% up on that. You've got Physicswala, which has rebounded very large volumes. Rallis, numbers were disappointing, but there was that HSBC upgrade that got the stock excited. Canara, HSBC Life Insurance. So many banking names are higher today. So Bank of India, IDFC First Bank, South Indian Bank, Bank of Maharashtra, Canara Bank. All these stocks are moving up on pretty large volumes. Mid-cap index up 1.5%, Prashant, and advanced decline ratio still holding on well in favor of the gaining side, 3:1.
Absolutely. I think it'll be interesting to see, especially in IIFL Finance, if the stock recovers tomorrow as after that clarification. It's going down. Numbers are good. And the promoters just told us that this is largely procedural, routine. So will the market read this very differently as we come tomorrow is the question. I mean, there's a fair chance it might. So that's a 90 rupee, 95 rupee cut on IIFL Finance, a large one, mind you. There's the market closing, and we are done for the day. 160 higher on the Nifty, 25,318 is where we are at. And yeah, I mean, I think we have ended once again. It's pretty much a similar kind of day in the sense that yesterday we kind of ended almost in the middle of the day's range. It was a very large intraday range. And today, again, something similar has happened. The high is 25,435 and the low is 25,170. And we've ended at 25,318. So almost exactly in the midpoint, like yesterday of the day. But I mean, thankfully, that rebound. The rebound came, and then we ended with respectable gains, and not with 30, 40 odd points like it was looking about an hour and a half to go. So that's the kind of close. The NSE advanced decline is very solid, 2,300 higher and about 840 odd stocks which are lower. So this is a decent kind of close to have. 3:1 is the advanced decline ratio as well. Well, it's a wrap on this edition of Closing Bell. We are going to say goodbye, but don't go anywhere. Markets forward. We'll pick up on all the action. Neeraj, of course, is going to answer some more questions. Stay tuned.
Cool.
Markets snap a 3-day losing streak with all key indices closing in the green. Nifty rises above 25,250 mark. Mid-caps outperform.
Dr. Reddy's rises on an earnings beat despite a largely subdued quarter. A positive outlook for FY27 backed by key launches has lifted sentiment.
Shares of IIFL Finance tumble after company reveals a special income tax audit. Chairman Nirmal Jain tells CNBC TV 18 he terms the IT action procedural, says gold loans is a complex account and hence this special audit.
A mixed bag for broader market earnings in today's session. Bajaj Consumer ended 20% higher after sharp margin expansion. Vari Energy's profit more than doubled year on year. But on the flip side, it was a disappointing quarter from PNB Housing, which missed estimates across key metrics.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra. With me is my colleague Hormiz Patakia. Well, Hormiz, after 3 days of relentless selling that we saw, there was some green on the screen today. Mid-caps outperformed. The Nifty was above the 25,250 mark. And this is after we broke the 25,000 mark, went to the 24,900 mark in last 3 trading sessions. So a lot has happened already. A lot of volatility, a lot of global stories that we are tracking. And earnings, they are definitely driving the sentiment that we're seeing in the markets. But for today, it was volatile, but then we surged, and towards the close, we were in the green across the board.
The bulls will take that in today's session, especially considering the fact that we had almost given up all of those gains at one point. We even slipped into the red just before 2:30, and to end the final hour of the trading session with gains of close to around 130 points on an expiry session, the bulls will be happy with that. Of course, not out of the woods yet. There's still important levels to clear on the upside, but we'll go one session at a time. But here's what we have lined up for you in today's session. The top movers and shakers with Sudarshan. The show is, of course, packed with third quarter results, PNB Housing, Dr. Reddy's, some broader market names, of course, not to forget IIFL Finance. And, of course, we delve into the key events to watch out for going into tomorrow's trading session. Over to Sudarshan now, who is here to tell us all of the movers and shakers in today's session, and I promise you there were a lot of them. Sudarshan.
What a day it's been. After all the ups and downs, at the end we can say it's not a bad close. Nifty managed to close around 25,300. So I'll first talk about those stocks which have reacted to earnings, and reaction was positive. So Bajaj Consumer, Rallis India, you can see both these stocks up somewhere in the range of 15 to 20%. Rallis India also saw few upgrades from HSBC. Also, one more brokerage had upgraded that stock. Vari Energies also reacted positively, up more than 9%, and company has said it's going to exceed the EBITDA guidance for FY26. Radico Khaitan and Ujjivan Small Finance Bank also reacted positively to earnings. Both these stocks closed with a gain in the range of 5 to 7%. Now coming to those stocks which have reacted negatively to earnings of Q3 FY26, and on top of the list is IIFL Finance. You can see a downtick of almost 14%. Now earnings were very good. It has beaten the estimates, but IT department's special audit order has taken over the earnings, and that's the reason while company is saying it's procedural, but the stock is down almost 14%. PNB Housing has missed estimates in Q3 FY26. That's the reason stock has fallen 8%. Eternal, again, earnings were very good, but Dipinder Goyal resigning as CEO weighed on the stock, and now it closed with a cut of almost 3%. Remember, at one point it was up almost 5%. EPEC Prefab and EPEC Durable, both these stocks closed with a cut in the range of 5 to 10% on the basis of earnings for Q3 FY26. Now coming to some more stocks, Hindustan Zinc and Hindustan Copper have seen downtick after several days of uptick, and the reason is the fall in commodity prices. That's the reason both these stocks have fallen 4% each. Swiggy, tracking the earnings and the corporate action related to Zomato or say Eternal, this stock too has seen a fall and closed with a cut of more than 6%. Indian Bank has come out with the earnings. Earnings were very good. That's the reason you can see an uptick of almost 7%. Credit Access also has reacted positively. Now coming to the PSU banks, some of the PSU banks have reacted positively after the good set of earnings from Indian Bank, Bank of Maharashtra, Canada Bank, Bank of Baroda. All these stocks have seen a gain in the range of 2 to 3%. Lastly, some of the stocks have closed at 52-week close. Kalyan Jewellers continues to see a fall. Today also it was down almost 6%. Sapphire Foods, Devyani International and Lodha, these three stocks also have closed at 52-week lows.
Okay, all right. Some important names there. Thank you so much, Sudarshan, for bringing us that list. Those were some major movers in markets today. Let's get to specific stock now. Shares of Dr. Reddy's gained after the results beat estimates in an expectedly subdued quarter. The outlook for FY27 is positive, with key drug launches expected to make significant contributions. Ekta Batra is joining us with the report card on what the numbers look like and the outlook going forward.
Well, yes, I'll start with what the street really liked for Dr. Reddy's this time round, and it seemed like it was all outside the US. For example, we had India, which was up 19% on a year-on-year basis. NRT, which is basically the nicotine replacement therapy business, was up 25% this quarter. Russia reported its highest ever quarterly revenue, up 51% year-on-year. And for the US business, it came in better than expectations at $329 to $330 million versus estimates of up to around $310 million. The commentary was positive as well. For example, they said US should grow in single digits, other markets in double digits. India around 15 to 16% is a sustainable growth rate over the medium term. NRT business, the company sees strong upside to the earlier single digit guidance that they had, and 25% is a solid average that they think that they can work with when it comes to margins. That was the guidance for FY27 in terms of margins being maintained at 25%. Now, in terms of key launches, they expect to launch semaglutide in Canada anywhere up till the month of May, so that would be important to track. Separately, they would be launching semaglutide in 80 other countries, inclusive of India, which would be on 21st of March, as well as other big markets such as Brazil by July. Now, we also have the key triggers going forward for Dr. Reddy's, which would be the semaglutide launch, which would be on, the street would watch whether it's on time, as well as the biosimilar pipeline that they have. Brokerages, CLSA has upgraded the stock, Motilal is a neutral, HSBC has a buy call, and Citi has a sell.
We are also busy with BD. So the composition of the BD, as well as the compositions of the other elements, will determine if it's 20% EBITDA or 25% EBITDA for this kind of period of time. But overall, the 25% that we discuss is very solid average that we always aiming to do. And we are waiting for the response, hopefully with approval. The approval can come anytime from now to May. It's a very important product for India. We will definitely launch in India once the patent is expired, which is in the later part of March. The other markets that will launch the product will be Turkey, Brazil. I'm talking about relatively bigger market.
One of the promising earnings reactions in today's session being Dr. Reddy's. Let's bring in our guests on the show, Neeraj Diwan, who's an independent market expert, and Ruchit Jain from Motilal Oswal Financial Services. Gentlemen, good afternoon. Thank you for joining in. Ruchit, to you first. It's been very, very choppy over the last couple of trading sessions on the index. But do you believe that this recovery that you have seen from 24,900 till now is a shorting opportunity, still a sell on rallies market? Your call on the index.
Yeah, hi, very good afternoon, Harmas. Very good afternoon to everyone. Well, there seems to be a pullback move. Last couple of trading sessions, what we have seen that the RSI readings were oversold, index had approached the 200 DMA. No signs of a resumption of that, of the uptrend, but I think we should see a pullback towards 25,000, 5,500 kind of levels, where again, if one has to take a short position, then the risk-reward ratio would become favorable. So not at current levels, but expect another 200 point kind of up move from current levels where market would face resistance again.
Okay. Neeraj, let me come to you. We've spoken about markets, and earnings are one of the driving factors that's leading to the moves that we are seeing. Ekta just spoke about Dr. Reddy's. The numbers were better than subdued expectations. Anything which has stood out for you during earnings so far? Do you like something from the pharma pack particularly?
Yeah, good afternoon. In the pharma pack, I'm more positive on CRAMS, segment there. The growth is really good. And API CRAMS combination, the companies which a couple of them have already declared results also, and the results are very good. So this is one space I'm positive on as far as pharma is concerned. And then to come to the question of results, there have been very good results. We have noticed in the last couple of days also. Like Jindal Stainless, one stock I track, has come out with very good volume growth, margins, EBITDA margins have been good. Radico Khaitan came out with a good set of numbers where their business mix and the volume growth has been in line or slightly more than expectation. And Infosys also, surprisingly from the IT space, the results were decent. So the margins were not as per expectation, but volume and the guidance and the deals win that they announced were also quite positive. So they've been a good set of earnings from some of the metal names like Jindal Saw. PSU Banks is one space where we've been positive on, and the numbers have also been very good. So this time around, the expectation was not too huge, and still some numbers have been good. We've seen stocks reacting to them also very sharply, like we saw in the common wave I just mentioned also.
And since you mentioned a lot of these broader market names, Neeraj, there were a lot of these earnings that were reported over market closing yesterday and in today's session as well, be it Vari Energies, Bank of India. Gaurav is joining in with more details on all of this. Gaurav.
Well, yes. When we look at the stocks and the reaction on the back of the third quarter's results, first let's talk about Bajaj Consumers, because if you look at the numbers, net profit increased almost by 83% on a year-on-year basis, while on the other hand revenue that also increased almost by 30%. And this is the reason why if you look at EBITDA margins, we saw EBITDA margins improving to 18.3% versus what it was at 12.2% just a year ago. So another 600 basis point of improvement is what we saw, and after that we saw the stock hit its upper circuit. Other than that, Vari Energies, this company also came up with a good set of numbers, 26% growth on a sequential basis in terms of net profit, and this also translates into net profit doubling on a year-on-year basis. Revenue increased almost by 25%, and again we saw margin expansion. Margin now stands at 25.7% versus what it was at 23% just a quarter ago. So we saw some good numbers and good reaction in this stock. Bank of India, there we saw positive surprise coming up from net interest margin. So first, if you look at net interest income, that increased by 6.5%, but two positive surprises. First is that the net interest margins that expanded almost by more than 15 basis point. It actually expanded by 16 basis point on a sequential basis, despite the rate cuts that we have seen in the month of December. And at the same time, if you look at advances growth, that came in at around 13.6% versus their own guidance of 13 to 14%. And in fact, the domestic advances grew more than 15% on a year-on-year basis. Lastly, let's talk about PNB Housing. Now, what happened in this stock is that we saw some negative reaction, and the reason was the numbers, because there were three key reasons. First is net interest margins that declined almost by 4 basis points on a sequential basis. Remember, the street was not expecting any decline. They were expecting stable net interest margins. Second is the disbursement number. Now, disbursements actually declined in their affordable segment. And why this was negative is that the affordable segment is the segment where the company is focusing more, and they wanted to increase their share in one of the segments like affordable segment. And the disbursements, because they declined on a year-on-year basis, we saw negative reaction. Let's also not forget that PNB Housing is also going to exit from the FNO from the next series. So that is also something that weighed on the stock. As a result, we saw some sharp reaction and some decline in the stock price today.
Okay, all right. Thank you so much, Gaurav, for all these details, but you have to stay with us. Let's talk about IIFL Finance as well. There was a big decline in company stock. They revealed a special income tax audit, but we spoke to the chairman. He termed the IT action as procedural. They said gold loan is a complex account and hence the special audit. First, tell us about it, and then we'll, of course, listen into what he had to say as well.
Well, yes, if you look at IIFL Finance, and in fact, if you look at the numbers are actually good for the company for third quarter. AUM growth, that stands at around 38% on a year-on-year basis. And in fact, on a sequential basis, it came in at around 9%. This was specifically led by gold portfolio. Company also mentioned that the gold portfolio has been back to the normal level where we have seen pre-embargo. Other than that, if you look at net interest income, there also we saw a healthy set of numbers, 16% growth on a year-on-year basis. PPOP increased almost by 100%. That means PPOP doubled on a year-on-year basis, and at the same time profit that came at around 500 crores versus what it was at 81 crores just a year ago in the same quarter. So all in all, numbers were good. What if you also look at return on assets? Now they also improved by 30 basis point to 2.5% versus what it was at 2.2% just a quarter ago. But what came in as a negative surprise is the IT audit. Now company said that they have received communication from the IT department directing the company to get the accounts audited for the specified block period. Now, this block period that we are assessing is FY19 to FY25 as mentioned in the company's notes to account. And at the same time, if you look at the management commentary, they remain very positive. What management said is that they do not expect any business restriction on the account of IT audit, and they do not see any further liability on the account as well. But all in all, we saw a very sharp reaction, negative reaction before market close. And let's also not forget that IIFL Finance is also one of the stocks which is going to exit from the FNO list. So all in all, given that there were good numbers, but IT audit which came as a negative surprise and the FNO exit, all these actually weighed on the stock price as we speak, and as the market closed, it declined almost by 13%.
I think there's a complete misunderstanding. So Section 142A is for complex accounts. And in our case, when the gold loan business has more than 6.5 million customers, obviously that requires certain, and this thing is very procedural. As a company, we are 100% confident that there's no further liability we expect on this account.
All right, that's clarification coming in from the company. Let's go across to our guest. Neeraj, what do you make of IIFL Finance? The audit is a special audit, but the numbers look different from, the numbers were decent in fact. What's your take on IIFL Finance or any of the other names from the financial space?
The first IIFL Finance numbers, which I saw briefly, have been very good. Disbursement growth, the growth because of gold loans. So I think everything else is good about the numbers, but I think you need to get some more detail because the stock is not cheap, even after the correction today. So growth is good. So we need to get some more clarity on this income tax order or whatever procedural thing that has come on the company. We need to get some more details on that. I think barring this, financials is doing very well. That is one segment which has given a good return over the last couple of quarters. So there are continuing to be positive on PSU banks. I think PSU banks are in a good spot. The loan growth is good. And in NIMs have stabilized. They may inch up going further. And the cost of capital is also coming down, the deposit cost coming down. So PSU banks is one space where I continue to be positive on after this number, after this quarter numbers. And barring this, even the private sector banks, which have corrected a lot, you got a decent set of numbers from HDFC Bank. The stock has corrected since the last numbers were declared. So in the large cap private sector banks also, there is opportunity.
So private sector banks is where an opportunity lies. Ruchit, very quickly, if you could give us a view on the charts as well for IIFL Finance, there would have been some distortion after the kind of fall that you've seen.
Yeah, so I think the stock price has already seen an up move before the numbers. However, in today's fall, the stock has now approached the 200 EMA level, which is around 505, 510. So that remains a crucial level to see if the long-term trends get negated. So 500, 510 would be the crucial support for the stock.
Okay, all right, take that point. Neeraj and Ruchit, thank you so much for joining in today on the show. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side. Welcome back. You're still tuned into Markets Forward. Let's talk about some important corporate voices. EPAC Durables Management expect a recovery in the room AC segment over the next few quarters. However, the air conditioning business is likely to decline 10 to 15% this fiscal, which the company believes will be offset by growth in other segments. Overall, revenue growth for FY26 is expected to be flat to marginal.
Canada HSBC Life Insurance was the other management that we spoke to during the course of the day, and they remain confident about their growth outlook, and that is backed by strong performance in the first 9 months of the financial year. Now, MD and CEO Anuj Mathur told us that the company is guiding for annualized premium growth of around 18 to 19%, which it expects to be higher than the industry average.
Bank of India's management expects return on assets to touch 1% by Q4, signaling improving profitability ahead. For FY26, Bank of India believes margins can be sustained at current levels, but may see bottoming out in Q4. The bank said yields and advances have remained stable at 7.81%, while the cost of deposits declined during the quarter.
And before we call time on today's show, let's turn our focus to the key events that you need to watch out for going into Friday. Upasana is here with all of that. Upasana.
Well, first up, let us look at the key important results that we'll be closely tracking. Companies like JSW Steel, BPCL, Cipla, IndusInd Bank, Shriram Finance, Godrej Consumer Products, Laurus Labs, MCX, JSW Energy, all these counters will be reporting their Q3 numbers tomorrow. Hindustan Zinc will also be in focus as the board meeting is scheduled tomorrow to consider fundraising. In terms of domestic data, bank loan growth, deposit growth, foreign exchange reserves, all these important economic cues will be out tomorrow. And now let us look at some of the global economic cues as well. US S&P Global Manufacturing Data, Services PMI, and even Global Composite PMI will be out tomorrow. And Japan, the main, that is the Bank of Japan, will be giving its interest rate decision tomorrow. And lastly, coming to the closing of World Economic Forum tomorrow, which had started from Jan 19th. So we'll be covering that as well, along with some important developments out there. So all in all, looks like quite a power-packed day tomorrow.
Okay, all right. Thank you so much, Upasana, for joining us. So those are the big events going into trade tomorrow. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Arundhati Ramnan, and here are the headlines that we're tracking for you this evening.
We have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole.
US President Trump backtracks on threats to use military force or tariffs to acquire Greenland, tells CNBC he has a concept of a deal on Greenland which includes rare earth mineral rights, but doesn't elaborate further. Global markets heave a sigh of relief after Trump retreats on tariff threats against European nations. Stocks rally across Asia, Europe and the US. Gold prices cool from record highs. Sensex and Nifty snap a three-day losing streak. All sectoral indices end in the green. Broader markets outperform. Rupee gains marginally against the dollar but remains closer to the 92 mark.
I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
US President Donald Trump hints at a good trade deal with India, praises Prime Minister Modi, calling him a close friend. That's a Money Control exclusive. Industrialist Sunil Mittal, whose Bharti Enterprises is the largest shareholder in BT, tells CNBC TV 18 there is more appetite for M&A in global telecom, says Airtel is engaging with the union government on reassessment of AGR dues, calls tariff repair an absolute necessity for the sector, calls ARPUs in the 200 rupee range are unsustainable. Global CEOs upbeat on India. Honeywell's Vimal Kapoor says automation is on a growth path. Engineering major ABB expects strong energy demand and India to play a big part in its global growth. That's another exclusive. PhonePe updates its IPO papers with SEBI. Walmart will sell 9% stake. Microsoft and Tiger Global seek exit. There will be no fresh issue of shares and the entire proceeds will be received by the selling shareholders. Air India is bracing for a $1.6 billion loss this financial year, according to a Bloomberg report. The deadly crash in Ahmedabad and Pakistan's airspace closure impact the earnings. Maharashtra Chief Minister Devendra Fadnavis announces a new business district in Raigad, says all approvals are in place for the joint venture and global investors have already committed 1 lakh crores. Also announces an innovation city which will be located 15 to 20 minutes away from Navi Mumbai Airport, with the Tatas commit an investment of $11 billion. Pandemonium at the Karnataka Assembly after the governor reads just 2 lines of his address to the legislature. Chief Minister calls it a violation of the Constitution. This is the third standoff between a governor and non-BJP ruled state government in the last 2 days following Kerala and Tamil Nadu. Those were the headlines that we're tracking for you, but the top story this evening, just hours after backtracking on using military force to take Greenland, US President Trump also pulled back on his threat to impose tariffs on Europe. This after Trump said NATO has agreed on a framework for a future deal on Greenland after a meeting with NATO chief Mark Rutte. However, Trump did not mention if the deal involved the USA annexing Greenland. NATO chief Rutte maintained the annexation issue did not come up in the discussions with President Trump. He added that the NATO and US have agreed on ensuring safety in the Arctic region. However, tensions between Europe and USA remain strained. European Central Bank's President Christine Lagarde walked out of an invitation-only dinner of VIP guests during a speech by US Commerce Secretary Howard Lutnick. Lutnick reportedly criticized what he called the continent's declining competitiveness. Furthermore, a group of EU Parliament members have blocked a vote to ratify a US-European trade deal in protest of Trump's threats. However, German Chancellor and Italian PM Giorgia Meloni welcomed President Trump's stance on Greenland. Speaking to CNBC, President Trump said that he agreed on a concept of a deal on Greenland.
You gave it very compelling in terms of talking about what you've done in the first year domestically, but also very compelling in the case you made about Greenland. So I was going to ask you, did you see any of your European cohorts nodding? But I guess I don't have to ask that now because of the news that it breaks very quickly. Can you go into what you just talked about with the NATO meeting?
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland, and it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark, Rutte. And he, I assume he's been speaking to them. He's been speaking to all of them.
Are mineral rights involved? Is ownership involved? Did the Golden Dome sway people?
I don't want to say yet, but...
The Golden Dome was very compelling today when you talked about that.
Yeah, the Golden Dome, and they're going to be involved in the Golden Dome. And they're going to be involved in mineral rights, and so are we.
It's not specific enough to know at this point how long this lasts, whether it's...
Forever.
Forever.
It'll be forever.
For Greenland at this point.
Yeah. Forever.
That's staggering.
That's better than a 99-year.
This is what, 2 hours after.
It's better than the Obama deal with the famous Iran nuclear deal with a 9-year deal. No, this is forever. This is a long term.
The aim of these talks is to agree for closer cooperation amongst allies in the High North and beyond. It is good news that we are making steps into that right direction. I welcome President Trump's remarks from last night. This is the right way to go. This is the right way because any threat to acquire European territory by force would be unacceptable.
It's totally clear that there was a breaking of the Scotland deal by President Trump, announcing 10% tariff for European goods starting at the 1st of February and 25% if Greenland is not going to the United States in June.
Global markets heaved a sigh of relief after Trump retreats on tariff threats against European nations. That rubbed off on India as well. Sensex and Nifty snapped its 3-day losing streak with all major indices closing in the green. Nifty closed above the 25,250 mark and nearly 40 stocks ended higher. Broader markets outperformed, barring consumer durables and realty stocks. All sectoral indices ended the day in the green. In the money market, the rupee gained marginally against the dollar but remains close to the 92 mark. The RBI has sold dollars worth more than 43 billion so far this year as it continues to mount a defense for the Indian currency. Sapna Das is here with all of those details. Sapna, tell us more about the RBI's dollar sales.
Well, yes, you're right. $43.2 billion to be precise is what the Reserve Bank of India has sold in the current financial year, between April and November. That is just the first 8 months of FY26, and this compares with the $34.5 billion worth of sales for the entire financial year last year. So last year, in 12 months, they sold under $35 billion. In the current financial year, they've already sold over $43 billion in just 8 months, and 4 more months to go right now. Of course, this data is up to November, as I just mentioned. So December and Jan, again, as we have been witnessing, there has been a lot of volatility in the rupee, and that data will come out in the later statistics of the Reserve Bank of India. So this is an ongoing story, so to speak. So that's one. And this is the first time the FY25 level has been breached. It's higher by around 28% already. However, if you look at month on month, in FY26, November dollar sales by Reserve Bank of India in the spot market, they have been slightly on the lower side, around $9.7 billion odd dollars versus 12 billion odd that they had done in October. So October actually was the highest dollar sales in the spot market by RBI in FY26. November, it's a tad bit lower. But as I just mentioned, the December and Jan data will be crucial to watch out for. So we'll have to see where this entire, the spot story is going. Having said that, again, if you look at the forward book building, the forward book of RBI, there again, the dollar sales have been pretty strong, around $66 billion odd in the current financial year, and this is on month, around 3.77% higher than October. October, it was somewhere around $63.6 billion odd. Having said that, if you look at how the entire trajectory has unfolded in terms of RBI defending the INR, basically, so the story turned way back in FY25. So if you look at FY24 data, actually RBI had been a big net purchaser of dollars. Over $41 billion they had actually bought in FY24. The story completely changed in FY25. And similarly, that trend continues in the current financial year. We'll have to wait and watch for more data points to come out.
All right, Sapna, many thanks for those details. And moving on to the commodity markets, where gold and silver prices softened after touching record highs yesterday. This is geopolitical tensions and safe haven demand eased. A firmer dollar also pressured prices. Both gold and silver exchange traded funds also crashed, with some dropping as much as 21%, mirroring the fall in precious metal prices. US President Donald Trump, while responding exclusively to a question posed by Money Control, expressed confidence that India and the United States will have a good trade deal soon.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Meanwhile, the US president unveiled the Board of Peace on Gaza at Davos. This body will focus on resolving international conflicts. However, members looking for permanent membership on the board will have to shell out $1 billion. Speaking at the signing ceremony, Trump claimed that everybody wanted to be a part of the board. On that note, it is time for us to head into a short break. But coming up next, industrialist Sunil Mittal, whose Bharti Enterprises is the largest shareholder in BT, tells CNBC TV 18 there is more appetite for M&A in global telecom. That and more when we come back. Stay tuned.
welcome to CNBC TV 18 special coverage here from Davos 2026. I'm Shireen Bhan. It's very hard to get this man to join us in our Davos studios, but we finally managed. Sunil Mittal, what an absolute pleasure. Thank you very much for joining us here in Davos. Let me first start by asking you what the big takeaway is from that Trump address, what he had to say, the resetting of the global order, so to speak.
Well, I think there are many things that can be taken out of their speech. I would say, prepared speech and rest a lot of rambling all over, as you know. But I think what you take out of that is a new world order has been set.
A new world order has been set.
So now where it lands itself, we have to see. The direction is very clear. The old institutions are not working, at least especially for the US. They believe that they have been taken advantage of, despite being the richest nation in the world. So I don't know how to sort of balance that argument that they have been taken advantage of, yet they keep on becoming richer. In Trump's small gathering that we had yesterday, he said, since I've come, everybody's become twice as rich, if not more. I made American business people more rich. Yeah. So in some sense, he's acknowledging that America is getting the better deal out of the world, and yet he's complaining. But I mean, that's who he is. He wants more for his people, more for his country. But I think what is most important out of this is some of the very close allies of US, Canada, Europe, and many others, recognize today that they are now not having the backing of US as they had before. And that would mean that Europe, Canada, many other countries will have to start thinking about themselves.
What about India in all of this, and specifically India in response and relation to the US?
I think India is busy with doing many other things. The EU deal is around the corner. I'm very hopeful that on the 26th, 27th, something will be announced. Both sides have made early statements to say everything is looking in good shape. India is tied up with the UK, very comprehensive FTA. Australia has done, New Zealand is done, Saudi is done, Saudi is about to be done, UAE is done, Qatar is done. Only piece that is left is US now.
An indication?
I think it will be done. My own view is there are some, last minute negotiations. There are also some creases that have to be ironed out between the political leadership. But I think US needs to be reminded that for the last 10, 15 years, especially during Prime Minister Mr. Modi's term, India has leaned a lot towards the US. It has moved away from a lot of those people or those countries which America was not in favor of. Our relationship with China has changed. We started to move away even from Russia in some sense. You just can't throw this 10 years of work away by, getting upset on one or two trade issues, on some duty, on something which is not delightful to a small constituency in the US. We have invested very heavily into this relationship. I am hopeful that better sense will prevail all around and we will come to a decent landing point. It may not be 100% satisfactory outcome, but no deal is 100% perfect. You will get to a point where both nations will start to come closer.
Well, Ms. Mittal, let's talk a little bit about business now. And I want to start by asking you about possible tariff hikes, because the last time when we spoke in Davos, you'd spoken about an ARPU closer to 200. We're now at 250.
300.
Are we already at 300?
No, I said my wish has been 300.
Wish has been 300. We're at 250 currently. But so a tariff hike likely in the offing, even possible?
I think everybody agrees that a tariff repair is absolutely essential. There is no one, including the government, believes that you need to have a very robust, solid infrastructure supporting the digital dreams of India. For that, investments have to be regularly made, and we are not talking about investments for the faint-hearted. There are billions of dollars going every year into the network, into spectrum. Therefore, there's got to be a reasonable business case out there. 300 rupees is what I said 8 or 9 years back. I'm not even asking for adjustment of inflation. Just in real terms, 300 is still eluding us. Can we get there? It needs another 15, 17% increase in tariffs or rearrangement of packs that are given out. For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus 1, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway. in which everybody is contributing 20, 30 rupees a month to consume ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to the point of touching 300.
Come to the point of touching 300 in 26, but you talked about a comeback of the third player, and now with this AGR uncertainty, which was looming large over that particular player, ending in a way or being resolved in a way, a game of three, essentially, what could that mean?
We have always said 3+1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3+1 is a good place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
No, not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts. But we still...
Will you be moving the courts?
I think we are still engaged with the government. We just want to present our case to the government in terms, especially around reassessment and recalculation. I think that's not a legal point. That's a mathematical point, a correction of errors, manifest errors. We will engage with the government first.
So what do you believe that reassessment could potentially mean if the government were to go through with that?
Well, they're going for Vodafone Idea in any case. I think for anybody, if the formula will be the same, if you're paid money that has not been counted, if there are double billing that has come through, if all that is established, your base principal goes down. And that has a cascading effect on penalty, interest on penalty, and the amount can come down significantly. So, and I don't think so any government would want to take more money than it is due. And our really case is what? We are saying, take what is due. We are not asking for any concession, but don't take more than what is due.
Don't take more than what is due, and you haven't heard back from them on the plea for reassessment just yet. But, I want to understand from you what we can expect now as far as your CapEx plans are concerned. They have been moderating. What can we expect in light of this move to 6G and whether or not we are on the cusp of a 6G rollout as well? Give me a sense of what we should realistically expect.
CapEx has not come down. 30,000 crores, and I'm not talking about spectrum. We are spending 30,000 crore. Now I'm only talking about India, not Africa and other places. 30,000 crore is being spent in CapEx every year. It'll continue to be spent. If it is not 4G, it gets into 4G, 5G. If 5G is almost sort of tapering off, it's more fiber, it's more, FWA, it is more data centers. So you'll continuously see about 30,000 crores, give or take a little bit. I would say little more than 30 than less than 30. That will be the order of magnitude. As to 6G, there are standards being still formed. I think we are a few years away, but we don't produce technology. We use technology for the betterment of society, our people, the digital dream that we have. AI is solving a lot of problems. That is really coming in a big way. We have been the leading operator around the globe in checking spam and fraud. Billions of messages and calls are being prevented, yet it's not complete. We are doing more there.
What kind of AI investments could we expect from you?
Well, on the data center, I would say definitely very large investments. We're doing a big data center for a large international client in Vizag. That's
with Google?
With Google. It'll double up our capacity from where we are today. We would like to get to 1 gigawatt of capacity as soon as we can. Will it take 3 to 4 years? Perhaps. But that is a big...
Focus area, priority area for you, data centers?
Data centers and sovereign cloud. I think we are also going very heavy on the sovereign cloud. All the enterprise cloud hosting should now start to come onto Indian platforms, and Airtel Sovereign Cloud will be one such platform where we are combining with IBM, with Google and others, but making it a sovereign cloud so that banks, other financial institutions...
When will that be a reality?
It's already a reality. We have already a few customers. Airtel has been running its own on-prem cloud for a long time, but we have already got some good marquee customers, not declaring them as yet, but good wins have been had.
What's the aspiration for the sovereign cloud that you just spoke of?
I think we want to be competing with the large big boys of the world for the Indian market and then African market.
Give me a rundown of Africa. The business, of course, there has turned around and has turned around quite steadily. What is the aspiration now for the African business from here on?
Well, I just hope and pray that the currency remains stable. It's a growing market. It's one of the fastest growing market of telecom anywhere in the world. The market is growing at over 20%. You don't get to see that anywhere. if currencies remain in secular depreciation mode, which is 3 to 4% a year, I think Airtel Africa could get to a $10 billion revenue. By the way, had currencies not gone, widely down, it would have already been at $17-18 billion, and we are at 6. So you can imagine the, damage that the currencies have done in dollar terms. 10 billion, $5.5 billion of EBITDA looks to be a possibility. The company has now become a FTSE 50 company from a company which was kind of on the edge of 100. Now it's at 50. It's a $15, $16, $17 billion market cap company. So Africa is in great shape now.
Satcom services, because that's the other big bet that you're making. But there continue to be some regulatory uncertainties there. As and when those play themselves out, what's the aspiration on that front?
Look, we are the second largest investor in Eutelsat OneWeb, with the French government having injected a very large amount to take the largest stake. British government is a partner. We are serving Davos, Ukraine. We are serving Taiwan for the strategic needs. We will not be competing with Starlink or Amazon Leo in the consumer market. Our whole constellation is designed for enterprise services, aero, maritime, enterprise services, defense, security needs of the nations. Recently, the Kundalia, the boat which went from India to Oman, was, fully equipped with OneWeb terminal, and they were in contact throughout the journey with everyone. So I personally believe that there's a place for a few LEO operators, and there are only 2 at the moment, Starlink and OneWeb. And we are making good progress with that. As far as India is concerned, ready when they are ready. But the total capacity that we have for India will get us, what, a couple of 100 crores, 200 crores of revenue. So whenever it happens, it happens.
More appetite for global deals, global M&A?
Absolutely.
Yes? Which sectors are you looking at?
Telecom.
When can we expect?
No, that deals take time. But we are now heavy into British Telecom, a wonderful company which we have had a relationship for long years. We are the single largest shareholder of BT. I'm on the board now along with Gopal. We are trying to polish that beautiful gem. More will come.
More will come in the telecom space in different jurisdictions.
Yes.
Okay, let me end by asking you, we've seen a battle on between airport operators and telcos. How is that likely to resolve itself?
It is too much noise. It will get settled down. In the end, customers have to be served everywhere. Under the Indian Telegraph Act, old 1856 and 2023 now, right-of-way access, provision of services to customers is a must. Equally, airport operators put up a lot of equipment and all that. They need to be given compensation for the returns. Some balance will come out. I'm more worried about the contracts that are being given to third parties for the tunnels, for the metros, where they pay a ton of money to Metro to get a franchise, and then they're wanting to charge a lot to us. And what does that mean? Customers suffer because we cannot pay obnoxious charges for right-of-way to the tunnels and to metros. Airport, I think, is another story. Will get settled because it's between private sector. It'll get settled.
It'll get settled. So 2026, what should we expect from you in terms of new developments and perhaps even new announcements?
Well, announcements will come as they come.
Of course, 300 ARPU is what you're hoping for. Whether that happens or not is a different story.
I know, but not focusing too much on ARPU. I think we'll continuously work towards providing better services to our customers, protect themselves. Financial services is an area where Airtel is focusing on. Airtel Payment Bank is now becoming a very important, a safe second account for customers. We are having millions of accounts opened up. It's picked up huge traction. You transfer 2 lakhs there. Worst case scenario is somebody can steal that amount, but your main accounts are safe. So I think that particular area where you're spending through, banking channels, you need a safe, secure second account. And I think that is where the focus is going to be. Good services for customers, better networks, more 5G deeper going into the rural areas, and more financial services, safe second account, and keeping our customers very safe from spam and fraud.
Sunil Vittal, always a pleasure. Many thanks for joining us here on CNBC TV 18. Appreciate your time. Welcome back. You're continuing to watch our coverage here from Davos 2026 as we bring you the global outlook on the trends that will shape the year and beyond. How much of the world is going to be reset on account of President Trump's policies? Where do emerging markets like India find their place in all of this? And what will be the priorities that CEOs will focus on? What is top of mind in boardrooms? Joining us now to discuss all of that and more is Manny Masida, the chairman of Bain, always a regular with us here in Davos. Manny, great to see you. Thanks so much for your time and great to have you back on CNBC TV 18.
Thank you for having me. I'm always happy to see you, Shireen.
So, Manny, let me start by asking you, you've been talking to CEOs here in Davos, but even in the run-up to Davos, the conversations that have happened, what are CEOs saying? Are they saying that, look, we can't wait for the storm to settle, whether it's President Trump or anybody else, we just need to get on with business?
I would say that the thematic issues that CEOs have wrestled with actually haven't changed that much the last 3 or 4 years. AI is number one. The post-global order, and we're in the middle of that shift, is number two. And then on top of that, the more ongoing challenge of energy transition during scarcer, higher cost of capital times. But the first and the second are the most intertwined. AI is now at the point where it's real. Are we deploying it at scale?
Yeah.
And the post-global order, whatever that is or whatever it means, intersects in ways that influences all of our, not just our strategic choices, but our strategic scenario and contingency plan.
Yeah, I would imagine there's plenty of scenario planning happening because, as you point out, we don't quite know. But let's address the AI issue because that continues to be top of mind here. And as you said, it's real. It is being deployed. We're moving now from pilot to deployment at scale. But the question still being asked is, what is it doing to the bottom line? It's not showing up on the bottom line yet. When will it start to show up in the bottom line?
If you look at the valuation of companies, obviously the expectation is that all of these values will actually show up. So I would say that probably 20% are actually already getting it into the bottom line, and it started with where does the bottom line show up? The most obvious places is it's not across the board. It's in very specific functions, tasks. And so when you have a lot of tasks that could be AI enabled in a way that the productivity is increased, that shows up. Some basic software engineering, customer care. In many cases, it hasn't scaled to more complicated tasks yet because it's actually an organizational change. People actually have to adopt it and use it to capture it. On the flip side, whether it will show up being underwritten with revenue growth and new ideas and new opportunities, both of these haven't happened yet at scale. But I would say the expectation, the optimism, the belief that all of these investments we are making will show up is very high, and that it'll be in the next 1 to 3 years.
1 to 3 years? Well, it's not very far out.
No.
But, are CEOs still focused on AI from an optimization point of view, from an efficiency point of view, or are we closer to using AI from really transformation purposes?
I would say it's probably 50-50. And so if you look, well, what does transformation mean anyway for companies?
New areas of business, new revenue streams, all of that.
So I would say it's half and half. That the easiest way to underwrite your use case, you're making a meaningful investment in additional technology spend in AI. Well, where will that come from? The most obvious case is, can I redeploy my past technology spend to it? The second is, can I actually get productivity out of it back to these specific, and does productivity mean labor efficiency that I can capture? That's a little bit where most of them started. But yes, the belief now in some use case more than others, yes, will this change the actual business model? And the term transformation is hard because native to AI companies that will start, just like in past technologies, might actually get there faster or quicker than an existing company that has to transform. But that's what probably the number one topic that's still discussed here. Now, there is an overlap between AI and all the global issues.
Yes.
It shows up in the new technology stack that is the AI stack of today, right? Because we know what the old stack was. You know, what was the semiconductor? What was the PC? What was the software? What was the applications layer? Well, the new stack starts with things that you didn't think of as part of the stack before. Predictable, reliable energy.
Yeah.
A lot of it.
Yeah.
For data centers.
Yeah.
You know, big cloud service providers that had been mostly American companies. A new layer called the large language model that's playing out. And so I do think the companies that are now deciding, they will continue to invest in AI with the belief and expectation that we will capture the returns on that investment either in cost efficiency or new markets.
You know,
but it has to overlap with your geographic choices.
You know, let's talk a little bit about India in the context of Carney's medium power thesis. And do you believe actually the medium powers or countries who are not firmly placed between this US-China battle will in fact benefit from what is going on today?
I would probably place India squarely. I don't know. I would not consider you a small power. You know, the world's largest population, the world's a very attractive market. So, just the recognition of that, and I don't know that the world is as simple as it's two poles and where are you. I guess that's part of his thesis. You have to play multiple sides. You have to understand, and so the fact that India is building, let's call it multiple bilateral relationships with different countries it's arguably a good thing, and it's the right thing, and you have to play that and balance it. And by the way, you know, those are country strategies. Companies are doing versions of that strategy too, because it goes to, well, where do I do business? Which suppliers do I go to? Where do I hire and move my talent? And for all that's happening, you know, as you and I have talked the last few years, India is a high priority market for the multinational corporates and private investors relative to the other markets in the world, right? It's a great domestic market. It's upgrading its capabilities in infrastructure, in AI, in energy. You know, China used to be higher foreign direct investment than India. Well, India passed China, and most people I know are still long on India, us included.
Yes, I know Bain is long on India, but you know, what does that mean as far as Bain's plans for India go?
I think continue to have it be a priority market to keep building. And so if you think of any market that we're in as a professional global services firm, number one is the domestic market. Indian companies are growing large, and they're operating not just in India, but they're going around the world. Number two, multinationals. You know, they prioritize India. Number three, our financial investor base, the private equity firms. Most of them will say this is one of our top 2 or 3 markets in the world. And so if you say all of that are places that we can help support and enable for India to grow, you know, we will be there by showing up with more people, more markets. Also, like many companies, we have a large capability center there, and that's why India has the highest. We have the highest headcount in India after the United States, in a company with tens of thousands of people. That's going to continue to be a good place. Although that's also an interesting place. You're going back to your first question. The impact of AI on tasks performed by Indian capability centers is probably something, you know, you want to think about and anticipate some disruption as well. But as far as we're concerned, we'll continue to invest in India, and I'll keep coming to visit, and we can keep having these chats.
Before I let you go, Manny, do you walk away from Davos as a concerned optimist or a cautious optimist?
I am an optimist still. I legitimately do have concerns. You know, I think this is a complicated time in the world, and when you combine the implications of global politics, the potential of AI, and even some of the things we haven't talked about, the intersection of those two, not just on things like combat, defense, weaponry, capabilities, you know, drones, security, hacking, etc. There's a lot you could be concerned about that we've also lived through. And so building our resilient muscles. So if we can scenario plan multiple worst case scenarios and have an agenda that we do a few things so that we're ready when they do happen, I think we'll be better off.
Well, scenario.
I am concerned.
You are concerned, and legitimate cause for concern. But scenario planning consultants do that best. So I guess you're going to be busy through the course of the year. But Manny, always a pleasure. Thanks very much for joining us here on CNBC TV 18, and we look forward to your next visit in India and hope to catch up with you there as well.
We'll see you. Thank you so much.
Well, that is Manny Masida, the chairman of Bain, taking us through what CEOs are thinking, what boardrooms are focused on, but more importantly, how the risks that we're currently dealing with can be mitigated as we move forward. We're going to take a break. A lot more continues right after this. We're back in a moment.
Welcome back. You're watching CNBC TV 18. The top story this evening, just hours after backtracking on using military force to take Greenland, US President Trump also pulled back on his threat to impose tariffs on Europe. This after Trump said NATO has agreed on a framework for a future deal on Greenland after a meeting with NATO chief Mark Rutte. However, Trump did not mention if the deal involved the USA annexing Greenland. NATO chief Rutte maintained that the annexation issue did not come up in the discussions with President Trump. He added that the NATO and US agreed on ensuring safety in the Arctic region. However, tensions between Europe and USA remain strained. European Central Bank's President Christine Lagarde walked out of an invitation-only dinner of VIP guests during a speech by US Commerce Secretary Howard Lutnick. Lutnick reportedly criticized what he called the continent's declining competitiveness. Furthermore, a group of EU Parliament members have blocked a vote to ratify a US-European trade deal in protest of Trump's threats. However, German Chancellor and Italian Prime Minister Giorgia Meloni welcomed President Trump's stance on Greenland. Speaking to CNBC, President Trump said that he agreed on a concept of a deal on Greenland.
You gave, it's very compelling in terms of talking about what you've done in the first year domestically, but also very compelling in the case you made about Greenland. So I was going to ask you, did you see any of your European cohorts nodding? But I guess I don't have to ask that now because of the news that it breaks very quickly. Can you go into what you just talked about with the NATO meeting?
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland. And it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal?
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark Rutte. And he, I assume he's been speaking to them. He's been speaking to all of them.
Are mineral rights involved? Is ownership involved? Did the Golden Dome sway people?
I don't want to say yet, but
the Golden Dome was very compelling today when you talked about that.
Yeah, the Golden Dome, and they're going to be involved in the Golden Dome, and they're going to be involved in mineral rights, and so are we.
It's not specific enough to know at this point how long this lasts, whether it's
forever.
Forever.
It'll be forever.
For Greenland at this point.
Yeah. Forever.
That's staggering.
That's better than a 99-year.
This is what, 2 hours after.
It's better than the Obama deal with the famous Iran nuclear deal with a 9-year deal. No, this is forever. This is a long term.
US President Donald Trump, while responding exclusively to a question posed by Money Control, expressed confidence that India and the United States will have a good trade deal soon.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
The US president also formally launched his so-called Board of Peace, a body for resolving international conflicts. There is a $1 billion price tag for permanent membership on the board. The board was originally conceived to oversee the reconstruction and governance of Gaza following the Israel-Palestine war. Representatives of 19 nations signed the charter. Argentinian President Milei, Hungary's leader Viktor Orban were in attendance. Israel's Benjamin Netanyahu was also on board, even though he is opposed to Qatar and Turkey's inclusion. An invitation has been extended to India and Russia as well. Kremlin said it was reviewing the invite. New Delhi is yet to respond. Pakistan Prime Minister Shehbaz Sharif attended the signing ceremony. US President Trump referred to Operation Sindoor during his speech. He said he was honored when Sharif acknowledged that he had saved 20 million lives by stopping the war.
Today, the world is richer, safer, and much more peaceful than it was just 1 year ago. We put out all those fires. A lot of people didn't know, including me, that some of those wars were going on. And some of them were going on for, in one case, 32 years, in another case, 35 years, and another one, 37 years. We were very happy to stop the war that had started with India and Pakistan, two nuclear nations. And I was very honored when the Prime Minister of Pakistan said President Trump saved 10 and maybe 20 million lives by getting that stopped just before bad things were going to happen.
The U.S. Supreme Court has questioned President Trump's bid to fire Federal Reserve Governor Lisa Cook. The top court indicated that it was unlikely to grant the Trump administration's request to lift a judge's decision barring the president from immediately firing Cook. The court asked why Cook was not given a chance to formally respond to the allegations laid out by the U.S. government. President Trump also indicated that he is close to choosing the next chair of the Federal Reserve at Davos. Speaking to CNBC, Trump said that while there were 3 possible candidates, he was leaning towards one in particular. He also continued to take digs at Powell as well, suggesting he's too late on key decisions except on political matters.
The replacement for Jay Powell.
It's true.
I just saw the Mr. Hassett, who I have a pretty good relationship with. And you're right.
He's fantastic.
He comes on.
I like actually keeping him where he is, to want to know the truth. I don't want to listen. He's so good on television.
On CNBC would be a great time to give us
He's
more.
so good on
Are we down to 2 now? Are we down to... I heard Rick Reeder had a strong...
Yeah, I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1. You know, all 3 are good. All 3 would be, I think, good. We have a problem with the man that's there now. He's too late. He's always too late, except when it comes to politics for the other side.
Yeah.
And back home, with less than 2 weeks to go for the budget, job creation and boosting capital expenditure are some of the key demands from India Inc. According to a FICCI survey, the industry body has surveyed 100 companies across sectors. The survey highlighted that majority of the respondents believe that the government will focus primarily on infrastructure, manufacturing and defense. Likely postponed its offer for a sale to FY27. Sources have said that the offer for sale has been pushed because the government is trying to gather more investor demand. The OFS is likely to happen only after the divestment of IDBI Bank. Remember, the government was aiming to sell up to 3% stake in LIC. Walmart-backed PhonePe filed its updated IPO papers with market regulator SEBI. The initial public offering will comprise an offer for sale of over 5 crore shares by existing shareholders. Walmart will sell 9% stake. Microsoft and Tiger Global will seek an exit. There will be no fresh issue of shares, and the entire proceeds will be received by the selling shareholders. And in big earnings, Indigo's parent Interglobe Aviation reported a resilient third quarter despite the mass cancellation of flights in early December, which left nearly 10 lakh passengers stranded. The disruptions cost 577 crore rupees. Profits are down 77%, but revenue has risen more than 6%. Madhiya Mujawar is here with all of those details. Madhiya?
Right. So, Arundhati, you've already mentioned the exceptional loss that they incurred due to the disruptions that we saw in December. But to take you to the earnings, Indigo has surprised us, posting a net profit of 550 crore rupees with a revenue of 23,471 crores. EBITDA came in at 5,367 crores, pointing to steady top-line momentum but mounting cost pressures. On the cost side, fuel expenses jumped from 5,961 crores in Q2 to 6,944 crores in Q3. Aircraft and engine rentals also climbed sharply to 509 crores from 320 crores in the previous quarter. Airport charges rose to 1,718 crores, up from 1,500 crores in the previous quarter. There's some relief on the currency front. Forex losses narrowed significantly from 2,892 crores in Q2 to 1,113 crores in Q3. And despite that, the revenue is up in this quarter. Profitability took a hit due to the exceptional losses, like you mentioned, of 1,547 crores, including 969 crores from the labor code impact and 577 crores due to the operational disruptions that we saw in the first week of December. The airline cancelled 2,500 flights on the 3 days, which is 3rd, 4th and the 5th of December. So bottom line, the airline saw its revenue growing significantly, posting resilient operating margins despite the disruptions seen in the first week of December. And CEO Peter Albers said that the focus is now on restoring their operations.
All right, Madhiya, thank you so much for taking us through those details. But with that, it is a wrap on this edition of Business 360. More news and updates on the other side. Stay tuned.
Hello and welcome to this special show. I'm Parikshit Luthra. With less than 10 days to go for the union budget, the Indian industry remains optimistic about the country's growth prospects. In FY27, despite a fragile global economic environment, a pre-budget survey by industry body FICCI shows that around half of the participants expects India's GDP growth rate to be between 7 and 8% in FY26. The survey conducted among nearly 100 companies across sectors indicates that 42% expect the government to meet its fiscal deficit target of 4.4% in FY26. The Indian industry identified job creation as the top priority, followed by sustained capital expenditure. Over 50% respondents also highlighted the need for stronger support to exports amid the trade uncertainty, to boost export performance and deepen India's integration into global value chains. Industry has called for streamlining trade facilitation and customs processes, reducing logistics and port-related bottlenecks, and strengthening export incentive and refund mechanisms in terms of sectors. Most respondents expect greater impetus for infrastructure, manufacturing and defense. Joining us now to discuss this further is Naina Lal Kidwai, past president of FICCI, and Jyoti Vij, the current Director General of the Federation of Indian Chambers of Commerce and Industry. Thank you so much for being with us. Ms. Kidwai, if I can begin with you, this is a challenging global environment. How does the Indian industry expect the government to deliver a high growth rate? And what would be the levers of that which will deliver the high growth rate of 8% or maybe even higher?
So the survey is always interesting because it validates maybe some of one's own personal aspirations, expectations, but also gives us a very good check on what's happening out there. I think I was quite struck by the optimism that we would not only achieve the 7 to 8%, but do it with the fiscal deficit under control. And there is an expectation that India continues on that path. So specifically, job creation figured very high, as you showed earlier in your slide as well. Job creation, it becomes very critical at a time when industries such as the diamond industry, apparels, leather, employment-intensive industries have seen quite a serious knock from the US tariffs. And hence, I think you find the expectation that the government do more in terms of aiding and supporting exports, both in terms of job creation, manufacturing, and exports themselves. Because tariffs are not just for these three industries, but also with the European CBAM and deforestation norms, the sort of non-tariff barriers that may emerge, all impact the performance of Indian exports. And looking to streaming this, there are indeed expectations that we get our SEZ policies right, the rationalization of customs in the budget, where there was a very high resonance on more simplification and implementation therein. And indeed, the creating clusters, for example, the electronics clusters, to ensure that we can continue the thrust on exports, which in turn hopefully leads to more job creation across different sectors and the capital expenditure that also follows from the private sector becoming an important aspect of our expectations going forward.
Ms. Kidwai, I'm going to come back to you. Let me get in Jyoti Vij as well. Jyoti Vij, we've spoken about how to make exports more competitive. In the survey that you've done with top members of FICCI, how can we make exports more competitive, and what kind of reforms, what kind of measures can the budget deliver to achieve that? Ms. Vij, you're on mute. All right. Ms. Vij, I'll come back to you in some time because you're not able to hear us. I think you're on mute. But Ms. Kidwai, if I can come back to you, job creation has been listed as a priority, macroeconomic theme by 71% of the respondents. But how can the government deliver on greater job creation?
So one key area will, of course, be through exports, as we just discussed. But job creation is very specific to certain industries. There are highly capital intensive industries which will not create the jobs that we want. However, the service sector is an important one which continues to see a thrust and indeed also sees investment coming from offshore into these large number of centers of excellence which are being established and therefore continue to generate that growth. The thrust on manufacturing also helps to the extent that there are industries which are labor intensive. Electronics to some extent fits that categorization. And then, of course, to sort through the issues we have with our labor intensive sectors that have got affected by the tariffs that the US has imposed. I think as we look at this going forward, and I mentioned the SEZs, the more manufacturing we can attract by making the entire process of setting it up clusters in these SEZs, enabling supply chains to come in, which therefore help MSMEs. And MSMEs by and large tend to be quite people intensive, job intensive, I think would be another way as well. But the job creation aspect is something which is clearly engaging government, and it is indeed very much top of mind for industry as well. I would hope to see some stuff on tourism, because that again is a huge job employment creator.
Right. Ms. Switch, I hope you're able to hear us now. When it comes to structural reforms, what does your survey say on what the government can deliver and what would be some of the 2 or 3 priority areas?
So I think on the structural reforms, one of it has always been the factors of production. And there was, an announcement regarding this in the last budget when we said that we will be now working towards the cost of doing business as well. I think some of this is being addressed through the committee that has been formed under Mr. Gauba. But that still remains a very high priority, be it land, power, finance, etc. Within finance, I think bond market still remains. I think there is some action that we continue to feel that there is some more action that is needed. As far as the power goes, there are cross subsidies; those could be dealt with. So some of these can add to the competitiveness of the industry. And these are going to be very important. I mean, that said, apart from this decriminalization aspects that are being taken care of, the deregulation, a lot of things which have the center has eased, but the states have to implement. I think at the state level, a lot of reform are still pending, which need to be kind of, activated and pushed forward.
All right. Now, when it comes to direct tax, on ease of taxation, ease of compliance, what does the Indian industry want from the budget and the kind of messages the industry wants to hear, Ms. Pidge?
Yeah, so actually the compliances is what we feel require a lot more simplification. So that's one big theme which is coming out of the survey as well. So we require a lot more digitization to happen. I think there has been a good progress on the digitization in both direct and the GST and customs, but that's one area where we continue to push forward. There are areas where we feel that the two departments don't speak to each other, even if they have the technology. So how do we create that common interface? So whether it is the reference to the data sitting in one of the systems, or it is about integrating the information. I think those are the areas which are very, very critical. There's also, I think, the tax certainty is something which we feel is very, very critical in terms of policy rates, all of that. And dispute resolution remains a very big bucket. So we've also analyzed that, under the Commissioner of Income Tax Appeals, there's a humongous amount of pendency. So one of the recommendations has been that can we have a dual track so we can divide between the low impact cases and the high impact cases and try and kind of, at least take care of the low impact ones faster so that dependency really improves and we can manage the litigation process really better. So this is something which is really high on the minds of the taxpayer. There's a lot that has been done on the rationalization of taxes. I think there are various other aspects that have been taken care of under tax. But dispute resolution remains a very big one. And I think the simplification of compliances falls as a bucket under that.
Right. Ms. Kidwai, now, when it comes to the India-US trade deal, that's been a major overhang for the stock markets as well. It has impacted sentiments to a great extent. How do we turn that around? Because it's no longer in our hands as to when we can have that trade deal. We've already given them a good proposal. The USTR has also said that India has given the best ever deal proposal ever. It's up to Donald Trump to sign it. There is no timeline to that. We can't keep waiting. But how do we protect ourselves in this global environment and in the absence of a trade deal?
So, Parikshit, hard to protect ourselves from the volatility that comes from repeated announcements. And I think we now reached a stage where there were many expectations that this whole process close, and it hasn't. So it's already, I think, factored in. I don't believe the market is expecting anything till it happens. So to that extent, we're not in a bad place in that our markets have held up pretty well. And it's not as if there's been a collapse on any front. But we remain vulnerable, and probably less from just the trade with the US and the impact therein of tariffs, which impact, the studies I see go from 0.5 to 1% of GDP. But the more worrisome one is energy and the price of energy, which fortunately for us has held out well in that it hasn't risen. But even as we look to newer sources of energy, as we move away from Russian sources of fuel, we have issues with Venezuela, which we relied on, with Iran. These were all countries which were possibilities for us to import oil. And to the extent that we can see that crude stays in this $50 to $60 bucket, we're okay. But volatility therein and the depreciation of the rupee, which I think is the most hurtful right now, it helps exports, so that's good. But on the other hand, it puts our import bill up, as you well know. And it certainly impacts the foreign investor that looks at India and worries about the good returns that we can get in India getting washed out completely by a depreciating rupee. And that depreciation of the rupee comes from some of these fears, including crude oil dependencies.
Right. My final question to Jyoti Vij. Ms. Vij, when it comes to the CapEx headline from the union budget, that's always looked for very closely by the Indian industry. What would be the expectation?
So it's the continuation of, what has been done over the last few years that is still required for some more time. And I'm sure, the budget will continue to lay focus on as much CapEx as they have done in the past, because this will definitely help in hastening the crowding in of the private investment. We've already started to see the demand really spurring up. And I think this last mile support is very, very critical for us to, come through. And I think infrastructure push along with that is also very important for resolving a lot of, issues related to logistics and stuff, which we have seen massive improvement, given the thrust on the CapEx, which government has laid in the last few years. So I think that continuity is a must, and I'm sure that will continue to be a theme in the budget of this year as well.
All right, Ms. Jyoti Vij and Naina Lal Kidwai, thank you very much for joining us on CNBC TV 18 with the FICCI Budget Survey. Let's see what the Finance Minister now delivers on the 1st of February. On that note, we take a short break, but lots more from Davos when we return.
coverage continues here at Davos 2026, and we're live with a man who has a pulse on the Indian market, but also is picking up on conversations here in Davos on what that could potentially mean for India. C.S. Setty, the Chairman of State Bank of India, live with us. Sir, thanks very much for joining us here on CNBC TV 18. Do you feel like the mood this time around, even though the headlines are screaming more negativity around geopolitics, the mood within CEOs is tad more optimistic than the previous year?
Absolutely. I think the conversations with leaders across the tech space or financial space seem to be more positive than it was earlier, despite whatever are the headlines. Yes, I think the people are getting used to the new world order,
and not waiting for it to settle.
Yeah, I think that's really a positive sign.
Mr. Setty, you know, banking drew in a lot of FDI last year. 2025 was a big year as far as FDI into the financial sector was concerned. Do you see that trend continuing? And what does it mean for banks like yours to see this kind of money coming into your competitors?
The competition always has been there, Shirin. I think we lived through 2 centuries of competition. But I think it's a good sign in the sense that one is the foreign investors are much more confident about the Indian banking system today, and they're willing to bring substantial capital to that. And some of these banks where the FDI is coming in have the potential to scale up their operations with the capital buffers, what they can create. I think it's a very good development in my view. And that also shows that the regulatory environment is warming up to the these capital flows, and is definitely positive.
Any capital raising plans for you per se?
We just finished 25,000 crores. I don't think we are in need of capital at this juncture. And we also have very strong internal accruals. The capital augmentation which happens through the probability of profits is significant for us. So, and we are also planning, as you are aware, the divestment in SBI AMC. So that will also be capital augmentative for us.
By when do you expect that to happen?
So this calendar year, definitely.
As far as loan growth is concerned, sir, you know, your credit growth outlook has been between 12 to 14%. Likely to hold that number?
Yeah, we are still holding that number. Of course, we have our quarterly results around the corner, so I won't be able to talk much about the numbers. But I think if you see the December industry numbers also have been very positive on the credit growth side. And the guidance of 12 to 14% is still relevant for us.
The loan to deposit ratio at a system level at a record high, what does that mean as far as your ability to lend is concerned and deposit mobilization as well?
For SBI, that has never been a concern. For the industry, yes, there will always be an equilibrium. But it is also important that the shift in the financialization of the savings towards non-bank channels means the banks cannot build their asset side purely on the deposits. I think they need to have the access to the market, and some of this money which is moving to the other investment channels have to come back to the real economy. And I believe that there will be a structural shift in terms of the balance sheet structures for the banks. Broadly, if you see, I keep quoting my New York example, New York branch is 80% market borrowings and 20% deposits. We may not go all the way there, but I think
how far do you think you'll go?
I think difficult to imagine what could be the mix, but definitely the mix will change. And too much talk about LDRs may not be relevant as we are able to build our assets based on the market borrowings going forward.
But how soon do you believe you're going to see this balance sheet mix change, as you just pointed out?
I think in another 5 years there would be a noticeable shift in the balance sheet structuring.
Okay, in another 5 years. You said that LDR is not something that one should look at or pay too much heed to. But at this point in time, where do you believe that we are starting to see some stress emerge? Are there any sectors, any pockets where that could potentially be a sign of concern?
Not really. Not really. I think even if there are some time to time, we keep talking about microfinance and unsecured personal loans. But they don't pose the systemic risk from a product point of view, yes, I think we need to be careful in terms of how we are delivering those products. But I don't see any structurally important developments on the asset quality side.
On the rupee, sir, we've seen a swift and a very sharp move as far as the rupee is concerned. What's the outlook there?
So I don't think anyone is looking at a certain level for the rupee.
But has the swiftness of the fall surprised you?
I think some of this temporary movement, particularly on the FPI outflows, definitely impacting the rupee, and the geopolitical concerns and the capital movement definitely would be having some impact on the rupee side. But I think we should not be unduly worried about swiftness, yes, but the level I don't think we should be worried about.
Okay. So, AI, large part of the conversation here at Davos, and of course that's technology has been something that you have been prioritizing and doubling down on. But as you look ahead, how much more are you going to have to invest? How much more do you do on AI? What is the plan on that front?
There is no separate allocation for AI, but I think the potential of AI at the scale has to be realized for banks like SBI. You can't have one simple use case and say that, I have adopted AI. So our focus now currently is to build the AI stack, technology stack, and identify some of the very transformative use cases, particularly in terms of customer protection. We are the largest user of AML models for fraud risk management, for instance, transaction monitoring, and then move towards hyper-personalized offering to the customers. We are approaching AI from a scale point of view, not simple use cases. And the starting point for thinking about scale is that how do you set up your AI technology stack? And I've been talking to a lot of people here in Davos, and there's been good conversations around AI, not simple proof of concepts, but I think adopting AI at scale.
Okay, so what should we expect then from SBI in 2026 in terms of tech spending, in terms of focusing on some of these areas that you just spoke to us about?
Technology is critical for us, and one very favorite narrative for me is that every 6 years, State Bank of India doubles itself. And that cannot be handled simply by doubling the number of branches or doubling your head count, but the right investment in technology and digital adoption. And we are also focusing on the digital migration of our customers. So how do we make more adoption on the 2.2 what we launched, for instance, and also a lot of technological developments, both in terms of simplifying our own internal process and also simplifying the customer journeys.
Finally, an outlook as far as rates are concerned in 26?
I think calendar year 26 probably would see one rate cut.
And deposit rates?
Deposit rates are sticky. I don't think any time the major adjustment will happen in the deposit rates.
Unlikely?
Unlikely.
You're not going to move on that?
Not only us. I think overall banking system, the rate cut may not translate to the rate cuts on the deposits as long as the robust credit growth is there.
Well, Mr. Sethi, always a pleasure. Thanks very much for joining us here on
Thank
CNBC TV 8. We appreciate your time in Davos, and we look forward to seeing you back home when you announce your results. Well, that is the Chairman of State Bank of India, CS Sethi. A quick break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more. back. Our continuing coverage from Davos 2026 on CNBC TV 18. We've been bringing you global business leaders with their outlook on the year ahead, the regulatory challenges, the macroeconomic challenges, but more importantly, the investments, the bets that they are willing to make at this point in time to ensure that growth is carried forward. Right here in Davos, last year, my guest who joins me today spoke about a possible move to splitting the businesses that they were operating, and that decision has now been taken. In fact, it's been moved forward as well. To give us an update on all things Honeywell, joining us now is the Global CEO, Vimal Kapoor. Vimal, always a pleasure. Many thanks for joining us.
Absolutely. It's always a pleasure to be here.
So let me start by talking to you about that. You spoke to me here in Davos and you said that it makes strategic sense. It's a good idea to split up your individual businesses,
right.
Aerospace, automation, and you've gone down that path. Hopefully, right. Will be done in 2026.
Right. So we will be. So we decided to split it into 3 companies. Yeah. We announced that in February of last year. So we completed spin-off our specialty chemicals business. It's a standalone stock now. Solstice Advanced Material, yes. And it's been up and running for about 3 months. And we'll complete the separation of the aerospace business in the second half of 2026. So we'll have, 3 independent companies, each focus on its respective segments. Specialty materials, Honeywell will focus on automation, and then Honeywell Aerospace will focus on aerospace.
Let's start by talking to you about the plans as far as automation is concerned, and what the outlook is for that business in specific, and how much you're betting on the Forge platform to help deliver growth.
So automation is a secular growth trend. As the world becomes more productive, you need to put automation in all kind of infrastructure, energy, supply chain, buildings. So that's a core of what we are, and Honeywell has been in automation for 100+ years. As we look ahead, the power of data has to be unleashed, which automation systems create. And that's where the Forge platform comes in. If I look ahead, Honeywell next 20, 30 years, it's going to benefit from this whole power of AI in the physical world and essentially enable the workforce to become more productive, more of augmentation strategy. And I think the world is going to benefit from more productivity with the power of AI, which will come ahead.
At the end of the day, what is this going to mean as far as growth is concerned? What does it mean when your clients are looking at this as a proposition that also adds value to them, but then adds value to your balance sheet?
So for us, as a standalone company, we look forward to grow a mid-single digit in a typical year. We are a through-cycle company, so we are not linked to one particular mega trend at any point of time. Like right now, there's a cycle around AI or data center. We do participate in that, but not in a substantial way. We are a much more multiple end markets company. So we see our earnings growth high single digit on the strength of mid-single digit top line growth. And this is going to be a big part of that we are able to enable our growth through our install base, which is very large. And how do we serve our customer through our offerings by which they can improve their business. So our customers win because they make more money, and therefore they pay us.
We're also in a challenging environment, and you operate across different jurisdictions and different geographies. We're in a tariff world, we're in an uncertain world. How is all of that impacting business decisions at this point in time?
These are all transitionary things which happens in a business, right? For businesses like us, the tariff did not impact us a lot because we were always manufacturing local for local. We don't move around things a lot. So we will manufacture in US for US, Europe for Europe, Asia for Asia. And implication of tariffs was very modest. It was much.
Will you do more now in the US?
We already were. So if you ask me that what's the net impact of that, Honeywell have 70 manufacturing facilities in US. So do we need 71? Probably not. Do we need to expand some of them? That's purely a business opportunity. But what it does is it makes the local for local strategy much more embedded across the entire universe, which becomes a business opportunity for us. Because now we get to serve customers who need to set up their capacities in different parts of the world. So for us, it's much more business opportunity. But for our own business, the changes are quite modest.
So let's speak about the business opportunities that accrue to you on account of the changes that we're seeing. What does it mean then in terms of new revenue coming your way?
So as US onshoring increases, it builds more industrial companies there, whether they are building more semiconductor fabs, whether they are building more pharmaceutical facilities. Just as an example, all those becomes customer opportunities for us, which the ramp rate will increase as these investment cycle. One great example is near term in the last 1 year, we see substantial increase in our business in LNG because US is exporting far more LNG.
Yeah.
So all those facilities are being automated. The technology is being supplied by Honeywell. So that's just one wave of it. So that's LNG wave. Then will be wave for industry like semiconductor and so on. So I think this is a progression, and that progression, that was the point I was making earlier, as more and more onshoring happens, this brings more customers for us. That happens in Europe. That will happen in other parts of the Asia.
So this reshoring or onshoring theme, do you expect this to amplify and gain more momentum as we move forward into an even more fragmented, confrontational world? I just had Baz Nassim, the CEO of Novartis. They're, adding capacity in the US on account of the
That's a trend generally.
Policies.
Yeah, I think most companies are becoming regional supply chain model. Companies like Honeywell has been doing it for decades, but I think others are following a similar structure, which, I mean, if your economics can afford it, if you can afford 3 factories versus 1, you will do it. But if your economics don't afford it, then it's going to have a different driver, in my view.
Well, let's talk about India, and it is one of your high-growth markets.
Absolutely.
What does that look like today, and what do you anticipate growth to be?
We are, quite blessed to have very strong India business growing at double-digit rate for several years. And I think the India growth story is really playing well for us. We are benefiting from it. Our business has been growing double-digit for, as I said before, for now 3 or 4 years in a row, and we expect 2026 to be same. And fundamental of that is the investment in infrastructure is certainly helping us to grow. As India GCC story grows, that also helps us because those building and infrastructure are also automated by us. And the growth of India requires more energy. Energy infrastructure has a lot of participation from Honeywell. So I think the whole India growth story plays well. But where the story is changing is as Made in India is becoming more prominent, our sourcing activity from India is increasing. So India as a source of buying product for global demand. We are setting up more factory. We set up a new factory in Pune recently, apart from what we already had. We are developing more supply base in India because as they're becoming more capable, it provides us more opportunity there. So that to me is companies like us started domestic business, then we started doing product development, and now we are doing much more sourcing. So to me, it's a third wave of globalization for companies like us.
So if we are now ushering in the third wave, so to speak, as far as your India ambition and your India aspiration is concerned, what will the sourcing opportunity from India look like, make in India for the world?
It obviously is in billions of dollars. I think India will compete in each sector, but I think there are natural advantages in some sector India has. So it's ability to where you create scale, and wherever the scale exists and competitive advantage exists. I think people look at it as it's an optionality, +1 strategy. I will actually not look at it that way alone. If you are competitive and you are best in class cost structure and product quality, whether you are +1 or you are unique or +2, people are going to come to you. So I think we have to look at the overarching value proposition of a sector. And I think the sectors which will benefit from a lot, Honeywell is a big aerospace part of it, which will become a separate company. As an example, we see India becoming a source for aerospace, which is not a big sourcing play right now. But can it become? Absolutely. So those are the unique opportunities which will evolve, which are in very infancy stage at this point of time.
So given what you've outlined for us in terms of growth drivers as well as opportunities, capital deployment as well as M&A, and are we likely to see more bolt-on M&As? You've been fairly acquisitive.
Yeah, so Honeywell has, since I became CEO, we spent $14 billion in different acquisitions across. Now, the assets we buy, they're either US or Europe based, but they always have a presence in India. So I think India automatically benefits from those acquisitions. In fact, many of our acquisition thesis is built upon an asset which we can grow outside US in a big scale way. And India plays a big role in that. So I think our investments globally brings more capital locally. Now, domestically, will we look at acquisition opportunity? I think in our sector, the nature of companies are generally very global. And domestic opportunities are very minor. So
global companies with an India presence.
With India presence, so that becomes a way for us to scale our growth. So we can look at a sector where India could be a big growth engine and really double down on that from an acquisition standpoint.
So 14 billion already done in terms of M&A?
Yeah, we are much more cautious this year because we have to complete our spin. And we're also conscious on our credit, on our rating. We want to stay at investment grade. And we are A-rated company, so which matters to our shareholders. So we're a bit more cautious till the time we are able to maintain our ratings. But we'll be always looking at more and more acquisition pipeline on what's more coming. Because maintaining an active portfolio is a critical responsibility of a public company. We want to make sure that we have a portfolio which is relevant for our customers, which means a lot of work we have to do organically to grow our new products. But it doesn't mean we close our eye and don't look at external world.
So, Vimal, let me end by asking, as a CEO today, we've talked about some of the themes that will shape not just your business, but will shape the sector in general and at large. What are some of the other not so obvious trends that you're starting to pick up that you may want to intertwine into your business going forward?
I think the one thing which is not talked about a lot is the shrinking world population. And that's going to create a driver which is not well thought through at this point of time. Because most countries even have a population replacement rate of less than 2 now. India is almost approaching that rate.
Yeah.
US is 1.6. Many European countries are same rate. Japan, Korea is less than 1. So how do you imagine a world in which people are not, there are less people and there are less skilled people? What are the implications to different sectors? And aging population means, for example, you need more hospitals, you need different type of drugs, but it also means less people available for productive work. And I think shaping that discussion probably looks 10 years away from now. But I imagine that's going to become a prominent discussion in the times to come.
How much of AI do you use every day?
I mean, to the extent, I guess you use it in terms of reading your emails, summarizing that. Sometimes it's a very useful tool to, develop a document. So I think those kind of co-pilots are interesting way to.
Are you talking to it?
Not yet. I'm not good in using voice-based tools. Yeah, I'm not good at that.
Not yet, but maybe that you learn to do.
Absolutely.
Well, Vimal, always a pleasure. Thank you so much for joining us here in Davos and giving us an expansive overview on what the business looks like, but more importantly, the environment that we're in as well. Always a pleasure. Appreciate your time.
Thanks for having me.
We are going to take a break here, but the conversations will continue on CNBC TV 18. That was the global CEO of Honeywell, giving us a sense of what business looks like and what the trends will be that will shape the future of automation. We'll take a break. Back in a moment. Hello and welcome to CNBC TV 18's continuing coverage here from Davos 2026. I'm Shireen Bhan, and we've been bringing you global headliners on their outlook for the year ahead, and more importantly, the mega shifts and trends that will shape the global economy and their perspective on India. Joining us now to understand what the picture for 2026 looks like, and more importantly, their continued commitment to India, is the global CEO of ABB. Morten, many thanks for joining us, and it's great to have you. Good morning from all of us.
Good morning. Great to be here.
So let me start by asking you, I believe you're tapping into REM to find and make sense of the world as we know it.
Yeah, no, I like music, and I think one of being asked how does the world look like, I used remind me of the REM song. It's the end of the world as we know it. But I feel fine, and I do feel fine.
You do feel fine. But that's exactly what I was saying, that CEOs can no longer wait around to see whether the storm is going to settle or what happens with geopolitics. CEOs have to get on with business, and that seems to be the case in the mood here in Davos. Would you agree?
Yeah, absolutely. It's a bit strange to think about it. It's 6 years ago since COVID, but we still talk about it. It's 2020. Today, 2026, and we have so many things. Every year, when we look back, you say, oh, that was a strange year. But I don't think 2026 will be any different. But we get used to it. So that this is kind of the new normal. We are good at crisis management at ABB, the company I run, but I think in general, everybody, governments, our customers at our place as well, we get on with what we control. I think that's the main part. You cannot sit and wait till things to get calm. Then you never got anything done. You just need to get on with it.
Well, let's talk about how you're getting on with it in 2026, what the outlook is as far as the order book is concerned, global growth, and specifically India. How does all of it look for the year ahead?
First of all, we're going into the year with the largest order book we ever had in the company, because the trend of electrification and automation is really gaining momentum, and I think it will continue gaining that momentum in the coming years. So this is the electrification of everything. It's not like a little glimpse. It will take even up till 2050 at least, because as grids are underinvested and customers want to go with more automation and more electrification, because it's not only because it's a more sustainable, but it's also a much more productive and competitive way to do it. I think there's some great examples, for instance, in India, where we are helping some of our large customers in the steel production. It is, how do they get more competitive? Is go from a coal-based to an electric furnace in their production process. That's how you can also remain competitive in the Indian market, also fighting with imports with cheap steel from China. Yeah. So this is one way of dealing with competitiveness. At the same time, it's a byproduct, is that it also reduces emission, which is, in my book, a very positive thing. So it's a win-win. And that is why our business is really booming these days, because it's both. We help our customer, we say, to become leaner, more productive, and cleaner, reduce their emission. And when that go hands in hand, it's an and equation. Yeah. You don't need to choose one or the other, you get both. And normally that's...
So since you're sitting on a record order book, are you going to be able to replicate that success in the year ahead, or perhaps even better it? What are the signs telling you?
If you're looking into the market of, as I say, electrification, especially, it is booming, and it's going to continue to do so, because we need more energy. We talked earlier more about energy transition, right. And I think India, as one example, has been really driving that energy transition, where a lot of the new energy coming online is renewable, solar and wind, especially on the solar side. India has done an amazing job. But it's not really an energy transition if you look at the global scale. Since 2019, we are using the same amount of electricity being generated from coal and gas and oil as we did in 2019. So the energy transition hasn't even started. All has gone into the energy expansion. That means we need more energy. People are getting out of poverty, getting better quality of life. What you do, you get your own air conditioning unit. Right. All of this takes more energy, and this is the same all over the globe. And then in addition to that, you have more consumption, especially all the data centers being built, also take up, a few % more of electricity consumption, and that all puts more stress and pressure on the grid. For us, a good thing, because that's our business. We are helping utilities, getting more power online and getting that grid reliability, because we see also today, especially here in Europe, that grid reliability and grid security has been also a bit of a security topic. and therefore having a very strong and resilient grid is kind of a backbone of every society. You can ask people from Spain who had 8 hours, the whole country, 60 million people without electricity for 8 hours. It was not a pleasant experience to have that. So these are some of the trends where you see importance of electricity, importance of the grid. That's why also investments is coming. So I'm very optimistic for our 2026 from an ABB point of view.
And similar story as far as the automation side of the business is concerned, because you said on the energy side, it's more energy expansion yet to actually move fully into the energy transition phase. On the automation side, with things like physical AI and so on and so forth, what are the trends that will shape that business?
We can also use automation, and I talk about also the electricity grid, what we call grid automation, which is also how we use energy. It's not just getting more and more, it's to use it at the right time. This is a bit thinking about traffic. There are not really enough cars in the world that we should have traffic jams, but it's because that we all want to go at the same time, and that's the same with electricity. Yeah. So we can use automation in our grids and in our buildings. Energy management is all grid automation. It's about how to balance loads, that we don't need to heat the hot water at the same time, so we prepare our dinner and wash the clothes at the same time. That goes also the same for industries. We can balance out it, and this is where automation is needed, to use electricity smarter, both saving energy but also balancing it so that we don't put more stress on the grid and our networks than needed. So there is where automation play a key role to be able also to reduce some of that stress that so many countries experience today, where grid stability leads to big losses in production. And that's, again, one thing that we help our customers to avoid those problems.
The robotics divestiture, that of course is expected to get regulatory approvals and is likely to close this year. Will that mean that you double down on the focus areas that you just outlined, and what will that mean in terms of additional capital deployment as well as M&A? Because you've done a number of bolt-on acquisitions. Will M&A continue to drive growth?
Yes, it will. We are more looking into now at ABB is, as you say, very focused on electrification and automation. Those things also very often go hand in hand. And therefore we look at what are adjacencies that can make that offering even stronger. And there is where acquisition comes in, also especially bolt-ons, which are kind of nice adjacency to what we do already, or what can strengthen our technology or market access in some places. So we are actively looking into new M&A opportunities, both small, mid-sized, but also some larger ones. So and it's really all over the world. Where
India
as well is where growth is happening, is of course where we want to invest, and that drives both the organic. That means what we're doing in our own capacity. So we are right now, I feel that India, for our operations right now, is a bit of a building site, because it seems like every factory, every campus that we have, having expansion, building new facilities, because we have been through such a great story in India over the last years. And also when we look at ahead of 2030 and even past that, we are very optimistic about the Indian economy. And we have a strong team there who is also able to serve our customers well, so we need more capacity. In addition, we think that that could also be used as an export hub out of India to serve many of the neighboring but also markets outside the region. And that's why we are expanding and double down on India, both with our own organic investment, more technology, more R&D, but more manufacturing. But also we're looking at, could there be companies that would be a good fit with ABB offering, but also the ABB culture. So that's where we are working on, also in India, but also everywhere where there is growth. We're open to do that.
Oh, so a quick follow-up question on what you just mentioned there as far as India is concerned. How much do you believe the export opportunity is likely to play out for ABB in the next 5 years? And what would your message be to Indian stakeholders who are watching you in terms of your expansion plans, your renewed commitment to India and incremental investments?
I think the main part, which I always stress in every market where we operate, we need to be strong at home before you're also strong. Because if you win at home, you can win outside. It's a bit Frank Sinatra we were talking about. So if you can make it here, you can make it everywhere. And that's what I also tell our team in India. And we are doing very well in the domestic market. That has to be the backbone of what we do. But then when you get that scale, you can even do more outside India. And we are doing already today exports into the Middle East, into Africa, into Latin America, using our Indian facilities. And we're looking at also how we can do more of that. We have a very competitive cost base in India, and that, of course, is an opportunity for us as a global company.
Where does India figure in the pecking order as far as global markets and global revenue is concerned?
Today is market number 4. My prediction is, and I've said already now, you need to aim at the 3rd spot.
By when?
And that is a bit the challenge to the team. I said you should be there at least before 2030. I hope it will be earlier, and the commitment from the team is that it should happen before that.
Is there a song that you want to leave them with?
I think, again, I will take my Frank Sinatra. I say, if you can make it here, you make it everywhere. And that has to be kind of be a strong presence in the local market, which also makes you a very attractive player to be also to play outside India.
Well, Morten, thank you so much for kicking things off here for us in Davos on day 3. We could have asked for a better conversation to heat things up, but we look forward to seeing more of you in India, and we wish you very best of luck for your global growth plans, but also your plans on hitting the number 3 position in India. Appreciate your time here in Davos.
Thank you very much.
Well, we are going to take a break, but the conversations will continue. Don't go anywhere. More global headliners coming up right after this. We're back in a moment. Stay tuned to CNBC TV 18. Hello and welcome to our continuing coverage here from Davos 2026. I'm Shireen Bhan. As we close out our special programming here from the World Economic Forum's annual summit, we continue to double down on one of the predominant themes, and that is artificial intelligence and the role that India can play in that journey. Joining me now is a man who understands both AI and India, the global CTO for Ericsson. Eric, many thanks for joining us here on CNBC TV 18. Appreciate your time. As I pointed out, AI continues to be one of the dominant themes here. CEOs are talking about how they intend to use it, what kind of investments they intend to make. At Ericsson, it's been a few years of using it. Embedded AI is how you've been planning your products and your business. Take me through what the experience has been like, but more importantly, what you see now in the future.
I think it's a good framing, Shireen, that the AI is already powering 5G networks today. But I think, back to the discussion here in Davos, it's been very much about the ROI of AI, it's very much about diffusion of AI, and I think those are hugely important because the most advanced companies now, they get the return on the investments, and we're starting to see more AI applications, agentic flows permeating throughout enterprises. But I think the discussion that needs to be connected to that is how do you actually get AI to the end users or getting data from sensors. So advanced connectivity is really what will power the future of AI. And that discussion is just starting right now. So to your point about AI in the network, we are already powering 5G with AI to create better user experience, lower energy consumption, but also to be able to create more services faster. So AI in terms of autonomous networks, autonomous 5G networks, that's actually already deployed in the most advanced networks today.
So, you said that ROI, of course, is the big question, and that continues to be a question mark for many companies at this point in time. But is it working for you? Are you already starting to see returns?
We see that, and I think we've been fortunate to start very early in our own journey. So AI in R&D is already paving off. It's changing the way that we develop systems. Of course, developer experience, DX, is critically important for our many talented engineers, many of them actually in India, as we talked about. But this is really a journey that we started many years ago. And now over the last year or so, we're starting to see significant productivity improvement, which is great. But more importantly, when you change the complete workflow, when you change the way you're working, not just coding, testing, everything, it really changes how fast we can come to market with the latest products. So yes, AI is already having an impact on us. And then of course in finance, in sales, in customer care, you see these kind of use cases really starting to take off.
Around AI, of course, the conversation has now moved towards agentic AI and what that could potentially mean. Many believe that that is a game changer for many sectors. I know you are a firm believer of that as well.
I am, because I think that's when we can start to go from very simple tasks that needs to be automated. That's of course the first step. And when you can start to connect it in workflows, agents talking to each other, creating bigger solutions, that's really where the big change comes. But I think it also has a big impact on the digital infrastructure itself. So Ericsson builds mobile network infrastructure around the world. 50% of the world traffic outside of China passes through networks that we deliver. So of course it matters a lot in terms of where that AI traffic will go. Will it only be downlink traffic from an AI agent down to a device or glasses, AI glasses, or will it perhaps be more in the other direction? You're sending from the sensors, you're sending from the AI glasses up to the cloud. And that changes traffic patterns, it changes how we need to dimension and build networks. So AI has a huge impact on networks, and especially agentic AI, because then you have chattiness between many agents. Think of a workflow that can consist of tens, if not hundreds of different agents talking to each other. So it becomes more like a fabric, a mesh of communication. I call it the intelligent fabric because of course it needs to know about the traffic. Not all traffic is created equal. But that is actually where we're going now with 5G today, standalone 5G, and then of course an upgrade with AI nativeness going forward.
You know, we're talking about 5G, but the move to 6G, and India is at the forefront of attempting that transition. Before I talk to you about India, the move from 5G to 6G and what that's going to mean in an AI era.
Well, Today, as I said, we are already building AI into networks, embedded AI, creating better user experience all the way up to customer care and so forth. And that means that AI-powered 5G is really what will be the opportunity for our customers when it comes to the AI transition in society. So you don't need to wait for 6G. And I think here India has a fantastic starting point. One of the absolutely best and biggest networks is rolled out in India. So of course, once you have that better network for AI, you can start to create new services for society, AI-based services. And of course, you can create much better networks themselves. So I think the journey towards the future, 6G, it really starts with 5G standalone today, AI-powered 5G to get all these benefits, and then you have a relatively smooth upgrade then to AI-native 6G. So it really comes as a stepwise journey.
Well, let's talk about India. And Ericsson has been a long committed believer in the India story and a partner with many telcos who are operating in India, the likes of Bharti Airtel and others. You know, how has the journey been so far for you? But more importantly, as we see the pace of growth accelerate, what will it mean for Ericsson's India plans?
You're right. We've been supporting India for a very long time, more than 100 years, and this is for us the second biggest market in the world. And of course, just being a part of building out 5G with record speed, which happened a few years ago, that was a fantastic journey for us and of course our customers. So it's powering more or less all of India now with 5G. I think it's exciting to also look at how it's growing over the coming 5 years. So we are seeing that in perhaps less than 5 years, there will be 1 billion 5G connections in India. So it's growing very fast, and that would mean that some 79–80% or so will be connected with 5G in the relatively near future. So of course it's a big upgrade of the networks, continues to be an upgrade because you need coverage everywhere, you need better capacity, the better uplink, all the things that I mentioned. So for us it's really important to be working in India, but it's also very much to work in the Indian ecosystem with our customers, as you mentioned, the biggest customers in India and in the world. That gives us a lot of learnings. We can build better products, serve our customers even better, but it also allows us to connect to the booming ecosystem when it comes to new startups. All the way from universities actually, leveraging that better network, creating new AI applications typically, could be smart manufacturing, smart transportation, in retail, but it also moves the value and what we are doing in India up the stack, because as I mentioned, you will need a better network for AI, but you also need to program the network to be able to actually get that better network. So network programmability, network APIs, how to create a software layer on top of the network that all enterprises can enjoy. That is things that we are really pioneering and driving in India. So working very close with the Indian ecosystem is key. Also working with the Indian government. I think that's hugely important moving towards 6G. I think Bharat 6G and the efforts from the government to pave the way to 6G, we're very much part of that together with our partners and customers. So I think India has set itself up for a very strong journey to 6G by having the best, strongest 5G network today, upgrading with AI to AI-powered 5G, and then to 6G. I think that vision and that plan, I think, is really solid in India.
You know, Bharat 6G, as you talked about, and you said that you are working with the Indian government. What could that mean from a global standpoint as well as India embarks on this new milestone?
In short, I think it means that India will be at the forefront in this transition. I will not, of course, decide any plans for deploying in India, nor the government policies. But what I hear and what we are engaging with is a very forward-leaning government, a very forward-leaning industry that wants to use the latest technologies. Because, of course, it gives a better performance, cost of running it, so TCO is better, but also you can start to address new use cases, new businesses. And I think that's really what the industry needs. The industry doesn't need to hunker down and look at what was good in the last years. The industry needs to look forward and, of course, embrace AI as the opportunity to grow the business. And there I think India can really take a lead and be at the forefront.
Well, speaking about growing the business, you're going to be in Bangalore visiting your facility there, in a couple of days from now, right after Davos?
Yes, I'm heading down.
How important is India from an R&D perspective, from an innovation perspective for Ericsson?
So we've served India for a very long time, as I mentioned. We have our biggest employee base, more than 24,000 employees in India. So, of course, R&D is a big part of that. And working with universities, leading universities, working with our own talent pool and really leveraging everything. And it's software, it's hardware, ASIC development we have in India, and of course it's connected all the way to manufacturing. So I think being part of all the chains in R&D all the way to production is where we see India has capabilities. Now our own capabilities, as I said, very strong. So we started many years ago some of our most advanced AI work in India. That global AI accelerator has helped the company to move into the AI age faster, I believe, than competition. And then, as I said, R&D goes across hardware, including ASIC development, software, AI development, all the way into how you run and manage network in the most efficient way. Much of that very much out of India.
So what could we expect in 2026? Any significant breakthrough on the AI front that you're working towards?
Yeah, I don't know about breakthroughs because it's happening everywhere. And you were talking about agentic AI, and that is of course
pulling out
very
something
true.
Cool and exciting.
Yeah, but it's also about physical AI, and it's very much about AI glasses. So I think in 26 we will see many more of these kind of AI glasses, and there are plenty of brands now around the corner. And connecting them to the network and making sure that users can actually use them with good performance, whether they're out and about, whether they're indoor. I think that's going to be a game changer.
So how often do you wear these?
So currently I wear them personally for leisure. I get the navigation services, and that's quite cool. You can get the translation services. You can even use them to do a teleprompted, very natural interview.
I did use them here in Davos. I've been shooting on the promenade wearing them. So yes, I do agree. They open up a whole new window of opportunity.
Why would you go back to stupid and non-intelligent glasses if you anyway have to wear glasses?
Yes,
it doesn't make sense. And of course, wearables, earbuds, all of this. I think it's going to change people's lives. Certainly, it comes with a responsibility, security, trust, having a trusted infrastructure, having a trusted network, also working with security end-to-end, hugely important. But I think we're working through those together as an open society, making sure that it actually is compliant. And I think that's really the game changer.
Well,
and this was with 5G, as you know. So.
Yes, all on 5G. Eric, always a pleasure. Many thanks for joining us on CNBC TV 18. We look forward to seeing you in India. Good luck with your plans in Bangalore. And we hope to hear more from Ericsson about your India deployment as time progresses. But that's the global CTO of Ericsson giving us a quick glimpse of what the future holds for the company. Joining us now to talk about Uber's plans globally, but more importantly, their plans to double down on India. Andrew, many thanks for joining us here on CNBC TV 18. It's great to have you.
Happy to be here, and happy to hear transportation logistics continue to be complex.
They are complex, but even in a complex world, numbers are holding up for you. You've had a good year, 50 billion in annual revenue, EBITDA grew over 30%, 9 billion in cash. So the business is looking strong.
Yeah, I mean, Uber's as strong as ever. We feel really great. Our consumers are really strong. The growth of our driver and courier base continues to surprise even our own internal estimates. We're seeing like global strength, I would say, in the sense that it's not just a U.S. story, it's not just an international story. We're seeing both its strength in the U.S. and international. And of course, our business in India is doing great.
Well, let's talk a little bit about your business in India. It is, of course, one of your key markets, not just from a logistics point of view and a mobility point of view, but also from a technology perspective. Lay out for me what the year ahead for India for Uber will look like.
So you're right. From a technology perspective, I mean, first off, I'd say we have tremendous talent in India. The Uber team in India is great. It's our largest engineering center outside the Bay Area, and we're continuing to grow the center. We're doing a lot of our new AI work out of our India teams. So we've got a program called Uber AI Solutions, which is really participating almost as a human in the loop in AI development, and that's being innovated out of India.
And for Uber globally?
For Uber globally. Clients all over the world. Most of the team is in India that's building that offering. But it's super compelling, it's new, it's interesting. We're participating in government technology schemes like ONDC, which I think is a really interesting approach to try to grow marketplace businesses across a number of sectors. And a lot of our global products actually debut in India. India is a tremendously competitive environment. Competition brings the best out of us, and we're seeing a lot of awesome stuff.
Has the competitive intensity increased, or is it status quo there?
India's always been competitively intense. It's not a question of growth for us in India. It's, how sustainable is that growth? And what I give credit to the ecosystem for is there's new players that pop up. They innovate, they bring new business models, they bring lower cost products, which I think are popular with Indian consumers. So it's as intense as ever, but I think we're faring well in that competition. And again, a lot of what we're learning in India is making its way into our 75 countries around the world, and that's a good thing.
What's been the biggest learning from India that you're taking to the world?
I think your ability to continue to innovate on the consumer experience while being mindful of price is really, really critical. I mean, we're a marketplace business at the end of the day. We're trying to meet the needs of both the drivers and couriers who earn money on our platform and consumers who depend on us for services. And actually that balancing act is challenging. And in India, I think it's probably the hardest market for that balancing act, and it's made us better on both fronts.
You have now restarted M&A. Is India likely to see some action on that front for you?
I never love speculating on M&A. I think there's lots of interesting technology companies in India that, of course, we'll take a look at. And for us, we've been doing deals that make sense for our customers, that make sense for our platform. Uber's increasingly becoming a daily use case. And so if we can plug more modes of moving or give you more access to local selection in your city, then we're going to do that either organically or through M&A.
Well, you talked about how Uber wants to position itself as a daily use service. What will that mean in India? You exited the Uber Eats business, but you're now re-entering that space via ONDC. Take me through the new bets and the new avenues that you hope to double down on in India.
Well, we've got a tremendous driver base in India, right? And we've got drivers who use cars as their vehicles, three-wheelers or two-wheelers, and increasingly that sort of two- and three-wheeler section of the market is also doing deliveries. And so our ability to actually give our drivers more opportunity to either do consumer-to-consumer package delivery or fulfill for retailers, I think that's interesting in India. So no plans to re-enter the food delivery market, but I do think you'll see us experimenting and growing some segments that sort of further complement our offerings.
What would make most sense within that basket that you're looking at, the adjacencies that you would consider?
Well, look, on the transportation side, I think there's a real opportunity for us to just make mobility as a service a real thing in India. So, we see tremendous growth in our business, always at airports. That's a natural use case for Uber. That's one people think of top of mind. But we're also incredibly integrated in the train system. We see first and last mile trips to and from train stations. And so one of the things we'd like to do is give consumers the ability to book an end-to-end journey. So buy your train ticket through Uber, take your Uber trip to the station, and then take it on the other end. That's something that we're experimenting with. We're using ONDC as part of that effort, and I think it's really interesting, and you'll see us do more.
Well, this transition from not just a ride-hailing platform to becoming a daily use service, where do you find yourself on that journey, on that arc globally today?
It depends a little bit by market. And look, what I'll say is where the consumer need is greatest is where we see the highest engagement. So in places where maybe the public transit infrastructure isn't as good or isn't as safe as places with lower levels of individual car ownership, in these places, this is where we see people truly think of Uber for their daily journeys. Every time they leave the house, they think of Uber. That's critical for us. So I think, there's an opportunity in markets, and I often hear when folks talk about India, they talk about, let's skip to the next generation of technology. I think there's an opportunity for a lot of Indian consumers to skip to mobility as a service, as opposed to needing to own 2 cars in their household or something like that.
One of the interesting things that we've been, of course, talking about in India is the rise of the gig economy, and Uber has been a part of that as well. There are, of course, regulatory headwinds. There are changes that have come in. There's a gig work framework. I mean, have you looked at those changes and what that could potentially mean?
So for us, one of the ways you can think about Uber is the largest platform for work in the world, and people choose Uber for flexible work. Anytime you talk to a driver, whether that's in India or any other country we operate in, generally the first thing they're going to tell you is they love the flexibility of Uber. And of course, the next thing they're going to say is dependable earnings also matter. And then the third thing they're going to say is, I also need some level of benefits and protections. And gig work is a really important part of the economy. I think it's growing the economy. But one of the things we've been doing is bringing the benefits and protections, and this is true all over the world, to gig work. And so we're open to doing that in India. I think it's an important conversation. We've had a really good labor environment in India, and I think it will continue to be so.
I want to talk a little bit about AI. I also want to talk about autonomous cars. Your partnership with Waymo, are we likely to see more collaborations, more partnerships in the future?
Yeah, I mean, Uber's explicit strategy is to be the destination for AVs all over the world and from all providers. And so whether you're an automotive OEM that's building the hardware platform for vehicles, whether you're an L4 software player, whether you're a fleet that actually buys AVs, we want you to put those AVs on Uber, and you're going to get the best utilization, and we can bring them to new consumers in our hybrid network alongside human drivers. We think that's the best go-to-market path for AVs. We're going to continue to execute that strategy, and that means you're going to continue to see us announce more partnerships. We've got 24 AV partners around the world. We're continuing to add to that number. We've got 4 deployments live with AVs. We're going to continue to add to that number. So it's a really exciting path for us.
But anywhere close to an inflection point as far as adoption is concerned, at scale?
I think we're certainly at an inflection point in the technology. I mean, the technology problem is largely solved, and now it's about building a business model around that technology, and it's about scale. And so the technology inflection point has happened, and now you're going to see scaling start to happen, and that will happen over the next couple of years.
So what do you see as the key constraints today for the business? What do you see as the chief risks for the business today?
I mean, we have a large number of challenges. We are a big global platform, as you say. Our revenue is growing, our cash is growing, but we continue to just be interested in bringing more consumers into Uber, innovating and adding new products that people will use, and continuing to grow the top of the business. So that's the biggest challenge for me.
New modes of transportation, give us a sense of what we can expect for India.
Trains on Uber, I think more access to two-wheelers on Uber, I think better premium products and innovating at the luxury end of the market. These are going to be some things that come.
Well, we look forward to hearing more from you, and we look forward to you unveiling those plans in India. Andrew, it's been a pleasure. Thanks very much for joining us in Davos. Welcome back. You're watching our continuous coverage here at Davos 2026 from the World Economic Forum. India's startup ecosystem, of course, has had a big year in 2025 with a slew of IPOs hitting the markets. 2026 promises to be equally exciting. This is one of the bright spots that people are looking at and talking about here in Davos. And who better to talk to me about what the outlook is than Process's Fabrizio. Fabrizio, thanks so much for joining us once again in Davos. You're better prepared this time around. Your gloves are on, the jacket is here.
Big pleasure to be here with you again. Ready for the Davos cold.
Ready for Davos.
Hope next time we are going to meet in India, much warmer.
But ready for India in 2026?
Very ready for India. I think 2025 was a great year for Prosus in India. We are really invested there. We are creating our ecosystem strongly. First, I really believe in the country. India is growing very fast, 7.5%. India is the fourth biggest economy. And I believe India is using technology as very few countries are with the identification and payments initiatives. And I think it's just getting started. I think India will have 10 years of growth, and we work to make Prosus one of the companies that are going to help push and invest to have this growth in India.
But 2025, there were many milestones, but the ones that stand out for you, for Prosus specifically in India?
In 2025, we made many IPOs of Prosus-related companies. There are many things. For example, last year we were talking about Payu. Payu is growing fast and is profitable now. So we think Payu is the best positioned payment company in India. We are very happy about that. We did many IPOs, and a few highlights, for example, is Mishu. We love Mishu. It is a great IPO. And we think Mishu story is just starting. We have Urban Company. We had a few other IPOs. The ecosystem thesis, that's what I talked to you last time. It's really starting to work in India. So our companies are working together. Payu is supporting other companies like Swiggy and Mishu. We have new companies in the ecosystem. For example, Rapido. I don't know how close you are following, but Rapido is growing very fast. And we just get an approval now to grow to more than 20% in our participation in Rapido. Rapido is growing more than 100% per year. We now have Ixigo, another company growing a lot. And the most important about Prosus is it's not only about investments, it's about the ecosystem and how we can help those companies through international knowledge and through AI and technology. And we are working together to that. Very excited to the next step.
So what is today the quantum of how much Prosus is invested in India, and how much are we likely to see you further invest in India?
We have around $10 billion in India, but I really think we just get started there. I really believe we can get to $50 billion in India. That's what is our clear goal. For the next 4 years, we are going to be...
By the next 4 years, $50 billion you want to invest in India?
Not invest, to have companies...
Have companies.
Exactly, value 50... Yeah, if the highlight I'm going to invest in...
I was like, that is the biggest headline.
No, not to invest. Actually, my biggest thing today now, we have investment capacity in India, but we have many companies, and what we really can help is to help the companies grow faster through the ecosystem. That's what we're really doing today. For example, in AI, just give you one example. Actually, for Prosus, now we're in a moment of delivery. We did lots of investment in the last 1 year, not only in India, but also in Europe and Latin America. And we believe that AI is going to change everything. People are waiting for the next AI disruption. We don't need to wait for the next AI disruption. What we have today through agentic companies, and every time more life assistants, it's enough to change the world. And what we are doing is investing more in this technology. For example, we created an AI house in Amsterdam, and we expanded a lot our AI lab in Europe. My goal is to do that in India this year. So I really expect us to work closer in technology and R&D in India, because the opportunity is amazing.
So you will focus on investing in companies that are AI native in India?
AI native or can leverage AI or our ecosystems. Because look, everyone's going to be AI first in 3 or 4 years. AI is going to change how everything works. So we are working together, including with...
You're not worried about valuations?
I think we are going to build our value because we are much more than an investor. We are a company that helps our companies to grow faster. So when we invest in a company, it's not only about the money. It's we can help them grow faster because of the connections with the companies we own. Payu or Swiggy or Mishu or Rapido, and I think this creates a lot of value. But look, valuation today, it is a challenge. Many companies are overvalued, but I want to reinforce to everyone, don't think that AI is a bubble because a few companies are overvalued. AI, over 10 years, is going to change how everything works. I will put more money in Europe, but I want to reinforce India is a big bet for us too.
So what will that mean in terms of incremental investments into India in 2026?
I don't have a number today to share you. However, I want to say that we are working together with the government for the AI summit in mid-February. I think the government of India, I had the pleasure to meet Prime Minister Modi I think 1 month ago during G20. And it was great to see the government committed to, we want to make India a leader in technology, innovation in AI. So we are working together on the AI summit in what we call AI for All, an initiative to define how India can use AI to growth, to create jobs. So expect us to be there in the summit. Hope to see you there.
Yes, absolutely. Look forward to that.
And I expect to announce more investments in terms of AI labs, innovation, and more initiatives on AI in India during the AI summit.
And 2026 IPOs?
I think there is a few more IPOs ahead. No one to announce today, but we have a few more ahead. But I think the big thing is we did around 5 IPOs in the last 1 year. There is a few more ahead, but the big thing is our ecosystem is working in India. Our innovation is working in India. So the level of growth of those companies in India that we expect a lot of growth, a lot of opportunities.
But what about the profitability question? And you brought up companies like Swiggy and Meesho, and while we have seen a rapid expansion, we've seen revenue growth, there is still question mark on sustainable profit growth as well as the fact that they're continuing to need cash. I mean, Swiggy raising money even after IPOing. The profitability question.
Very good question, because you asked about that last year. And 1 year later, I have good news to tell you. For example, PayU is profitable now. And when we talked last year, I told you PayU will be profitable because we are confident this is a good business there. But also, Swiggy, in their core business, that is food delivery, they are profitable and they improved a lot their numbers over the last year. Swiggy is investing more money in the new business of quick commerce, and that's why we are raising more money now. But I want to remind you, quick commerce is a business that we are investing for maybe 2 or 3 years, where food delivery for many more years, maybe 10 years. So food delivery is mature. Quick commerce in some of other companies are already mature, some of our competitors, and we will get there for sure. So we are not investing in the bubble. We are going to have profitable and good companies.
But how do you see the regulatory pushback from the government as far as quick commerce is concerned, now saying you cannot advertise or don't advertise quick commerce and 10-minute deliveries and so on and so forth? Do you think that that is going to have any impact on the business model per se?
I am confident that quick commerce is doing well in India compared to most of the world. There were some excess in terms of investing. We had a lot of competition there and lots of investments. I think this is the government made a decision to adjust a little the business. I think things are going to keep working. And my expectation of quick commerce is a more balanced, how can I say, execution for other companies, what are going to contribute to more to reduce the level of losses. So I think this is better for the drivers, and I think the companies are going to do well.
So 2026, India will be the most preferred market?
I love India. I have 3 most preferred markets, India, Europe, and Latin America. So I'm not going to say today what is the most preferred child. However, India to me, it's amazing. I love the grit, the speed of the Indian companies. So if you compare India to Europe and Latin America, it's amazing to see how the Indian companies are growing fast with a lot of grit. Therefore, I think Prosus can help a lot, and we will keep helping. We will keep our connection, and I hope to have lots of good initiatives to talk this year.
And more announcements in February.
Announcements. For example, we invested in a company called Convergent. I hope that is vibe code in India. That is growing super fast. This is amazing. We have to have disruptive AI companies in India. We are preparing now to train our language models in India inside the group to announce soon more AI labs in India with Prosus support. So 2026.
How large will these AI labs be? It will be one or multiple AI labs?
It's one AI lab from Prosus, but We want you to have more R&D in India
Right.
because the opportunity is so big. That's our vision, to have local knowledge
So
in
tell
India.
me a little bit more about this AI lab that you intend to set up in India.
I look forward for that in the event, so don't miss our AI summit in February.
All right.
I will look for you.
So you're keeping the suspense going. You will have to come back to us in February when we speak to Fabrizio next to get more insights on the AI lab that they intend to set up in India. Fabrizio, always a pleasure. Many thanks for joining us here on CNBC TV 18, and we look forward to seeing you at the Impact Summit.
Pleasure.
We will take a break. The conversations will continue. Don't go anywhere. We're back with plenty more from Davos 2026. Stay tuned to CNBC TV 18, your Davos headquarters. Our coverage continues here from Davos 2026 at the World Economic Forum's annual meeting. As we've been reporting, a lot of the conversations here center around AI, whether we are now starting to see deployment at scale, and of course the big question, ROI. To help understand what Freshworks' strategy is, joining me now is the CEO. Dennis, many thanks for joining us here on CNBC TV 18. Let's start with that. Predominantly AI focused. If you're not talking Trump, you're talking AI.
That's right.
So I want to understand from you what you're doing differently in this now very, very competitive space.
Well, look, the way work is happening is changing for all of our 75,000 customers today. The way work is going to happen in 5 years will be very different. The AI that we provide allows customer support and IT teams to get their work done much faster, allows our customers to grow faster, more efficiently, and what's distinct about us is the products are very easy to use, get up and running, fast time to value. That's how we compete with much bigger companies.
And the conversation has also moved towards agents, and many believe that this could be the next wave as far as the AI implementation is concerned. You've got Freddie, so take us through what the deployment has been of that. What's the offtake?
So we have over 6,000 customers paying us for AI. We launched an agentic suite, so a set of pre-built agents for 4 different industries back in November. We've had amazing uptick of those products. We find our customers are deflecting 50-60% of their inbound questions through AI, and that the AI leads to higher customer satisfaction than human involvement. So the humans are freed up to do deal with harder questions, do higher value work. We have some customers that have taken those same agents and turned them into revenue generating sellers. So it's really interesting to see how all these different customers are using AI to build their business.
You know, when we talk about AI and we talk about agents as well, what does it eventually mean for business outcomes for Freshworks? You know, your losses have narrowed considerably, but both in terms of profitability as well as revenue growth, what's the outlook?
So we have over 70 deployments internally of AI tools. Some are third parties, some are our own. Our customer support teams use our own products to handle the inbound questions from 75,000 customers. We use AI to handle our employees' questions. We use AI for recruiting. We get 10,000 resumes a week because we're hiring across the world, and we use AI to identify the right candidates and focus our teams on the right people. So AI has completely transformed how we do business. That's helped us drive to profitability. It's helped us grow our revenue faster. And it's really just beginning. If we think about where business is going to be in 5 years, a lot of work is going to be handled by these AI agents. That's what's so exciting about it.
And I want to talk about how you differentiate yourself against the big boys, especially as you make this pivot to cater to larger enterprises. Yes. So far, the focus has been on SMBs, but you're pivoting now to larger enterprises. So how do you take on the sales forces of the world?
So we have big customers already today. So Tata Consumer uses us to interact with literally millions of consumers in India. Mahindra uses us as well. And our product has been built fresh, much more recently than the big guys who've been around a long time. And we've built it so it's fast to get up and running. You don't need to take months, which is typical in a big enterprise software deployment, to get the software to actually create value. It also requires fewer people to keep up and running, and it's easier to train the users on the product, so they use it much easier, much faster. So all those things have given us an advantage as we're moving into larger and larger accounts.
How many large accounts do you have now?
Well, most of our growth is coming from larger accounts. We have over 75,000 businesses globally. I would say about 10,000 of those are in what we would call the mid-market and enterprise. Companies with from 500 to 20,000 employees, around $1 billion in revenue. Companies like New Balance shoes, like all around the world are using our products.
So that $1 billion target that you're working towards, how much of that will be driven by additional clients in this large space?
Well, our larger accounts today account for about 50% of our revenue overall. We see that continuing to grow as our product matures, as we're able to handle larger and larger opportunities. And we're seeing a real need. Companies are fed up with complicated software that takes a lot of time to get up and running and doesn't do what it promises. That's the problem that we solve.
What is the biggest constraint that you're faced with today?
A lot of it is just, getting the team to grow the business, getting the word out, making sure that people, our customers understand, our prospects understand how we've evolved as a company and the solutions that we offer, getting people comfortable with AI. We have 75,000 customers, 6,000 are using AI today. So we have a long way to go to educate our customers about how AI can benefit their business. And that's one of the big themes here at Davos. People are talking about AI can't just be an experiment anymore. It has to be how you run your business, how you change your business. And we have a role in educating our customers and making sure that happens.
Many companies are starting to report AI revenue lines independently and separately. If I would ask you, A, what is the opportunity that you're going after, and what is the current AI-related revenue for you?
Yeah, so our direct AI-related revenue in Q3 was $20 million US. Now that's from a business that started pretty much from scratch 18 months ago. We have set out a goal in the next 3 years that should be easily a $100 million business for us, which is a meaningful percentage of our overall revenue, and we see that just growing dramatically over the next couple of years. We're still very much in the early innings of AI adoption among our customers, and the products are getting better and better all the time.
I think it was Cantor Fitzgerald that said you could potentially be a takeover target. Have you been made offers? Anyone come calling?
So look, we've done a great job of creating a business that's high growth and is driving towards profitability. We've expanded our cash flow margins. Now we're about, I think, 26% in the last quarter, Q3, that we've reported. And we continue to see profitable growth for years to come. So my job is to drive the business and grow the business and make it into a great lasting enterprise.
But have offers come your way?
Well, we obviously would not talk about that. We've acquired a number of companies. Yeah. We recently acquired a company called Fire Hydrant that extends our ability to compete in the IT space space. We acquired a company a year ago called Device 42 that also is really helping us move up market in the IT space, and I could see us acquiring more and more companies over time. We've got $800 million in cash on the balance sheet to buy.
Yeah, so more bolt-on acquisitions?
Well, we're always looking. I'm particularly interested in finding companies in India. So there's a lot of talent. There's a lot of AI talent in particular. All of our engineering teams are in India, so integrating that kind of a company into us will be easier than a US-based company. So I'm excited about finding the next kind of add-on to Freshworks.
And are you likely to add on in 2026?
Well, look, we're always looking for good teams to join us, for good products. So of course we'll keep our eyes open.
Well, it's also a new chapter with Girish moving on to a different role now, and what has that meant in terms of transition for the company?
So Girish is an amazing founder, amazing leader. He's been a great mentor to me. He resigned from the board in December. He's focused full-time on the Together Fund, which is focused on investing in Indian entrepreneurs, particularly around AI. And I think it's going to be a huge success for him. I know he's really excited about it.
I know that you have your earnings coming out on the 10th of February, so you're constrained to talk numbers, but leave me with more of a medium-term outlook on where you believe the company could be.
So we set out a goal in September that we would reach around 1.3 billion in revenue in the next 3 years, and we see our business continuing to grow profitably over that period of time. Our focus is that mid-market enterprise. So mid-market companies around the world constitute about 40% of all employment. So it's a really important sector. And the big enterprise companies typically haven't focused there. They're focused on much bigger organizations. But a mid-sized company needs AI too. They need to be able to scale and compete with bigger companies. So that's our opportunity. I think we have a lot of growth ahead of us, focusing on that segment.
Well, Dennis, we wish you the very best of luck. Thanks very much for taking time out and speaking to us here in Davos. Have a good rest of the week, and look forward to seeing you in India.
Thank you very much.
Well, that is the story for Freshworks. Right here from Davos, the coverage will continue from the World Economic Forum's annual summit. Remember, this is our final day. We're going to be wrapping things up here from Davos. But for now, I hand it back to you. Welcome back. The conversations continue here at Davos 2026. Joining me now is the Chief Minister of Maharashtra, Mr. Devendra Fadnavis. Maharashtra, of course, has been making its presence felt here on the Davos promenade for the last few years, and Mr. Fadnavis has become quite the regular here. Thank you very much for joining us here in Davos. What's the Davos headline that you're going to start with?
So I would say that Davos has been very good for Maharashtra. Especially, there are several announcements, but I will name 2-3 announcements. Yesterday, we announced Innovation City in Mumbai.
Okay.
So in our last Davos visit, the theme was innovation and AI. And it stuck to my mind that we need to create an innovation ecosystem in Maharashtra, because now if we have to leapfrog, we'll reach 5 trillion economy, Maharashtra may reach $1 trillion economy. Now to leapfrog, we need to have innovation ecosystem. And then I discussed it with Mr. N. Chandrasekharan of Tata Sons.
Yeah.
And he was kind enough to steer the entire thing. And he sent his team world over to see all the knowledge cities and innovation cities. And after working for 1 year, yesterday before 450 strong international audience,
okay,
we have announced innovation city, which will be situated 15 to 20 minutes from the new Mumbai airport.
Okay.
And this will be India's innovation ecosystem for the world.
Okay.
So this is one announcement which is going to absolutely revolutionize the innovation ecosystem.
But tell me what that means, sir. What are we going to see being set up in that city?
So see, today we know that the innovators need plug and play entire ecosystem. That ecosystem we are going to do. So yesterday only they have announced data centers and certain other stuff worth $11 billion there.
Okay.
At that place. So whatever is required, we have seen all the world innovation cities and knowledge cities, and a combine of that you'll find in the Mumbai's
$7 billion in terms of investments for data centers. Will that come from the Tatas or from the Tatas?
Tata. So Tata's first announced it, and then the international community is also coming forward. So I may not name them now because yesterday only I have 4 or 5 meetings, and it has created a buzz. And people from international community want to come there, want to look at their innovation centers there. So I think it's going to be...
But what will be the differentiator, Mr. Fadnavis? And I'll ask you this in the context of what other states are also saying here in Davos and their plans. We've got Telangana, we've got Andhra Pradesh, also talking about setting up innovation cities, innovation hubs, AI innovation hubs in specific. What will be the differentiator for this?
See, the innovation hub and an innovation city is a little different. Innovation hub is a sort of, you can say, small standalone type of a hub.
Okay.
But innovation city is something where you host, different innovators. So several AI and innovation hubs can be seen in this city. Okay. That is the main difference. Second difference is, I respect all these states. They are doing very well. I'm very happy about them. But ultimately, the real ecosystem lies in Mumbai. One must understand. And this ecosystem, if we capitalize, I think we are going to change the space of innovation. Again, since we are short of time, one more announcement I must tell you, which is very important. We also announced a new smart city near New Mumbai Airport. It is a Raigad Paint Smart City. It will be a new business district which we are creating. So the BKC is our business district. A BKC-like business district in 250 acres we have announced. The land is identified, all the permissions are taken, and we opened it for the investors. And I'm very happy to tell you that investors from USA, from Singapore, from Australia, from UAE, from Netherlands, they have already signed MOU here with us, and they are investing more than 1 lakh crores in this smart city, which is a new business district.
When will this be operationalized?
So, excuse me for this.
It's -7 degrees. We're all excused. You have no idea. You have no idea how cold it is here. And we said, my apologies for making you brave -7 degrees. It is an open studio, by the way.
I must tell you that it is at the verge of, starting, because The land is identified. It's a joint venture between a private player and MMRDA, which is state-owned company. This company now has land. We have taken all the approvals.
Okay.
So approvals are there because normally environmental clearances take time. So now it is ready for investment.
Ready for investment.
Yes.
You know, you talked about environmental clearances, and a comment here that Geeta Gopinath made has struck a chord. And she said, you know, the impact of pollution is higher than the impact of tariffs in India. And it's not just Delhi, it's large parts of the country, and including Mumbai, that are suffering. In fact, they've seen court intervention in both cities, in Delhi as well as in Mumbai. How do you address that issue?
I think that is the area of concern. And yesterday, we announced a overarching circular economy for Mumbai. Now, this circular economy framework which we have announced will allow the municipal corporation and the private investors to convert waste into wealth. So this will take care of the air quality. This will take care of water quality. It will take care of electronic waste. It will take care of building waste. It will take care of medical waste. Ultimately, those who contribute to pollution, every single thing is taken care of. And we have made a framework, which we announced yesterday, in such a way that in next 5 to 7 years, we want to make Mumbai a model for circular economy.
But again, you know, in difficulty in execution, you will have to get the right partners on board. Take us through some of the details, because this is a pressing issue. It impacts the lives of consumers, of citizens. So give us what we should really.
So again, you know, overarchingly, we designed it with Tata Sons, and now it will be open for everybody. It will be spearheaded by the municipal corporation, and we have already, in last 2 years, we have already started, treating the wastewater, sewage water in Mumbai. Our STPs will be actually complete in next year. And almost 60 to 70% of sewage water, which was directly going into the rivers and canals and sea in Mumbai, will be 100% treated. 60%, 40% still we are struggling, which we'll do in next 3 to 4 years under this. So I think that several such initiatives. Now, the new technologies are enabling us to create even the electronic waste into wealth. We have already started converting, the legacy waste. Everybody knows Devnar. Devnar is very famous. Now, the entire legacy waste of Devnar will be treated. And the entire land will be reclaimed through biomining, and it will be given for housing. So this model we have already executed in Nagpur. So if you go to Nagpur and if you look at the campus of Symbiosis Nagpur and the campus of Narsi Munji Nagpur, it is on the reclaimed land where 40 years dumping happened. So this same model we are also adopting. I think we have to have a 360-degree approach in the circular economy that we have actually adopted.
You know, when you talk to foreign investors here who are looking at investing in India, are there concerns at this point in time that given the global environment and the uncertainty that there is a hesitation to make big ticket investments? Are they holding back in any way, or are they still getting on with business?
In fact, it is, I think, the other way. Because, the ecosystem and the buzz which Honorable Prime Minister has created about India, people feel that India is a very stable partner. People feel that it has a strong government, it has stable policies, it is very welcoming. So I think that there's absolutely no hesitance. I mean, see, even those countries with whom we are in little conflict about, trade.
The US.
Many countries, let's say, or certain countries we are actually under negotiation about trade. Even investors from those countries are coming big time. They're coming big time. So I think ultimately people understand that India is a very stable country. People understand it has very strong leadership, and this leadership has capacity to bring the world along. So they are very sure that investing in India is very safe.
So, again, 5 years is a long time. I'm going to get you to narrow it down for us over the next 12 months of the many things that you spoke of, also of the many things that